dropping once again?
Yeah, no, I mean, clearly too much of fluidity in the system and therefore difficult to take any kind of bets, right? I mean, that's the, I think there's nothing more than that being the sum and substance of what you think of and talk about for the next few days until this resolves.
Yeah, I mean, forget about days, things are changing in hours.
Yeah,
so how do you price that in?
You know, it's important because fundamentally nothing's really changed.
Yeah.
The exchange of missiles, etc., the strikes have been going on as is, and they are behind the scenes. I wonder if this is another negotiating tactic where you elevate a situation, you create panic. This is from the Donald Trump point of view, and then you come and say, okay, I have come and solved everything.
Very likely, if maybe that happens too, but until that comes to the fore, will the markets be on tenterhooks? The argument would be that yes, they would be. Also from an India perspective, the only thing is if the hope was that at 75, if some resolution comes in, oils come down, that may not necessarily be the case. So that's the fly in the ointment.
But yesterday's session was quite interesting.
Yep.
Oh, yesterday's session was fab. We'll get to all of that and more, but first the global setup as we start. So global fears over Iran-Israel crisis have grown as Trump says everyone must evacuate Tehran. We played out that quote plate for you, but let's pull it up again. They've said Iran should have signed the deal. I told them to sign. What a shame and waste of human life. Simply stated, Iran cannot have a nuclear weapon. I said it over and over again. Everyone should immediately evacuate Tehran. So now that is what has shaken things up. And I don't know if you guys saw that footage. I don't know if we have it of a newsreader reading the news in Tehran, and then there is a strike. There's a missile strike, and the whole studio is shaking. So I mean that's telling you the extent of how big this situation is coming through.
Yeah, and it's worrying, and I wonder. I mean, so many geopolitical posts, right, and articles. I mean, you read it on Gavikal, you read it on Clutch of other places, wherein people are saying that maybe this time around Israel might have decided they want, quote unquote, a regime change in their own words, and therefore does this stop in 1 or 2 days or does it go higher? I mean, nobody knows per se, but these are the things that are being spoken about, and if that is the case, then do we actually see an extended conflict, extended period of oil prices being higher? From an India perspective, that is what matters per se, aside of the humanitarian loss that we all mourn, of course.
Yeah.
But from an economic perspective and a market's perspective, extended period of a conflict means extended period of oil prices being higher than where they are or at current levels. And that may not necessarily be good news.
Yeah. Meanwhile, futures also showing a bit of that pain in terms of the Dow down nearly 200 points. Dow futures, actually, we're talking about, close to 200 points right now. But US markets have ended with gains in regular trade as oil cooled off. And you saw an uptick in all key US indices in regular trade. There you have it, the Dow and the Nasdaq. We should pull up the S&P 500 as well. But Nasdaq was up about 1.5%. Meanwhile, Iran, in terms of the Iran-Israel conflict, the Fed outcome also remains a key factor for US markets. These are the two things to watch this week. It's widely expected that the Fed will keep rates unchanged in its Wednesday's meet. We'll, of course, be discussing it and seeing the impact on Thursday morning. Treasury yields inched higher as strikes escalated between Iran and Israel, the 10-year at 4.43%. Oil has also inched up on fears of the conflict becoming worse. Brent is back above the $74 mark. Asian markets have seen a mixed open this morning, and you have the Nikkei in the green, but the Hang Seng in Shanghai seeing some signs of weakness. Even India is slated, as per the implied open, to open with mild downtick. Nothing dramatic there, but the implied open looking at maybe a 36-point downtick.
Absolutely. It's interesting because what panned out yesterday in trade was not what was initially indicated. A 70-point uptick was indicated. It started off weak, and we anticipated that it would be a soft day of trade, and then it turned quite dramatically over the course of that session. Look at that chart. It'll tell you exactly what I'm talking about. But let's talk about the flows data first. Foreign institutional investors once again selling, and they've been selling consistently in the near term, in the recent past. Fourth session in a row of selling by foreign institutions. Of course, that has more than been mopped up by domestic institutions to the extent of 5,781 crore rupees on a net basis they have bought yesterday. Indian equities, the tide shifted quite dramatically after that weak start, as I pointed out. The Nifty 50 reaching within touching distance of 25,000, just about 27 odd points or just about 30 odd points away from 25,000 at the high point yesterday. Heavyweights all of them, HDFC Bank, ICICI Bank, Reliance Industries, Infi, Bharti Airtel, these were the big points contributors in trade yesterday, and there were few losers in trade, among them Tata Motors, which we've spoken about in a lot of detail, which we will speak about today as well, because there are updates to tell you about. The Nifty 50 ending with gains of about 0.9%, and the broader markets also staged a pretty healthy comeback. The mid-cap index gaining about 0.8%, the small-cap index moving from negative territory to positive territory, ending with gains of about 0.5%. The market breadth also shifted as a result to equal. It was tilted very sharply in favor of the declines at the start of the session. Now, the broad-based rally was supported by most sectors, but IT was once again the bright spot. It gained about 1.6%. Interestingly now, it has gained in 8 out of the last 9 sessions, and there are a few brokerage notes that are coming through that are more positive, at least on price action. There are a few upgrades to talk about, and there are a few developments also overnight, specifically on deal wins for large IT companies. It could be in focus today as well. Nifty Bank gained about 1% from the day's low and closed with gains of about 0.75%. A couple of key movers to tell you about. Sterlite Tech was by far and away the stock of the day, if you can call it that, 20% nearly higher yesterday on a new data center solution that it has launched. And Shipping Corporation of India gained another 4%, not the biggest mover, but over the last month, it has gained 25%, Neeraj.
Yeah, I mean, you can call Sterlite Tech the stock of the day for sure, with it being up 20%. Yeah, so it was a very strong move for sure. I don't know if we have the luck of really seeing that kind of trading today, but there is not much more that I can say in the trade setup beyond what we already discussed. But okay, let's bring it up, right? I mean, because frankly speaking, if you think of trade today, right? I mean, the fact remains that it's very difficult to see trending up moves due to the Israel and Iran spat. You might see recoveries at lower levels, and 24,600, therefore a level that we spoke about yesterday, remains that key level to watch on the downside. If that gets broken, then based on technical levels, option levels, you're looking at 24,100 to 24,400 range. But 24,600 therefore remains the key level to watch out for. But even if that were to hold, it's very difficult that until this situation subsides to see some trending up moves. And yesterday, viewers, we saw IT seeing strength. I think at least 3 brokerage notes today which speak about the possibility of a recovery in the second half for IT companies. And maybe that is something that is leading to this uptick in the IT stocks. Remember, not all the mid-cap names are cheap. They are actually fairly expensive now. By mid-cap, I mean the non-Nifty names, excuse me. But there is an argument that because the sector has not done too much, and if there is spending picking up in the second half, could that actually help the sectoral sentiment? And I think the answer to that is an unequivocal yes, and which is why if you see from the March or April lows, one of the key sectors to perform is actually IT. So pretty strong showing there. Let's see if that were to continue.
Yeah, I don't know if there's a fundamental reason for IT to show this strength.
Sentiment.
That's what's mind-boggling on
right,
why the push
right.
for IT. Maybe some clear direction after the Fed policy. If rates are unchanged, if the commentary is a little bearish, then the mood might change.
Yeah, and just taking a leaf, Tamanna, out of, since we brought it up, I was looking at the 2-3 notes today, one of them being the Goldman Sachs note on KPIT, right? They're neutral, by the way, because of the valuations, as they should be. But they are saying that H2 pickup is being seen in ER&D. So I suspect that was one note. The other note said that business sentiment is picking up, Emphasis is signing a deal, somebody else is signing a deal, and all of that. So therefore, so therefore sentiment might, or an ordering activity will pick up in the second half, and that is what the hope is. Second half, FY26.
Current financial year.
Current financial year. And maybe time to look beyond the big ones. I mean, look at a Sterlite Tech, for example, that we've been talking about, that entire AI story, etc. Booming. And so maybe broaden the horizon. All right, some of the factors, and I'm just borrowing from this HSBC India note today on one interesting thing that I found. They're talking about the India strategy, and they look at discretionary consumption in India likely to get a $30 to $40 billion annual boost over the next 18 to 24 months. This will be aided by tax cuts in FY26, the 8th pay commission in FY27, and lower interest rates and inflation. So that's sort of a four-pronged situation which is coming in. They say that Q4 earnings in FY25, the traction has been better than feared, though still led to a 5% downward revision in market earnings for FY26. So watch out, I would say, for the consumption and discretionary consumption basket on a broader base. In terms of the markets, of course, as Alex said, a strong recovery was staged from Friday's intraday low of 24,473. The index has now recovered nearly 500 points. It's not only erased Friday's losses but also resumed its upward momentum. Closed at the day's high after a stable range-bound session. The index moved above its short-term moving averages, and this indicates a positive bias. The market breadth was strong, 46 out of 50 Nifty stocks closing in the green. Resistance at 25,000 because that's also a key psychological level. Watch out for 25,100. That's the next hurdle to cross, and expect a support at 24,800. So a bullish scenario would see a rally towards 25,350. Dare we hope, and that's truly bullishish. But it is probable if the Nifty successfully reclaims and sustains above the 25,000 mark. The bearish scenario is a breakdown below 24,700 or the crucial support zone of 24,400 to 24,450. This could trigger further selling. As far as the Bank Nifty is concerned, key levels to watch: resistance at 56,010, support at 55,540. In a bullish scenario, you could see a breakout above 56,000 to 56,100, with volume confirmation could lead to a move towards 56,500. This is for the Bank Nifty. 56,750, potentially 57,000. But a bearish scenario is a failure to sustain above 56,000 could lead to consolidation in the 56,000 to 55,000 range. Just on banks, what we've seen with SBI yesterday, and we discussed it as well, banks boldly going towards slashing their savings account rate shows that there is a focus to cushion margins right now.
Yep.
That could see at least some turnaround for banks. But the FNO set up now, and let's go across to Puneet for more on that.
Well, thank you so much for that. So from yesterday's low of about 24,703 odd levels, we've seen a very stellar comeback on the Nifty. It'll be interesting to see if we can maintain that kind of strong momentum today. Let's go across the board because we've seen slight dip in open interest, but largely a very positive move. Very, very close to the 25,000 mark. That'll be something to watch. In terms of Nifty Bank as well, again, a very positive move seen, but we've largely just been around between 56,000, 56,500 as one of the key levels. We've seen the move on NBFCs, gold finance companies, not so much on banks yet. So that's the reason why we've seen the maintenance of that level to be around 56,000 as one of the key support levels as well. 55,500 has been one of the levels that we've been speaking about for a while now. That remains one of the key levels again to watch out for in terms of Nifty Bank. In terms of fund flow for FIs, you've largely seen a rather like a net short position being maintained both on the index options as well as for the Nifty options as well. The long short ratio is the other one which I want to just mention because it hit a low of about 16% maybe a week ago or something. We've now seen that level being maintained at 20%, and you guys did highlight about IT. We've also seen the Citi IT analyst today increase target price on 9 of the stocks that he covers. Surendra going to be one of the very respected voices in that space. So maybe against sentiments helping that space as well, and that's leading to FIS long position largely being maintained at 20% as well. When you look at the open interest distribution both on the calls and the puts as well, we've seen 25,500 and 25,300 being one of the key levels for the calls, while 25,000 remains one of the equitable levels where we've seen both for the calls and puts having some kind of support there. So it'll be very interesting to see if we can maintain that. While on the put side, we've seen some build up across 24,600 to 24,800 across all the three levels now, and seeing that increased interest there. So maybe if we will have to see if this is just a trend forming in the short term or across this period, we'll be maintaining that as well. Finally, in terms of both stocks, in terms of open interest gainers and losers, seeing some long build up. Finally, on something like Keynes Tech, we've seen a consistent short build up over the last week on Keynes Tech. Maybe that is reversing now in terms of FI positions, while something like a Biocon is also seeing long build up. We've also put out that the QIP of 4,500, a huge one for the company, something to watch out for on that aspect. Finally, in terms of open interest losers as well, we've seen some short coverings across stocks like IGL, Asian Paints seeing some as well as Birlasoft. We saw that big mine as well as the notification coming from the company, very positive as well. So overall, largely maintaining that view, the GIFT Nifty indicating some fall of about 39 points, but largely maintaining 24,900 will be one of the key ones to watch out for today.
Okay, thank you for that, Puneet. Let's start with stocks this morning, and I think this is something that Puneet has been tracking closely as well. But Tata Motors, so the investor presentation was skew enough that there is problem. That's why you saw a 4% drop in, nearly 3.5% drop in Tata Motors yesterday, and then you had the analyst call. So it's a thumbs down on Tata Motors because of what's come out of the analyst call underlying what the investor presentation said. This is on JLR specifically, but of course impact for Tata Motors. Revenue to decrease from 29 billion pounds in FY25 to 28 billion in FY26 estimate. That's for JLR. EBIT margin to contract from 8.5 in FY25 to 5 to 7% in FY26. This is the pain point, that you're going to see this squeeze in margins. Lower margins and higher working capital needs should drag free cash flow from $1.5 billion to close to zero in FY26. Investment target of 18 billion pounds over 5 years is unchanged, focused on cost savings with target of 1.4 billion pounds per year to be visible from the second half of FY26. Now, clearly, a lot of notes out this morning and not all of them excited. Jefferies has maintained an underperform. They've cut the target price for Tata Motors to 600 from 630 and cut the FY26 to 28 EPS by 12 to 19%, mainly lowering JLR margins to 6 to 6.5 in FY26 to 28. They say we recognize Tata's focus on improving franchise across India, and JLR remain concerned about multiple headwinds across businesses. India's CV demand has also slowed down and competition is rising in electric PVs. JLR is also likely to face a tough year amidst multiple challenges. JLR's key models are now 2 to 4 years old, is another point they make. Morgan Stanley, though, has maintained an equal weight with a target price of 715 rupees, and they are more optimistic on Tata Motors. They say, unlike past down cycles, this time JLR is much stronger on all fronts, but earnings turnaround will be gradual, and FY26 could see earning downgrades. Their EPS estimate for this financial year is 8% below consensus. They say free cash flow is key for low growth companies. So that's the first one. Biocon is a thumbs up on my list. They've launched a QIP to raise 4,500 crores to issue up to 139 million new shares, 11.6% of its current outstanding equity base. They've set a floor price at 340 rupees and 20 paise per share, which is a discount of about 5%. This is after the company has approved raising of funds by way of QIPs on 23rd April. Kotak Mahindra Capital, Goldman Sachs and BofA Securities are advising on the raise. And this is, of course, a term sheet that we have seen. Now, what are they using the funds for? To purchase outstanding optionally convertible debentures issued by their subsidiary, Biocon Biologics. They will repay outstanding debt and, of course, for general corporate purposes. The third one on my list is Tanla. Because of a buyback, and the street seems to like buybacks in recent times. The stock was down yesterday by about 1.5%. The board met on June 16 to consider a buyback. Company will spend 175 crores on the buyback via a tender offer. They plan to buy back about 20 lakh shares at 875 apiece. So this is a premium of about 34%. This will be the third buyback in 5 years. So watch out for Tanla today as well.
Yeah, absolutely. So I've got State Bank of India, a big one at the start. And of course, one might argue that the development that we saw yesterday was par for the course. The board approval came through for the fundraise, but yesterday shareholders have actually approved this $3 billion to be raised in the current financial year. And that's a pretty large amount. Of course, the context is what you need to understand. And for State Bank of India, the capital adequacy ratio stands at 14.25% as of the end of the last financial year. The common equity tier 1 capital stood at 10.81%. And remember, this is well above the regulatory requirements according to the Basel framework, but it needs to be bolstered for future growth. So usually a bank would determine that it will grow its loan book at a certain rate, and as a result of which it needs to keep a certain amount of equity. As its loan book continues to grow, it will have to raise more capital, and this is that moment for State Bank of India. Just to put things into perspective, ICICI Bank, not necessarily directly comparable, but just to give you some perspective, its capital adequacy ratio stood at 16.55% at the end of the fourth quarter of the last financial year. And that's a little ground that State Bank of India will have to make up in order to fund that future growth. Bear in mind that it has just cut its deposit rates on its savings bank account as well as its loan rates, and that is expected to spur loan growth in the near term. HCL Tech, we were talking about IT, and I've got two IT companies on my list. HCL Tech has won a new deal. This is with a European energy company, E.ON, and it is a multi-year deal to provide cloud services. That's not too much in the way of details here. The deal size is not known, but it is a large company, one of Europe's largest energy companies, and it is to set up a new private cloud as well as to provide cloud and network management. Bear in mind that, and Neeraj and Tamanna both pointed this out, sentiment has turned positive in the recent past on IT, and so deal wins would bode well for the company. HCL Tech, you saw it gain about 1.6%, and it has moved higher in the recent past as well. Emphasis, the last stock on the list, it has entered a partnership with an AI underwriting company, Sixfold, which operates both in the UK as well as in the US. And this is an interesting play because the service that is provided by Sixfold is an AI service that aids in the underwriting for insurance companies, so it makes their processes stronger. What Emphasis will do in this is that it will be the implementation partner in deals with those insurance companies, so it will help with onboarding, etc. Again, the deal size is not known, but this is a positive in the context of more deals being signed in the IT space.
Yeah, entirely could be. And on deals and on announcements yesterday, I think Z Entertainment stands out too, because they've approved the plan to raise 2,237 crore rupees from promoter entities. Now, just to put this into perspective, yes, the stock has had a bit of a rally, but the warrants have been issued at a price of 132. So not a very major discount to the current price of 137, which is part one. And the current market cap is 13,247 crores. On that base, for the promoters to put in 2,237 crores in form of warrants is not a small sum, I would reckon. And therefore, this could be interesting. Remember, it's a stock that's rallied already. So please be careful if you're purely trading this without knowledge per se. But this might be viewed as constructively by the street. So keep an eye out for Z. Belrise, however you pronounce it, that's the second stock on my list. The numbers came in yesterday, and again a stock that has rallied, but the con call highlights were interesting. They have said that they will grow in mid-teens through both organic and inorganic growth, and the growth will be driven at stable EBITDA margins going ahead. Now, this is from a business which is valued at 25 times trailing 12 months price to earning multiple. The 1 year forward or the current year price to earning multiple might be close to 20, so not very expensive. It's up 16% since listing, remember that. It's positive commentary on the con call, maybe reacts a bit. And I'm a bit confused about how Vishal Mega Mart could do going ahead. So it will probably start off lower today, viewers, because two things have happened. Promoter Kedara Capital is going to sell officially, until yesterday, was going to sell about 10% stake. Now the deal has been upsized to nearly double. So you will probably see, you will see a very large portion of equity coming out in a block deal though. So bear that in mind. This was as of yesterday. Just this morning, they have upsized the deal as well. So bear that in mind. The floor price is at 110 rupees per share, which is a 12% discount. So it's a sizable chunk coming in at 12% discount. You would suspect that the stock will start off lower, but they have upsized the deal because they know there is appetite. I'm sure of it. And therefore, you might well see the stock actually not doing as badly. The other piece to Vishal Mega Mart is that 56% of the equity is set to exit the lock-in period today. So aside of the promoter selling, there's a large degree of equity available for sale by people, FIs, DIs or retail who might want to sell as well. So bear that in mind. It's an IPO that has done well. So there might be some bit of selling from that account coming in as well. But usually 20% of equity being sold by a promoter entity, no matter how much stake they have, at a 12% discount should be considered negatively. The only thing is that they went out to sell 10% and they've upsized it, meaning that the bankers would have said that there is appetite, which might mean that the stock might find some stability.
So is it a thumbs up, thumbs down in your view?
I mean, see, usually I would believe that such a stock would react negatively to that piece of news, but just because of the upsizing part, maybe, just maybe, there is fair degree of demand, the block might get executed before 9 a.m. and you might not see too much of a damage on the tape.
Yep. And there could be an opportunity maybe for someone who wants to enter in to look at Vishal Mega Mart this morning.
Yeah.
So let's talk about another stock which was in focus yesterday. Nifty 50 stock that lost 4% in trade. Of course, it recovered just a tad bit. Tata Motors is a stock that I'm talking about, and it was reacting to an update from Jaguar Land Rover that came through in its investor presentation. This specifically related to its margin projection for the current financial year, which was brought down. Subsequent to that, they had an investor meet, or rather an analyst meet, in which there was a few more details that came through. One in which it's going to be a weaker revenue picture in the current financial year. And there are several other uncertainties as well with regard to the spend that they've penciled in. We've got to talk about this in more detail. Mrunmay Joglekar, who's auto and FMCG research analyst at Asit C. Mehta Investment Intermediaries. Mrunmay, thanks so much for taking the time to speak to us this morning. Are you looking at this with a negative lens, and are you revising your view on Tata Motors downwards? What's the initial reaction?
Yeah, so hi, good morning. Firstly, thank you for having me on your show. So to begin with, we do not assign a price target to this stock, but we do track it. But the update that has come in yesterday has definitely been negative for the company. Because JLR being the core business, or I would say rather the majority profit, majority of the profits of Tata Motors do come from JLR. So that's a key portion to track. Now this revenue and the EBIT margin guidance that the company has given has definitely been muted. So flattish revenue for a second year in row, right? Because FY25 also we have seen that the revenue performance was flattish, and next year FY26 the estimate is of a low single digit decline at 28 billion pounds. The more negative news comes in at the EBIT margin front. So in FY25 the EBIT margin was 8.5%, and the target now is in a range of 5 to 7%. Now a few key things that are impacting this are basically the tariff uncertainty coming from the US and China market, which is another key market, being muted. So if I just look back at the previous year, FY25, North America market contributed to 30% of the overall volumes, and that was the only market that has seen growth. All the other markets were either flattish or have seen YOY decline. And now this one market which was growing is now likely to be impacted because of the tariffs coming in. In the previous year, North America wholesales were to the tune of 130,000. With the new US-UK FTA, which is proposed to reduce the tariffs from the earlier proposed 25 to 10%, there's a cap of 100,000 units that can be exported using this lower tariff every year. So anyway, we are looking at a cap at the North America volumes, even if the US-UK FTA comes into play. But the other aspect of it is that the details of these FTA are still not known. So that is one overhang that will continue. On the other side, the China market, which is another key market, still continues to be under pressure. So overall, the operating environment for JLR for this year does not look very good.
Okay. In which case does this seem like, Mrunmay, does this seem like a long drawn battle for the bulls of Tata Motors? Never mind what has happened to the tape. I know you don't give price targets, but you have a view on which direction the flavor or the sentiment of the stock might be, right? Is it a long drawn battle for the bulls?
I would say at least for the next few quarters, we may not see any positive trigger.
Few quarters, few quarters could mean lead up to a year or two as well, Mrunmay.
I would say maybe at least 2 to 3 quarters, at least for this year, at least till some clarity emerges. Because if you see, issues are not just on the JLR side. even the domestic business is not very, hunky-dory, because if you see the growth on both PV and CV side, both have a, muted trajectory for this year. And Tata Motors has been losing share. So while they have targets to improve their share over the next couple of years, the journey to that might take some time.
Hi, Mrunmayee, Tamanna here, and great to speak with you. So, okay, that's the view on Tata Motors, but if I was to widen it to the PV pack, and now that it seems that this rare earth crisis might not be as bad as expected, though we've been reporting that there's 1 month inventory and there needs to be a deal cracked with China, how would you rank all the key players out there, Maruti, Hyundai, M&M, and of course the Tata Motors?
So purely from the perspective of how they have been performing in the kind of product lineup that they have, obviously M&M has been performing much ahead of the entire pack with, double-digit volume growth consistently backed by their new launches. So M&M is continued to still expected to still perform better than the pack. For Maruti, the key aspect would be, some kind of revival in the hatches segment. Exports are still doing well for Maruti, and that is one of their key growth drivers. So maybe towards the end of this year, we might see some kind of uptick to start happening for Maruti. So maybe not immediately. So H1 might still be muted, but maybe some gradual improvement from H2 onwards. For Hyundai, so recently they have commercialized their new capacity. So at least there's new capacity on board, because that was a constraint that the company was facing. But then domestic volumes wise, it is still muted. We'll have to see H2 onwards, things might start to improve again for them a little bit.
Right. All right. Thanks so much, Mrunmayee, for joining us this morning. Pleasure speaking with you, and keep all of these stocks on your radar, specifically Tata Motors. All right, we have to slip into a quick break. We've got more on the other side, starting with a conversation on Z. It's a stock that you should watch out for in trade today. Stay tuned.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100%.
All right, back with India Market Open. The implied open should come up on your screen first, and we'll probably have a tepid start and nothing different anticipated anyways, but bottom-up activity will be in focus. So first up, Z Entertainment gets a 2,237 crore boost, and this is important because the current market cap is 13,500 crores. Promoters are going to pump in funds via warrants, raising their stake to 18.39%. I spoke about it briefly. Somit is here to tell us more about this. Somit, take your time. One, the action. Two, what do you hear? What do you hear could be the implications of this action?
Yes, Zee Entertainment will remain in focus. There were a couple of board meets that the company had done yesterday. The first board meet was with the banker JP Morgan, where they discussed various growth plans and strategic initiatives, but the company has not disclosed anything on that front. So we need to wait and watch what comes out of this board meet going forward. But the second board meet that happened, and that was the important one, where the board has approved the fund infusion coming in from promoters, and promoters will be infusing close to 2,237 crore rupees at an issue price of 132 rupees, which is just at a discount of 4.5% compared to the current market price. Now Zee will receive 560 crore rupees in the first tranche, that is the 25% of the warrant subscription, while the balance 75% will come in the next 18 months, that is close to 1,677 crore rupees, and this warrant issuance will increase the promoter holding to close to 18.39% from 3.99% that was there earlier. Now what are the positives that is coming out from these announcements? First, the biggest promoter investment that has come in Zee Entertainment post the Zee Sony saga that we had seen last year. So that is one positive announcement that is coming in. Moreover, the promoter holding in the company would increase, and this would mean more skin in the game for the promoter, and low promoter holding was one of the concerns for retail investors always when it comes to Zee Entertainment. So that moves out. Also, this fund infusion will strengthen the balance sheet of the company and help stand strong against one of the major competition, that is Reliance and Disney. And this cash would also enable the company to mitigate any contingent liability that could come in going forward related to the ICC rights dispute with Jio and Hotstar. However, on the negative side, if you look at the current cash balance of Zee Entertainment, that stood at close to 2,406 crore rupees, which is nearly 18% of the market capitalization. So this clearly raises the question that whether this fundraise was necessary for the company at this point of time or not, because if you look at the cash balance that will be there post this fund infusion of 2,200 crore rupees, that will be nearly 35% of the market capitalization, and still there is no clarity of how these funds will be used by the company. So that is one overhang that could be there on Zee Entertainment. Moreover, this fund infusion will lead to EPS dilution of around 15 to 16%, so that could be taken negatively by the retail investors, and this fund infusion will moreover now the key monitorable now moreover will be to see how these funds are being utilized, and what are the growth opportunities and what are the returns that are coming out of the growth opportunities going forward. So there will be a key monitorable or a trade-off between this fund infusion and the future growth that could come in for Zee Entertainment going forward. So both sides are currently at the table. That is the positive and the negative. On the positive side is the fact that the promoter holding has increased in the company and there are funds coming in, but on the negative side we still do not know how exactly these funds will be utilized by the company, and was this fund infusion necessary at this point of time or not.
Okay, thank you for that. So Zee want to watch. I wonder if we can pull up, okay, that's a 1 month chart, about 6.5% up. Just see the 52-week as well as the last 1 week, because media stocks have been buzzing. Zee has been in focus over a year, about 15%, 16% down, but big recovery in the last 2-3 months as well. The last week or so has been 6.5% up. But why Zee could be an interesting story, because first of all, tough space. This whole conglomerate was pretty much written off by investors about 6 months ago, and it was always about who is running this. The kind of boardroom battles that Zee has seen has been fascinating.
Yeah.
Now the core promoters are coming back and saying that yes, we're in charge and we're putting faith in. Could be a turnaround story.
Yeah, I mean, and also because it's not, to my mind, it's not just optical illusion that आप 50 crore डाल रहे हो और बोल रहे हो कि चलो we are trying to do this at 130 to 133. It's a substantial sum of money that is being put in at a decent price, you know, and then saying that okay, we want to up the stake, we want to do it at a good price, etc., etc., etc. So let's see if there is other space. I mean, it's great if this. Because it's arguably amongst the cheapest stocks in the media space that you can see, right? At least profit-making media stocks that you can see around, right? From a GEC space. Can they turn it around? Could be very interesting to see.
So that last bit, I think, is perhaps the most important story, which is that this lack of confidence because of everything that has happened in the boardroom, but the company has performed Q4 profit was 188 crores. So it's not bad, right?
Yeah, huge cost cutting. They went in for huge cost cutting to boost up those numbers. So let's see if that ship turns around. Like, good question to ask Sunny Agarwal, who's joining in. Head of Fundamental Equity Research, SBI Cap Securities. We also have Kunal Rambia, Fund Manager and Trading Strategist, The Streets, with us this morning. Welcome to both of you and thank you so much for speaking with us. Sunny, let's start first with your take on what's been happening with Z and the kind of details which have come out in terms of the promoters shoring up confidence.
Yeah, good morning, everyone, and thanks for having me on the show. I think definitely a lot of confidence building measure in terms of infusing close to 2,000 crore rupees at 132 rupees in the form of warrant. So the entire GEC industry is struggling in terms of ad revenue. So last 3 years has been very lackluster, and at the same time on subscription side there is a low single digit kind of revenue growth for the entire GEC other space. But definitely this fund infusion gives a lot of confidence, at least from an investor standpoint of view, that the promoters are in the game and they are taking this business seriously and would like to take forward this business. Obviously, this fund infusion will help company to take multiple growth initiatives. So I think again, Z has got a lot of good property. If you remember during their heyday, they Z5 as well as their GEC bouquet, cinema bouquet, they are sitting on very good music as well as film library. I think maybe turnaround seems to be in place. Let us track and see how the industry as well as the market leader perform over the period of next 4 to 8 quarters.
As of now, Sunny, you would wait on the sidelines. Is that that is my interpretation of what you said? Is that true?
I think would like to wait and watch for one more quarter and see what is the growth strategy, what's the management strategies in terms of deploying this additional fund which is being infused in the company. So once that is clear and once there is a tailwind in terms of growth for the entire GC industry, then at that point of time I would like to dig into this stock.
Kunal, I'm coming to you on what you made of yesterday's trading session, what the indications are for today's session. We were bracing for consolidation and yesterday we were surprised on the upside. Does that momentum carry through? And I found it quite interesting that calls are being unwound at 25,000. The range seems to be shifting slightly higher. Does that bear out in what you're seeing?
Good morning, Alex. Thanks for having me on the show. So yes, as you rightly mentioned, in fact, Friday was a gap down open and the significant recovery was seen. In last 2 days itself, Nifty went up quite a bit from 24,450 odd levels to almost 25,000. Now this round off level being 25,000, one needs to be a little cautious whether the further momentum will pick up immediately. But the broader range on the index seems to be like 24,750 to 25,000. If the market manages to close about 25,000, then I think the doors are open till 25,250 to 25,300 in the immediate terms. But overall, the trend in the market remains positive with last 1.5 months of sideways consolidation. Buy on dip can be advisable even on index now.
Okay. And stocks this morning, Kunal?
Morning. So yeah, there are 3 interesting stocks where we have seen good volume activity happening and the prices are showing good strength. The first is Prince Pipes. Now this counter, you can see yesterday it was up by around 5.5%. Massive volumes are seen on the counter in last 15 to 20 days. So with the stop of 375, one can go long with the target of 400. Second is Adani Power. This counter again is trending but very slow. Yesterday it was near to the support level and closed near to 562 odd levels. So with the stop of 555, this counter can be taken as long position again. The target can be 585. And the third is HCC. You know, this counter has been in trend since quite a long time. Clear higher top, higher bottom is seen and the panic bottom was seen a day before yesterday. So with the stop of 31, that being the low as the stop loss, one can go long and the positional target can be 40. And in all 3 of them, trailing stop loss is advisable rather than booking the profits at target level.
Okay, stay on with us, Sunny and Kunal. Exclusive story here, and this is about a listed company called AGS Transact Technologies. Now, the company was listed about 3 years ago. at an issue price of about 175 rupees and has seen value destruction since then. But the new developments coming in is that the company continues to fail to pay its employees even after the chairman has promised a repayment plan by mid-April. There's some startling details that Agnidev Bhattacharya has. He's standing outside their office in Mumbai to bring us all of the latest developments. We believe now there are bouncers coming in to protect the top brass, Agni.
That's right. So bouncers are no longer limited to your favorite restaurant or bar in Khar, because bouncers are now also being employed by AGS Transact to shield its top brass as employees start coming into office demanding their unpaid dues. Now, we have been talking to a lot of employees of AGS Transact, and they have been saying that of the 2,500 employees that the company has, only 50 are now actively working for them. Now, remember, many employees are unable to formally quit and move on to other jobs because the HR department, which has to handle these resignations, has stopped showing up because even their salaries are unpaid. So the company is hollowing out from the inside, but no one is able to formally resign amid a crunch in the staff. So many employees are also saying that resignations are not being processed, relieving letters are not being issued, and even PFs are not being transferred. So as you know that without all of these prerequisites, it's very difficult to get a job anywhere else. Without your relieving letter, you are not likely to get a job with another employer. If your provident fund does not get transferred to another employer, it's very difficult to get through the onboarding processes. And the chairman, like I said earlier, had promised a resolution plan for all the outstanding liabilities owed to their employees by mid-April. However, there has been no communication from the management. After that, there has been a flurry of top level exits, and now the chairman Ravi Goyal has gone incommunicado. There has been no further communications. Employees from all over India have been coming over to the AGS office in the building that is behind me, but they say that security has been beefed up, bouncers have been hired so that employees are not able to go inside and meet the manager in person. And this is a very difficult situation. Imagine 2,500 employees unable to quit and go anywhere else, but unable to continue working for the same company. This is a developing story. Remember, AGS Transact had earlier defaulted on loans on payments worth 700 crore, and lenders like SBI and Yes Bank are also trying to move their ATMs to other service providers. So the company is in a deep financial crisis. Their cash flows are getting impacted, but ultimately what it boils down to is the fact that employees are not getting their dues and are unable to move on.
Important. Just on the point of bouncers, Agni, you can stay where you are. Don't venture anywhere close to the office. You've got the information that is relevant. But bear in mind that promising issues do come through. Some of them do not work out. So you need good research on that point. And to that end, let me ask Sunny what he's looking at beyond what we've spoken about. And Tata Motors is something that we did discuss in some detail. Sunny, without getting into too much detail, what is your call on Tata Motors? Because we've already talked about the major cliff notes. What is the call right now, and what would you do at this juncture today?
Yeah, I think again a neutral call on Tata Motors. I think most of the negatives is already priced in, and I feel that the way the company has given the guidance, it seems that next 2 to 4 quarters are likely to be muted in terms of earning growth for Tata Motors. So would like to remain neutral. There are many other opportunities available in other OEM and auto a name where I would like to bet my money on.
Like which ones, Sunny, in autos? Which are the names that you'd like to bet your money on?
So coming to auto hands, Lumax Auto is the one company. Again, it's a proxy play on Bajaj and M&M. So there we feel the fair value is close to 1,200, 1,300 rupees. So Lumax Auto is the one bet. SJS Enterprises, again, a predominantly play on passenger vehicle as well as two-wheeler. So they have recently onboarded Hero as a new client, which will add value during the FY26. So SGS Enterprise, and at the same time, from an auto OEM, would like to bet money on Mahindra and Mahindra and Force Motors.
Okay. Kunal, what would be on your list? Lumax, M&M, Force Motors, some of the names that Sunny have mentioned. Anything else that you're looking at in the auto space? Auto Ank actually.
So to be very honest, being on the trading side of the market, if I were to select even Tata Motors, I'm very comfortable because this counter is still in sideways consolidation since almost 6 months now, support being at 665. So, a trading strategy which we have deployed and we still feel are comfortable is shorting the straddle and going long on futures near 665 levels. So the downside seems to be very much limited from the present levels. But yeah, the view is negated if the counter falls below 660. Similarly, Hero Motors is something where I'm very comfortable. The counter is consolidating with positive bias. So with the stop of around 4200, one can go long on Hero Motors also, and the upside targets can be 4700 to 4750 for now.
Sorry, Kunal, one quick view on Lumax. I know that it's a fundamental buy that Sunny has suggested, but only because it is up 88% or 97% in the last 3 months. If you managed to get in earlier, would you take money off the table?
So Alex, again, in such kind of counters where you are really making good. In fact, May 2025, the counter was at around 500. Now it's trading at 1000. So it's almost 107% returns by now. So if you're holding, I would say trail the stop loss and hold the position, because at this elevated level, no one will take the fresh entry, right? So the risk reward ratio for the fresh entry is definitely unfavorable. But holding the position, trail the stop loss to 970 and carry the position. I think with the consolidation which we are seeing right now on the daily chart, if there is a further breakout about 1035, 1040, we might see the levels of 1100 also turning up. So yes, it's a hold for now, those who are holding, but new entries are certainly a no.
Okay. Another one interesting stock in focus today could well be Vishal Mega Mart, right? Because there's a large block in the offing. In fact, the size has been upsized, but there's a large set of equity coming out exiting the lock-in period as well. Sunny Agarwal, do you guys have fundamental coverage on Vishal Mega Mart?
Yeah, Neeraj, yes.
Any thoughts here?
Yeah, I think again we continue to remain bullish on the entire value retail pack, and all these companies have been posting very good set of numbers. So again, Vishal Mega Mart, we believe the fair value comes close to 140 rupees. So I think any dip today is a good buying opportunity for a medium to long term investor, keeping in mind price target of rupees 140.
With regards to the fact that there is a 20% equity coming on offering today from Kidara Capital and 56% of the equity opening up from a lock-in, could that put pressure?
Yeah, definitely. From a short-term perspective, there can be a pressure in terms of fund flow, the kind of equity which is likely to change the hand. But again, if I purely look in terms of the business, I think the company has been doing well, growing rapidly. So any dip can be a good buying opportunity over the period of next 1 or 2 weeks.
Interesting. Kunal, very quickly, 20 seconds. Are there support levels here or something like that in Vishal Mega Mart?
Absolutely, sir. So the breakout was at around 115, 118 zone. So by any chance, if we get the opportunity to buy near those levels, I think the risk reward ratio will definitely be favorable for longs.
Okay, Tanla Platforms is another counter in focus this morning after the board has approved a 175 crore rupee buyback yesterday. This is the company's third buyback in 5 years. How is the street going to look at it? Let's get in Swamit Sarkar for more.
Unless Tanla Platform will definitely remain in focus given the fact that they have announced yet another buyback. This time it's 175 crore that they're looking to buy back from the shareholders at a price of 875 rupees per share, which is nearly at a premium of 34% compared to the current market price. And this is the fourth buyback that we are seeing from the company since 2020 till now. Now in 2020 they had done a buyback via tender route. In 2021 they had done a buyback via open market route. In 2022 they had done a buyback via tender route yet again, and in 2025 now they are yet again choosing a buyback via tender route. Now as I was mentioning that this buyback is of 175 crore rupees. Of this, 15% will be reserved for the retail shareholders, but though the buyback seems to be at a premium of 34%, the actual gain for any retail shareholder could be limited given the fact that the buyback size is just 1.5% of the total equity. Now for this we have calculated the entitlement ratio. Now what is an entitlement ratio? Entitlement ratio is the number of shares that will be definitely bought back from any retail shareholder if all of them apply for this buyback, which means that there are 1,000 shares of retail shareholders that will be that are eligible for buyback. Then, and if all of them apply for this buyback, then what would be the number of shares that would be bought back? Is what entitlement ratio means, and that stands at around 0.8%, which means that if one retail shareholder is applying around 100 shares for buyback, then roughly around 1 share will only be bought back by the company, which means that the gains will be very much limited to just a 3% for any retail shareholder. So don't go by the premium of 34%. If all the retail shareholders apply for this buyback, then the actual gain for any retail shareholder will be very much limited to just 3% and not 34%, which we are currently looking when we compare the current market price to the buyback price that has been offered by Tanla platforms.
Okay. Thanks so much, Somat, for getting us those details on Tanla platforms. Sunny, quick view on this one. Tanla platforms, another buyback on offer. How should retail shareholders react?
Yeah, I think a buyback always augurs well for from a shareholder perspective. But again, as Sumit was discussing, the quantum of buyback is very small, and chances of tendering and acceptance ratio is likely to be very low. But anyway, I mean, buyback, I always feel that it's a strategy to reward the shareholder. And if I look at the performance of the company, that has also improved over the period of last 2 to 3 quarters. So I believe again, overall it's a positive, and we continue to remain constructive on Tanla.
All right. Thanks for that, Sunny. Viewers, we have to slip into a very quick break before the start of market, but we'll be back on the other side to bring you the pre-open rates at this juncture. Small downtick is seen on the Nifty 50, but you know what happened in trade yesterday, so make sure you stay tuned through the open session and of course later on in the session as well. Be back before you know it.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored.
Back with India market open. 5 minutes left for the pre-open rates to kick in. The implied open suggests a flattish start. I tell you what has been flat, and that's the road sector as well. It struggled as key policy shifts and financial constraints have taken center stage. The government's decision to hold project awards as well under the Bharatmala incentive is a key concern. Anushi has some details around this. Anushi, for all the talk around infrastructure and roads, the numbers leave a bit to be desired, isn't it?
Right, that's the first question that we should be starting off with. Is the road ahead unclear for these road construction players that are out there? In fact, if we look at the awards and the construction that has happened over the years, we've seen a downtick in terms of the road kilometer which has been awarded so far. 12,731 kilometer was the figure that we were looking at FY22, which has come down to 3,100 kilometer. This is the December 24 figure that we are looking at, but substantially lower than the 22 or 23 kind of a growth that we had seen. In fact, if we look at the order values for some of these company, 1.5 lakh to 1.3 lakh crore was the quantum that we saw earlier, which is now shifted to 35,000 to 47,000 crore. So it's a significant downtick that we are seeing in these last 2 years in terms of how NHAI order value trajectory has been. Now, what does this mean for the road sector? The key concerns first being the government has halted projects award under the Bharatmala projects. Now, this was under the wake to control the debt picture. Now, in 2017 to 2022, there was almost double the debt which was happening. So, to get a control of the debt picture, the government had put this incentive in mind. Along with that, muted capex in the budget 2025 may also lead to muted order inflows for these road players out there. 2.7 lakh crore was the figure, which was flattish as compared to last year. Even if you look at the competition scenario, that has increased significantly, which has led to tenders at 20 to 25% below the expected rates, especially the HAM model that we are looking at, that's hybrid annuity model. So that would lead to some margin crunch as well. In terms of how the order book has fared for some of these top players which are there, now we can see that order book from, if we compare FY24 and 25 in context to FY23, now that has come down on the muted side, KNR Constructions being an example of this. Along with that, if we see some other counters also like Afcon's infra, well, that is a strong growth. IRB Infra and Ashoka Buildcon, they have seen the order book coming down. In fact, let's look at the book to bill ratio to get a perspective on this. Now, 1.75 times was the ratio, which has come down to 0.94 times. PNC Infra majorly remaining in that 2x range that we are looking at, but Seagal 5.23x, it has now moved downwards to 3 times. So this is the kind of shift in the multiple that we are looking at in terms of where the book to bill ratio is concerned. So this kind of gives a picture in terms of the revenue visibility going forward. But let's also take account of the revenue growth which the companies reported in FY25 in context of the 3-year CAGR. And we are looking at a substantial difference here. KNR Construction 10% versus 7%. PNC a substantial difference that we are looking at. Seagal also similar kind of a picture that we are seeing. So the revenue CAGR has the FY25 has underperformed the 3-year CAGR that we are looking at. Also, let's get a sense of how the valuations are shaping up and what's the outlook like. In terms of the outlook, now the companies are seeing some bit of recovery in terms of awarding activity from the 4th quarter onwards. So more clarity is something that we still have to ascertain on what is the trajectory going forward. Highway construction target has been set at 10,000 kilometer for FY26. This also includes the 30,000 crore of monetization of assets from NHAI that is also included in the plan. So that is something that we can be watching out for. Now that's the outlook forward that we are looking, but also let's take account of the valuations which are there. Most of the multiples that we are looking at are trading in the 24 to 25 times. Comparing that to what has happened before, it has come down due to the muted revenue visibility that we are seeing. Just let's get a sense of the analyst recommendation. Overall, a mixed picture that we are looking at in terms of whether buy, sell and hold is considered. While brokerages continue to remain bullish on the overall road space, it's the revenue visibility outlook which is a question mark going forward. So that's the overall picture that we are seeing on these road players.
Thank you for that, Anushi. All right, first pre-open rates in, and of course we'll wait for them to settle. But what's going to be buzzing this morning? Let's pull up some of the buzzers that we've identified. Z Entertainment, how is that starting? And all of these rates will settle. So with that in mind, this 8.5% uptick might not really last. Tanla Platforms, the other one, another buyback, third one in 5 years. How's the street looking at it? Could be positive. Sham Metallics also buzzing this morning. So is Sterlite. is doing fairly well, about 4.5% up. So is M&M. I want to see what's happening to Tata Motors in the first 30 seconds or 1 minute odd of trade. And let's pull up Tata Motors after its analyst meet yesterday. Is the worst already priced in? Perhaps. Remember, Kunal Rambia told us earlier this morning, from a trading perspective, Tata Motors is not a bad bet at all. Kunal, you stick with that stand. What are you making of Tanla and Z?
Absolutely, I stick to the same view that the risk-reward ratio is absolutely favorable, and obviously there must be some negative announcement because of it. The counters have come down near the support. It's worth taking up a chance. When it comes to Tanla, again, the volumes are really massive and the higher top, higher bottom is seen. The support for the Tanla is near 625. So again, one should keep that in mind and create the position. I think the trend might just continue. The upside target can be 735 to 740. And when it comes to Z, obviously the sideways consolidation is seen for the entire year. This counter has consistently faced the resistance near 145. So if the counter manages to close above 145, 150 zone, then definitely I'll take a bet on this. But till then, I'll avoid this counter.
Well, seems like starting off on a good footing after a rally that has already taken place because of the pricing. So Z is certainly a stock in focus this morning. Like we said, Actually, I've missed by the way, this is important. Bank of Japan keeps the overnight rate at 0.5. So there is no hike in the rates out there. Will trim bond buying by $200 billion yen. So that is interesting. But the fact that the overnight call rate has not been hiked, you could argue is a small positive maybe. But be that as it may, that's the first piece of announcement that has come in. From an international perspective since the markets have opened. All eyes out on what's happening on the Israel and Iran situation as well. That's the other key thing to keep in mind as well from a global perspective. Okay, since there are no changes, we'll leave it and move back to the Indian stocks. Vishal Mega Mart likely starting off lower. The question only is, can it go further lower or will it recover? Biocon too, despite the fact that the belief was that the demand is strong for the QIP, is starting off slightly wobbly today, so bear that in mind as well. And on the flip side, Schneider Electric is amongst the other winners, which is going up, I believe, on that Goldman Sachs note, which has upgraded the stock to the target price on that stock. So that one is up about 5%. Okay, it's not a very cheap stock, Schneider Electric, Sunny Agarwal. Would you be a buyer at $800? The trailing 12-month PE or the 1-year forward PE would look very, very expensive.
Yeah, I agree with you, Neeraj, that stock is trading at a very expensive valuation. But at the same time, the opportunity of growth for this entire power ancillary play is humongous. So I think for a retail investor or for any investor who want to deploy a new money in the company, it's better to adopt a buy on dip strategy rather than chasing the current momentum.
All right, quick view on Sterlite Tech, if there's potential upside. Sunny, are you comfortable with valuations as they stand, particularly after yesterday's 20% pop? It's another 4.5% higher in the pre-open session. Would you continue to buy or would you hold your horses?
I think, again, the same strategy of buy on dip on Sterlite Tech. One has to keep in mind that the worst seems to be over for the entire optical cable industry, as we have seen that demand is picking up, and at the same time pricing environment has started to improve for optical fiber cable. So at the same time, BharatNet order is something which will again drive a growth for on a domestic front for next 2 to 3 years. So maybe high risk, high return investor can consider taking a small position in Sterlite on any dips.
Okay, so a few more names that are up and about, something like, and we did discuss Z in quite a lot of detail, 4.5% at this juncture, wondering whether that strength continues over the course of the open session. Quest Corp up about 2% at this point. Navin Fluorine up about 1.8%. Among the losers, though, just flipping the scales and talking about those, Biocon now recovering some ground, now down only about 2% or so. I wonder if that picture will change over the course of the next few minutes. Jubilant Ingravia. It's a stock that was in focus in recent times. It's down about 2% in trade and one to watch out for. But it's time now for the big brokerage call of the day. Citi has initiated a buy on Max Financials with a target set at 1,840 rupees. If I'm not mistaken, that's a 17% or thereabouts upside. Harsh joining in to talk about what they're saying in their note. Harsh?
Well, yes, nearly 20% upside from here is what Citi is seeing. In terms of, it's an interesting inflection point because there seems to be some bit of value there according to Citi. They are valuing this first off at 21 times value of new business, which approximately comes to around 2.1 times price to embedded value, which is typically how life insurers are valued. Now, talking about the company itself, one, they've reiterated focus on reverse merging the operational business with the listed entity. That is yet to happen. If that were to happen, Citi estimates that there is a 20% holding company discount, which Max Financial currently has, which could likely go away if that were to happen. So that's point number one. Point number two, they believe return on embedded value 17 to 18 odd % will likely continue. So return ratios will continue to be quite steady and in fact improve. There are quite a few levers as well. There is a product mix improvement which is likely to come through, diversified distribution, better execution and growth stability. All of those likely to aid the numbers going forward. They're saying improvement in margins is crucial with regard to the re-rating. They're expecting this as a re-rating candidate and they're expecting a near 20% upside.
Okay, let's also talk about a few more stocks. We've marked several, Harsh, but let's round off the list, and these are probably stocks that are already reacting.
Yeah, these are some stocks also that you need to look out for. One, you have a Hyundai India, which has commenced production at its Pune plant on the 16th of June. This is production for PV engines that they have commenced. UBS was fairly constructive on this yesterday. They said that if this were to happen, it will bolster capacity and aid growth numbers, both domestic as well as export for a Hyundai. You have a Sona BLW. Now, there was an untimely demise of the non-executive director and chairman of the board, Mr. Sanjay Kapoor. He expired last week. Company has come out with an announcement. Business as usual continues. They continue to service their clients as well. Mr. Vikram Singh has been MD CEO for the last 6 years, since 2019, and the board is likely to appoint or elect a new chairman soon. So they've come out with that announcement. You have Asian Paints as well, where Siddhant Commercial, which is Reliance Industries entity, has sold around 85 odd lakh shares, around 0.9% sold off, over and above the 3.4% sold. ICICI Pru this time around lapping up that supply which has come on the market yesterday. So again, something to keep in mind. And then there's Hikal. They have in fact received a GMP, which is good manufacturing practices, from the Brazilian regulatory authority, and that could likely aid numbers as well. So some of those also buzzing pre-market.
Okay. Hikal to look at, Sona BLW. Sona BLW, of course, because of very unfortunate reasons after the death of their chairman, Sanjay Kapoor. Now, their CEO will show some continuity, so a bit of an upside over there as well. But, as we're closing in on the pre-open session, Kunal, I want to come to you. What would be the call on a Vishal Mega Mart today? As expected in the pre-open session, it's about 7.5% down. You can expect it to open with a downtick because a large block will be available right now. Having said that, seeing the kind of interest block deals are also seeing, and the fact that the promoters upsize that block, do you think that there is a trade here?
Absolutely. As I just mentioned in the beginning itself, this counter gave a breakout near 115 to 118 zone itself, and it's opening right onto that support level itself. So if the counter manages to hold this level, I think this can be a really good bet. Considering that now the stop loss being 111, one can certainly take a chance. And if the counter manages to close above the high of first 15 to 20 minutes, I think that can be a good bet, definitely going forward.
Okay. What else? Since the pre-open rates have settled, I think it's important to highlight that Sterlite is having an up move yet again, and for whatever it's worth, it's at the top of the pile right now when it comes to the gainers. Something's happened there, and that stock is doing very well. Zee is a cushion 2% move. So Kunal saying that he'll buy it only above 145, 150 means that the momentum, he's playing the momentum now that there's a rally that has already happened. But unfortunately, not too many gainers today. Vishal Mega Mart is down and not too many losers. Post that, there is only Hinzing, which is down about 1.5%. So quiet day on the Nifty 500 for sure. Now, I want to ask about Sterlite, even though we may have spoken about it, simply because the stock is on a roll right now. maybe we ask Sunny about Sterlite. I need to ask Kunal about Sterlite. Kunal, if you are long in Sterlite at 103 with the rally behind it, would you take money off the table, or are the charts looking strong for you to ride it more?
So Neeraj bhai, overall the trend was definitely negative on the counter, but now recently this counter bounced really well from 59 level to 100 levels. But if you compare the same still with the high of January 2022, this counter is still down by around 66%. And the volumes which we have seen yesterday, they are really, really good. So if someone is holding, I would say definitely hold on. If someone has missed the bus, I would say try to catch it even at this elevated level, because this counter is still cheaper and the trend is just turned positive. By any chance, if we get a dip near 90 to 85 levels, I think that can be a really good bet. But even, I'm comfortable buying even at this elevated level on this counter. It's a thumbs up.
This is very interesting just on Sterlite, since we were talking about it, because if you see what their numbers were, they actually posted a loss last quarter. But their announcement on June 16 that they're expanding that data center portfolio and making it AI ready with advanced fiber and copper cabling solutions, that's been the big driver as far as Sterlite is concerned. And then of course they had that 2,600 crore order from BSNL. So June has been a great month for it. But looking at what the balance sheet has been like, Sunny, would you say Sterlite Tech is fundamentally a strong investment option?
I would rather say it's a kind of turnaround story wherein they are at a 40 to 50% capacity utilization, and with likely increase in demand going forward, the capacity utilization is likely to improve, and that will drive the profitability going forward. So again, more of a turnaround bet. So let's see how quarter one, quarter two plays out. But looking at a very strong management commentary in terms of demand environment, especially as you alluded for a data center and AI thing, at the same time lower capacity utilization, which will get a boost in FY26. So we are hopeful that for FY26 and 27, we will see an expansion on margin front. So current EBITDA margins are close to 12-13%, which the management is expecting to go to close to 16 to 18% band over the period of next 3 to 4 quarters. If that plays out, I think definitely it seems like the company will start posting profit over the period of next 6 to 9 months.
Okay, one of the movers in trade yesterday on the Nifty 50, Bharti Airtel. I'm just wondering if there are legs to its rally up. It's one of the top gainers in trade today as well. Kunal, is there a trade here up 1% at the start?
So absolutely, Alex. Again, this counter was in sideways consolidation since 17th April, and the constant resistance which counter faced was near 1890. If the counter manages to close above that 1900 kind of zone, then with the stop of 1850, one can definitely go long. Targets can be 1975 to 2000 levels. But till then, it can be a range-bound counter, so be a little cautious.
What would your top call be, Kunal, today? One top call.
Neeraj bhai, I think Rashtriya Chemicals, that's RCF, has given the breakout, and this counter is clearly making higher top, higher bottom. Yesterday was a bullish candle, so with the stop of 153, 154, one can definitely keep a watch on it. The positional targets are 175 to 180.
Okay, so 175 to 180, that's the interesting one. And watch out for some very interesting conversations later on in the day today, viewers. We'll be talking to the management of BEML, and then a bit later on with the textile company as well, to talk about all of this shipping stuff that is happening, and of course the demand from the US. But first up, this Tuesday morning, the rates on the Indian markets, are we seeing a flat start, or is there more to it? No, it's a flat start, completely flat. I doubt that the others might be doing too much. Nifty IT flat as well. Mid caps and small caps should come up on your screen next. Okay, a bit more action there for whatever it's worth. 0.1%. Just look at the Bank Nifty. Look at the Sensex. There is no movement at all. It's like the markets didn't open. Let's get the heat map up on the screen and show you what's moving and what's not. If anything, Tata Motors is certainly sulking. So after the 5-6% move yesterday, another 1% post the analyst notes. And the analyst meet. So this one is sulking. Sun Pharma, a bit of a cloud over that one too. A bit of movement in Ultratech, IndusInd Bank, Larsen & Toubro, Titan, Nestle, but just few and far in between. Nothing dramatic, if you will. On the gaining side too, by the way, less number of gainers, even though the market is flat. JSW Steel 0.5%, HDFC Life has some upside to it, Bharti Airtel, Tata Consumer, Reliance, SBI, but no, nothing much to talk about on the gaining side for sure. It's not like metals are having a field day today. HDFC Bank is probably supporting, Reliance is probably supporting, but that's about it. So I think if you can call it this, the one standout large cap mover has to be Tata Motors, which continues its grind lower, in addition to maybe IndusInd Bank. But frankly, Tata Motors probably the one standout mover.
Japan's interest rate decision also maybe adding some pressure. This early morning, yield rates also spiking in Japan. But that's the overall picture coming in. I want to pull up the broader markets just once more quickly, seeing if there's any movement over there. Oh my God, this is like completely a directionless market right now, trying to figure out and wait and watch what's happening. And understandably, because there's so many moving parts at this point. Let's pull up the sectoral heat map for you very quickly, and then we'll go into the stock-specific story, because that's where it's all at. Nifty Media up once again, and this is likely because of what's happening with Z. Nifty Realty not doing too badly. PSU Bank showing some signs of life, but it's all very middling right now and lukewarm, not moving anyway in any massive way. Even the Nifty Pharma on the downside also, the biggest, the worst performing index is just less than 0.25% down. So nothing major happening there. Let's quickly move to what's happening with individual counters, because that's where all the action seems to be. Z is the first one that we're looking at this morning. Promoters have increased their stake. This was on our watch list as well. So let's see what's happening with Z. About 3% up this morning. A buyback has been announced for Tanla Platforms, and Tanla Platforms was on our watch list as well. 6.5% this morning. So that is definitely buzzing on that buyback. Vishal Mega Mart likely to see pressure as a big block of supply comes in at this point. 7.5% down on Vishal Mega Mart as we had predicted. Biocon has announced a fundraise, a QIP. How has the street looked at it? No real major reaction there. A lot of this is going to be buy warrants from Biocon Biologics. Varun Beverages is the other one. JP Morgan has seen an upside on it, a 32% upside in fact, and that stock mildly up in the green. So is Max Financials. This was a big brokerage call we talked about this morning. Citi has initiated a buy call, just about 0.25% up. So not too much action. Let's see Axis Cades Technologies. It's in a pact with a European country for production of solutions for aerospace and defense markets. Anything defense is really buzzing. Axis Cades also up this morning. Zydus Wellness, another block deal candidate, because it's the season of block deals. Well, 4.63 million shares have traded in a block, but you're seeing a positive impact over there. That block getting absorbed quite well in the first sight of it, about 2% up right now. So these are some movers, but you have to really pick them out, because otherwise market action is fairly muted on a broader scale.
You said it. There are a few companies, a few stocks that are standing out in the broader markets as well, and a few big movers. Navin Fluorine is one that I'm spotting. It's up about 5% at this juncture, or 4% at this point. Another one on the gaining side is Suntec Realty from the Realty Pack, really doing quite well for itself. While the Realty Pack as a whole is up about 0.75%, this one is a standout winner in trade, up as much as 4% in trade. We've been speaking about pipes companies as well, and the fact that they have been on a bit of a tear. Today is a different story though for Prince Pipes, which is losing as much as 6% in trade. I wonder what's going on there. So any of the names that I've spoken about, Kunal, that you would focus on at the start today, something like a Navin Fluorine, which is building on gains, up about 5%?
Absolutely, Alex. In fact, this is the only counter which was on my screen right now. If we just look at the historical data of last 3 years, September 22, this counter was near 4900. Again, the same level was seen in May 23, and now we are reaching near that zone itself. So if the counter manages to go about this 4850, 4900 mark, though it is far away from that level right now, but if it manages to close above that, I think it's going to enter the new trajectory altogether. And there can be the beginning of a new rally after almost 3 years. So for now, one can take up a trade with the short-term mindset, the stop loss being 4650 and the target being 4900. But if the counter manages to close above 4900, then the positional targets can be 5200.
Quick view on the fundamentals for Navin Fluorine. Has anything changed dramatically? Well, it had a pretty decent up move in terms of profits in the fourth quarter, and the margin picture was pretty good. In fact, it's the best that it has been in the recent past. So Sunny, on the fundamentals, is this a good buy for you?
Yeah, I think the entire fluorine as a space is doing well. So both the player SRF as well as Navin has delivered a decent set of results during the March quarter. And again, we continue to remain constructive on within chemical basket on fluorine space. So Navin fluorine, I don't know what's the trigger today, but if I take a long-term horizon, I think we are constructive on both SRF as well as Navin fluorine.
Okay, what else? Vishal stays lower. Shipping companies are coming off a little bit today. Both GE Shipping and Shipping Corporation of India are down about 4%. And these are trading stocks per se, so I'm not going to ask Sunny for a call here. But Kunal, with this downtick, is there more downside? I don't know if you can short any of them. Excuse me, I don't quite remember if they are in the F&O space. I reckon they are not. But if you had them in the portfolio, would you remove them?
So the overall trend still remains absolutely strong. And if I just talk about, say, GE Shipping, which you just mentioned, the overall trend is still positive. It's making clearly higher top, higher bottom, though the fluctuations are very, very high. But I think one should not really be worried about it. GE Shipping, the support is at 950. Consider that as a good level to think of initiating buy. When it comes to Shipping Corporation, I think the support is... the trend is again positive and the support is placed near 215. So yeah, I think such massive moves will always have such kind of the profit bookings also, but the trend remains positive. One should hold on to the position.
Kunal, good optimism on Sterlite, by the way. That's now up nearly 6.5%. So really strong showing there. Tanla Platforms is the other one which is doing well. But something that Alex highlighted, Suntech Realty, up about 4%, 464. And we've seen periodically in the last few days since the RBI announced its policy that select real estate names have continued to show some spunk. And Sunny, do you have a call on Suntech Realty, and if not, what is the favorite real estate investment idea?
Yeah, I think we have got a buy call as far as Suntech Realty is concerned. So during even Q4, they have reported a kind of highest ever pre-sales number. Again, a play on Mumbai based real estate market, and at the same time, over the period of next 2-3 years, they are venturing into an annuity rental business, which will give a lot of stability in terms of cash flow. So we believe the fair value of the Suntech is close to 520 rupees, keeping in mind the investment horizon 6 to 12 months. Apart from Suntech Realty, we also like two Bangalore-based players. So basically Brigade and Shobha Realty. Again, both the names have posted a very good set of pre-sales number during the Q4. And we expect the growth momentum to continue during FY26 and 27 for Brigade and Shobha.
Another stock that is buzzing in trade is Solara, active pharmaceutical ingredient company. It's up quite considerably, 4.5%. So we've been talking about a few of these companies, and I know I'm lumping all of them together. You don't necessarily need to do that, but chemical players, a few brokerages coming through and saying that the tide is finally turning. APIs, of course, and CDMOs are the one bright spot over the last few months. Is that widening now? Sunny, the question is that, and would you pick something from the active pharmaceutical ingredient space? What do you think about a Solara? Why do you think it's active today?
Yeah, again, I think the opportunity for the entire CDMO space is pretty huge, wherein time and again it has been discussed that even a 5 to 10% market shift from China to India presents a very good opportunity for the entire CDMO as a space. So on Solar Active, sorry Alex, I won't be able to give any view on that. I am not aware what exactly happening over there. But coming to CDMO space, a few names which we like over there is Aarti Pharma Lab and Blue Jet Healthcare. So both these players are ramping up their capacity and will be reporting a very solid set of numbers during 26 and 27. And apart from that, within the pharma space, GLP, which is a kind of weight loss drug, which is likely to kick off beginning next year. So few players over there, Eris Life Science and OneSource Specialty. These are the two names which we are recommending to our client.
Okay, Kunal, quick view on Solara. If you've got a view, what are the charts indicating to you?
Absolutely, Alex. This was the counter where I actually honestly got trapped on 14th of May, where the counter was up by 4.5% and it came out of consolidation. The right next day, the counter was down by 10%, and then we had to exit. But this counter is in broader consolidation since Jan. The constant resistance is seen near 555, but the active volumes are happening right near the support, which is at around 485. So certainly it's a clear buy, but just make sure that, if someone is holding the position, be a little cautious near this 550 mark. If the counter manages to close above that, this broader consolidation of last 6 months can enter into a new trend, and then the positional targets can be 650 to 700 kind of levels also. So very, very bullish on the formations. Breakouts are still pending. Short-term view is extremely bullish. Long-term view is sideways right now.
Okay, gentlemen, thanks. Actually, Sunny, we'll let you go on that note. Thank you so much for being with us today and giving us your thoughts. Really appreciate your time. Kunal, just stay on. Would want maybe one more question with you, because what we're trying to do now, or in fact what we are doing now, is get in my colleague Puneet, because Citigroup or Citi Research has upgraded the target prices of all major IT players, but due to better exchange rates and other operational parameters, not necessarily a major change in fundamental expectations. Puneet, am I right?
Well, yes, Neeraj, definitely. That's been one of the key aspects of this report. Not too much in change of fundamentals, but it looks like a sentiment change essentially that the brokerage is doing. And the analyst, very widely covered, Mr. Surendra Goyal he spoke to us post Q3 as well in the first week of June, and he maintained largely a dovish note in terms of growth prospects for the IT players. But what has happened in this particular note is that across the 9 stock that he covers, he's hiked target prices on all while maintaining his view across the sells and the neutrals for each stock. What caught my eye though was the increase and the magnitude of increase in target prices for the mid-cap IT specifically. We've seen something like a persistent target price hike to 5,045 rupees per share from roughly 4,300 earlier, and Coforge being hiked over 1,700 rupees per share now versus 1,400 earlier, while the rest have seen roughly about 200 to 300 rupees per share hike in terms of each of the companies. I think these were the two which caught my eye definitely, and he's maintained a positive view on both these stocks, and the target PE multiple has been risen for each company, which is leading to the target price increase. So as you rightly said, fundamentally he is maintaining a neutral view, but because of exchange rate as well as among other key factors, he's increased the target price multiple, and the mid-cap IT companies have seen the highest target price increase according to Surendra Goyal.
Interesting. Okay. Not that IT space is reacting dramatically, but Kunal, very quickly, a view on any of the IT stocks for a trade? KPIT was up yesterday, HCL Tech is in news today.
Absolutely, Neeraj bhai. In fact, I'm very bullish on IT space because risk-reward ratio is extremely favorable. Infosys being the top pick for me. This counter was a clear buy near those 1,500 levels. Now it's giving a new breakout above 1,625. So that's the first preferred bet with the target of around 1,800. The second is TCS, again, sideways consolidating. The breakout is at 3,500. Above that, the targets can be 3,800. These are the two preferred picks for now. In fact, entire sector is looking very attractive from positional point of view.
Okay. All right. Thank you so much for that, Kunal, and great to have you on as always with us. Now, let's go across to our next conversation, which is a very exciting one because we have the management of BEML, Mr. Shantanu Roy, with us in our studios here in Mumbai. But before we get to that conversation with Mr. Roy, let me bring in Anushi, who tracks that space very closely. Anushi, the company is confident about doubling its order book in 2 years. Just set up some of the key points that we will be discussing in this conversation.
Right, Tamanna. So it's the FY26 outlook, which is very interesting. Now they're expecting a 20% of a revenue growth. This is for FY26 that we are seeing. Along with this is a 150 basis point of an improvement that can be expected. Again, execution of some of the key orders playing with this margin uptick that we are looking at. Along with that, it's the order book which stands out, which is expected to double this year. And this would be led by some receipt of the large tenders which are in place. If you look at the export contribution, also the management did state that they want the contribution to increase to 10% as compared to 8%. This will be also aided by the working capital, which is expected to reduce by 15%. Now, if you look at the order book, that stood at about 14,610 crore, which is a book-to-bill ratio of 3.6 times. So, doubling of this in FY26 would be an important focal point for the business going forward. Again, in context with what had happened in FY25, we did see the revenue number being slightly below the guidance which was stated, and this was on the delay of the railway and metro orders which had taken place. So execution of these orders in FY26 is supporting the kind of 20% growth that we are looking at. So overall picture is on the FY26 business outlook side. So that is something that we should be watching out for.
All right, thank you for that, Anushi. Now, let me welcome Shantanu Roy, Chairman and Managing Director at BEML, with us in the studio. Mr. Roy, thank you so much for joining us, and great to have you here in person. So much happening with your company. We were fascinated seeing the unmanned trains, the unmanned metro visuals, drones. What's new?
Very good morning, and really it's a pleasure being here with you in the studios. A lot of things have happened, a lot of things are happening in BEML as well as in the country, in the sectors that we work in, rail and metro, defense, aerospace, even the mining and construction business vertical. So these are exciting times. A lot of initiatives that have been taken. We are in the process of transforming the organization, and one of the major structural changes that we brought in was the strategic business unit concept. We started with 12 strategic business units and 2 micro SBUs. And now we are on the verge of creating 2 more strategic business units. The idea is to have a very focused approach for particular business verticals, not only business verticals, but the product lines as well. Number 2, to create a leadership pipeline. Number 3, to improve the efficiency and faster decision making. And with that, we brought in a lot of policy enablers. For example, the delegation of power was changed completely to give more autonomy, decision making at various levels. So these things, it is stabilizing now, and 25-26 should see definitely a marked change in the numbers as well. We have been able to give decent returns as far as the EBITDA is concerned. Slowly, we are going up from somewhere around 5.5% to 13.2%. It has been a journey over the last 3-4 years, and this year I'm looking at 14.5, 14.7%, further 150 BPS jump, and slowly take it to around 20, mainly driven by rail and metro and defense and aerospace. If you look at last year's performance, rail and metro could not fire, but mining and defense did it phenomenally well. And defense, for the first time in the history of the company, their contribution rose to around 27% of the top line.
So let's come to them one by one, because there is so much to unpack. When you say you were looking at EBITDA growing to 20%, and that's a very clear focus and a big ambitious target as well. By when, and do you see defense being the driver? As you mentioned, contribution is grown, or will it be rail and metro?
Both, in fact. It will be a combination of both. And as I have always maintained, we have a graded approach to growth. From 13.2 to 20, around 20 cannot happen immediately. It will take a few years. At least I look at a time horizon of 4 to 5 years from now. And if all goes well, we grow the way we intend to, and the defense, aerospace and rail and metro, we keep on firing. Definitely it's a possibility.
Mr. Roy, your new identity, which you spoke about with us when you were here in our studios in December as well. So aside of a new logo, there's this new vigor that you are probably pointing towards, right? 14 SBUs instead of 12 is great. How does the road ahead look like, one in terms of revenue contribution from all of these units? Because when we look at your financials, sir, from FY22 to FY25, the margin uptick has ensured that your bottom line numbers grow very handsomely. Your top line has consolidated. Is this the consolidation that comes in before a breakout, if you will?
I look at it that way. Yes, it has taken us some time to consolidate at this level. And the intent of the SBU formation was very clear, as I said, and also finally every SBU has to contribute at least a specific number, and the micro SBU is supposed to contribute half of that number. So when it happens, it will take some time. Again, it is not going to happen overnight. Already some of the SBUs, the bigger SBUs, they have started performing. That's the reason, you know, in spite of the fact that rail and metro went down by 50%, but we were still able to hold on to our top line and improve the bottom line. It was only because of the strategic business unit concept, and that some of the strategic business units, they performed very well, phenomenally well.
Got it.
For example, the high mobility vehicle SBU, it grew by more than 100%. It doubled its revenue.
Okay.
Right.
Okay.
So these were some of the very important pluses for us, because of which, you know, we could retain the top line. And this also talks about the resilience of the company.
It does. So the question then, Mr. Roy, would be this, that you mentioned that maybe defense, maybe mobility takes forward your operational metrics higher. Are those two the segments that take the revenues also higher in times to come? Is it the reversal of fortunes in the metro and rail segment which does that? And does that happen in FY26, or do we look at maybe starting FY27 on the revenue front?
On the revenue front, FY25-26, we should see a further, you know, enhancement in the numbers, driven by the defense aerospace and the rail and metro. Because there are two reasons. One is that the metro orders the execution timeline starts from this year for the Bangalore Metro, for example.
Okay.
We are supposed to supply 20 trains in the current financial year. Then the Vande Bharat sleeper, which was the first proto, and we were waiting for the clearances, including the CCRS clearance. So now we are ready to roll out the other trains. Already the car body shell is ready. We have started the furnishing work, and this year we will be completing all the balance orders. So these two things, these two projects itself, you know, should see a substantial increase in the top line from the rail and metro point of view. As far as defense aerospace is concerned, there is, you know, one is our core strength on the land system, that is the high mobility vehicle platform. So we have enough orders with us, and if we are able to, you know, execute the existing orders itself, there will be huge growth in defense as well. Another important strategic shift that we have brought in the company is that from being merely a platform supplier, we have now transitioned to a system integrator. Not only our high mobility vehicle, but the complete system on the high mobility vehicle.
In defense.
Already we have started executing two such projects. One is the command post vehicle, the other is the mechanical minefield marking equipment. So these two projects we have already started executing. Some more such projects are coming our way. It should happen this current financial year itself. Apart from that, considering the current situation we are in and the op requirements, definitely I look at some more orders quickly in the current financial year, and a part of it which we have to execute within this year itself.
What is the order book outlook on defense in light of what you're saying? Have those conversations started? Are you seeing visibility on, you know, those orders?
So the order book outlook is the overall order book outlook, out of which defense should contribute at least some 20%. 20% should come from defense. And that includes these op requirements. It includes some systems.
What's the number you've penciled in, sir?
Number, you know, I have I have already indicated. We ended the year with 14,610 crores, and I'm looking at the same number as a further order inflow in 25-26. And once we are able to execute, you know, a part of it, and the total order book kitty, So with that, we should end above the current year's order book value by at least, more than 50%.
No, so same number you want to add. So 14 plus 14, 28?
Yeah.
Is that what you're saying?
So your existing order book in your lifetime has been 14,000 crores thus far, and you're saying you will add that equal amount in 1 year.
Yes,
Wow.
it should.
Wow.
It should.
That's a huge headline there.
It should.
I'm sorry, just one thing I was fascinated by since I saw those visuals is I'm going to come back to the Bangalore Metro. Is this driverless metro?
Bangalore Metro is also driverless metro. And the driverless metro, it's called UTO, the unattended train operation.
So just explain this to us. So the new metros that you're working on has the technology where there is no driver required at all.
Yeah. It started with Mumbai, and there are different levels of automation, So this is called the grade of automation for the highest level. And what makes it driverless is mainly the signaling, the onboard equipment, the wayside equipment, and the TCMS, that is a train control management system. And there is a thing called the communication-based train control, which connects the train signaling and everything to the central command center. So it is a graded approach. It again, straight away the train cannot run on a UTO mode. So it has to go up gradually to UTO mode, and then finally it has to be approved by CCRS. Once there is a approval by CCRS, then only it can run in a UTO mode for commercial purposes. In Mumbai, it's a work in progress. Bangalore, every project now is coming with the UTO. Even the Chennai that we are executing, the Chennai Metro order, 210 cars, it is also with UTO ultimately.
So by when will this be a practicality on ground for riders?
It all depends, in one or two cases already it has been proven some 3 years back, but still the UTO mode has not started. I mean, there are a few cases in Delhi Metro. So it all depends.
Got it.
But the capability is there in the technology and in the trains that we are supplying. That capability is there that it can run. It is designed for UTO.
Got it. Okay. This is very interesting. The other small clarification that I needed, sir, was this: that when you talk about the 14,000 crore order book currently and add in 14,000 crores, does it include aerospace and maritime orders as well, or that is separate?
No, it includes that as well. But the aerospace and maritime order, in terms of the absolute numbers, may not be very high in 25-26. It will be mainly driven by, again, rail and metro. It will be driven by our existing core capabilities in defense, and of course the mining construction. So the aerospace maritime orders in real terms, if you are looking at a quantum jump, it may happen from next year only. It is not going to happen this year.
Got it. The other aspect would be, what's the kind of capex requirement that you need for all of this going ahead in order to bag the kind of order flow and then up the revenue run rate? And a word on the debt equity mix as well, and how does that shape up going ahead?
For meeting the aspiration for 25-26, the only capex that needs to be completed, the facility that needs to be completed is the Bangalore facility, wherein a capex of around 230-240 crores is being infused. The civil work for the plant is getting ready by August, September, and another 2-3 months before the machinery comes in, we are setting up a very modern rolling stock manufacturing plant at Bangalore with the latest welding technologies, all robotic welding, and it will have a complete setup right from the sub-assembly manufacture to rolling out the train and then testing it. And it is a very versatile facility, very robust facility, which can help us in rolling out standard gauge, broad gauge, Cape gauge, everything.
What is the capex you're looking at this year?
The capex, the total capex that we are looking at this year will be around 600 crores, and It includes this current facility at Bangalore, plus some more facilities we are creating at Kolar Goldfields, that is mainly for defense. And Mysore unit we are now developing as a hub for defense and aerospace. So we are going to infuse capex for the aerospace facility in Mysore, as well as more defense facilities in Mysore and in Palakkad as well. And of course, to cater to our future needs, we have this new plant which will come at Bhopal, so that we can double the capability for the rolling stock.
What does all of this do to the debt situation?
As of now, the debt, we have not gone for a long-term debt, but we are working it out. We are talking to various financial institutions, especially the Bhopal plant. We would like to go for debt financing. It will be better that we go for a debt financing on a long-term basis. At the same time, the idea is that we will not wait for the complete project to be finished. We will do it in phases so that we can start rolling out the rolling stock, the trains from the Bhopal plant within a period of say 12 to 14 months from now for faster cash flows. And we need that as well.
So any fundraisers on the anvil, or you do not require that?
You see, there are two ways of raising funds. One is through the equity and the other is through the debt. Through equity we cannot do, so we have to go the debt way, and we don't have any long-term debt at present. So we are looking at it very closely to go with, debt.
Okay.
Can I just ask one macro question, sir? I mean, for all the promises, I'm not saying in a bad way, I'm just saying that there's a lot of talk around how year after year, the demand of railway coaches, railway equipment, etc. will keep on going up, right? The results from some of the railway coach manufacturers or railway wagon companies over the last 12 months have anything but that. And their outlook also, they are setting up capacities, but they're not really talking about gangbusters growth. So is it that there is bit of a deviation from the promise of that Indian railway growth story, which was very prominent back in 2023, mid 2024?
No, I don't think so. There have been certain course corrections, maybe certain changes in the direction from a particular brand of trains to a different brand of trains, more so considering the safety concerns, right? So that is one part. Second is, so in that regard, basically, replacement of the old ICF coaches with the LHB coaches, that is number one priority. Then of course, the next big thing is what we are working on is the high-speed train, the bullet train, which should be a game changer for the country. It's a collaborative effort of the Indian Railways and National High Speed Rail Corporation and BEML. So it should be a game changer. We will be at a different level in terms of the capability, in terms of technology.
What are the timelines for the Mumbai-Ahmedabad one?
The timelines, it's just a proto train. So let us be very clear, it's a proto development we are doing. And the timelines are also very ambitious, sometime by December 2026, plus 3 months here and there. So very ambitious timelines, and it's a very, very, I would say it's a niche kind of a project.
Please count me and Tamanna in for the proto run.
We would
Mr.
love,
Roy,
please do invite us for a ride. We'd love to come on.
Sure.
100%.
Most welcome, yeah.
All right. Thank you so much, Mr. Roy. Shantanu Roy, Chairman and Managing Director of BEML, speaking with great clarity on what the plans are. And
Tamanna, they have a new logo, so it kind of exemplifies the new BEML, I reckon, right? So looking forward to that.
Yeah, absolutely. Thank you.
Thank you so
for
much.
your time here. All right, that was the conversation with BEML, but focus now on Wonderla Parks and Resorts. They've launched a new boutique resort in Bengaluru. Before we speak with the management and the execution pipeline, let me bring in Mahima to set up that conversation for us.
Right. So speaking about the new resort, it's a 39-key resort where they've invested roughly 39 odd crores, and it's priced around 10,000 onwards for now. In terms of recent updates, the company is also set to launch its Chennai park in Q3 FY26, where they've they're set to invest roughly 610 odd crores. So it's already under execution. Plus, they'd already raised a QIP in FY25 of roughly 540 crores, out of which around 390 crores was earmarked for the Chennai park itself. In terms of guidance, management has said FY26 they expect 5 to 10% of footfall growth and 3 to 5% of ARPU growth. In terms of FY27, they're expecting the Chennai plant to fully be operational, and that will drive higher growth. In terms of long-term outlook, they have said that they are expecting large parks to target around 1 million plus annual footfall, and smaller parks to see a footfall of over 5 to 6 lakh in terms of being steady footfall. Margins will improve going forward once all parks are fully operational. Capex and funding, they said that they're not looking for any further equity fundraise, but Capex in tier 2 parks will be roughly 200 to 300 odd crores. Lastly, in terms of expansion plans, also they're planning into expanding into 3 to 4 new locations plus 1 to 2 new projects that they'll be taking up, and marketing spends will go up in FY26 by roughly 5 to 10% as compared to what they've done in FY25. So this is the overall view of Wonderla Hotels, and of course a few questions that I would like to know about could be the kind of break even that they're expecting in the new resort, plus how the execution of Chennai park will take place, plus how the margins will fare in terms of from a longer term perspective, and how QIP utilization has taken place so far.
So much, Mahima. Let's see if we have the time and the appetite, and if Arun Chittilapilli has the appetite for answering all of that. Executive Chairman and MD of Wonderla Holidays with us on the show. Arun, good having you. Thanks for taking the time out. I hope all is well.
All is well, all is well. Thank you for having me on the show.
No, not at all. So, pleasure is ours. Arun, let's start off with a minutiae, if you will. A boutique resort in Bangalore or Bengaluru. It probably is complementary, but when one thinks of theme park companies getting into this, I'm trying to understand what drove this decision. Is this the first of many to happen? And is it a complementary business on return ratios and long-term ROI?
See, again, thanks for having me on the show. But of course, we are already in the business of amusement parks and resorts. So we wanted to do something a little different, and hence the decision to do a slightly different kind of a resort in our Bangalore property. We also had extra land available, and post-COVID, what we felt was that travelers were looking at more differentiated, more curated experiences for their short holidays. And we also saw that people are taking more shorter holidays than longer, more expensive holidays. So we really felt that there was a need for some kind of a differentiated offering in our resort space. And this is what, if you see Disney or a Universal, if you look at their resorts also, they are not your typical resorts like a Marriott or one of those. They have very differentiated offerings for their resorts, and so we are also kind of doing something similar. We are doing something a little different. We wanted to give a different feel to our guests who come and experience this resort, and hence the decision to do this. This is a small property, about 39 rooms, and it's not a very high capex currently. But the goal is that we want to expand into this slowly, and we want to bring similar offerings to our other amusement parks as time goes by.
Arun, quick thoughts here. I mean, are you doing this as a separate brand, or with an intention of doing it only in the theme parks, or beyond that too? And two, is this business complementary to the return ratios, margins, etc., that you have in your theme park business?
Yes, it's definitely complementary to what we already do. And in terms of how we want to expand into this, it's too early for me to say this. But definitely we will go to other cities where we already have projects. Will we do this as a standalone? As of now, no. But if we see potential, there's no reason why we can't do that. But as of now, we are focused on being an amusement park operator first, and and then a resort provider. So in that sense, we want to be complementary to our amusement park offerings.
But okay, Arun, I'm still asking. So complementary from a business perspective, yes. From return ratios, margins, is it similar?
Yes, I think it should be similar or even better than what we have done in the past.
Okay. And you're going to test this out for a period of 12 months, 18 months before you take the next decision for the other parks, or are those plans already underway?
Yeah, I think this is something new that we've not done before. So let's see. Let's see how it goes. If it goes well, we'll definitely expand.
Okay. And I'm guessing the funding for this has come in from the QIP. There would be some balance as well. Would that and cash flows be enough for all further expansion? So would you need some more?
Yes, I think we are very well capitalized for now. We have sufficient amounts left in the QIP for our Chennai park. About 300 odd crores for Chennai has been earmarked from the QIP. We have also used some of that fund for this project, the Isle project. We also have some other new capex. We are adding a new roller coaster to our Bangalore park, so that's another 40 odd crore investment, which is also part of our QIP. And also some other small, expansion. General corporate purposes, we have kept a small amount as well.
Got it. Okay. Okay, Arun, what's the outlook for FY26, both on how the business might do, part one, and part two, what the margin picture, etc., might look like? I'm guessing that if you have, excuse me for not knowing this, but if you have debt, you must be a happy promoter now that the interest rates are also coming down.
FY26 is slightly unpredictable for us because we are opening a new park, and of course we've opened this resort project as well. We should be doing better than last year in terms of numbers, but we will not get a full year of Chennai. Chennai we were going to open only in December, so we are going to get only Q4 from Chennai. But we already have another new project, which is Bhubaneswar, which we launched last year. This is the first full year of Bhubaneswar that we're going to see, which is FY26. So that should give us some numbers as well. In terms of our existing parks, we are not seeing great growth there. We are seeing some marginal growth. So we'll have to wait and see how the year plays out. In terms of margins, I think we should do better than last year. But having said that, we are also launching Chennai this year. So there will be extra marketing costs associated with that. So we'll have to wait and see how that plays out.
I get your point. Arun, one final question. So when you say uncertainty, is it because of travels into India, or is it that the consumer sentiment is still not picked up? Because we were of the opinion or the belief that with the tax rate cuts, etc., that has all happened, discretionary spend might only go up.
See, we are also expecting discretionary spend to go up. But having said that, I've not seen a huge change compared to last year. There is definitely some improvement that we are seeing. But we'll have to wait and see how the year pans out. There are so many uncertainties that have happened already in this year. So let's see how the rest of the year pans out.
Okay. We will leave it at that. Arun, thank you so much for taking the time out and speaking to us, and all the best for the quarters ahead. That's Wonderla Holidays. The stock is quiet today. But as we hit that break, I tell you that one stock, which is anything but quiet, and a lot of active stocks today, but it'll be wrong to not mark Sterlite yet again. 11.6% higher yet again in trade, from 60 to 110 in a matter of days, really. It's been a blistering rally, to say the least.
What a story. What's happening with Sterlite Tech? We're coming back after the break and telling you that and more. Stay tuned. A lot of action on the other side.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis. Conversations that matter. We break it down. Cut through the noise. Welcome back. You're watching India Market Open. Now, one factor that the street will have to look at quite closely, and you're seeing that perhaps the stock of Shipping Corporation of India. Let's pull up SCI for you this morning. The escalating conflict between Israel and Iran could threaten key global shipping lines. Sources have told NDTV Profit that along with the issues possibly in the Hormuz Strait, there may be problems in the Red Sea trade route as well. Now, to tell us the impact on shipping contracts of this, we're joined now by Rishabh. Rishabh, what are you picking up?
What we've understood from official sources on this developing Iran-Israel conflict is the fact that the government is keeping a very close eye on the situation. They are monitoring all developments very closely. What is also very interesting is that a meeting has been called that will have all the stakeholders such as the container organizations that are there, of all shipping lines, all the authorities involved with that, all the government departments also involved in the entire sort of shipping lines and the supply chain part of business. All of them will meet this week, and all of them will discuss the sort of issues that they might face, and the contingency plans in case radical steps like the Strait of Hormuz is closed, something that is essential with regards to the sort of trade that comes in, especially with regards to energy that flows into India via that. What we're also seeing is that the government does see the fact that if these issues prolong, not maybe beyond a month, is when there will be certain serious implications for exporters. But because these shipping contracts are so far only sort of for a month, they are not seen to be as sort of deeply hurting the exporters so far.
Okay. Now, shipping companies, meanwhile, so that's the exporter's point of view, where there is some concern of what will build up. On the other hand, you have shipping companies that are facing the heat as freight costs are building up owing to the conflict. In fact, even before anything happens, the insurance costs and the freight costs are beginning to see a huge jump. Pallavi, what's the quantum of jump that we're seeing already?
Right, Tamanna. So like you've mentioned, there are already concerns regarding a rise in freight as well as insurance costs. Now, we spoke to multiple exporter agencies, and what they had to say was, while so far they have not seen a rise in costs, it is a matter of the next few days. Depending on how the situation evolves, we will almost for sure see a rise in these costs. Now, we're looking looking at some global shipping indicators, the Baltic Dry Index is one among them, and that index has seen a jump of 42% in exactly the past month. And this is an indicator of what shipping costs going forward are going to look like. There are also concerns regarding the regular plying of ships and the availability of containers. Now, we have seen so far that the Strait of Hormuz, that is located between Oman and Iran, connects the Persian Gulf and the Gulf of Oman and Arabian Sea. This strait is deep enough and wide enough to handle the world's largest oil containers, and it is one of the most important oil choke points globally. So while so far there is not too much of disruption, there are expectations that if the scenario deteriorates going forward, it will, and that's already, as you mentioned, reflecting in crude oil prices as well.
Okay, so you are seeing a 42% increase in the Baltic freight rates in the last 1 month. So sharp push up there. In fact, to talk more about it, we have a very interesting perspective. One from exporters. We have Ajay Sahai, DG and CEO of FIO. That's the Federation of Indian Exporters Organization, with us on the show. We're also joined by Pallab Banerjee, MD of Pearl Global. Welcome to both of you, and thank you so much for speaking with us today. Mr. Sahai, let me start with your perspective on exporters right now. Is there already concern that is being seen?
Definitely there is concern. Everyone is expecting the freight to go up. There will be irregularity of the shipment. There will be rerouting of the shipment. Even in the transit port, we may see the delay. And not only this, probably if the war intensifies, the war risk premium may go up. If the fuel prices touches $100 or more, there may be an additional pressure, additional surcharge also, which may be levied. So while as of now, we are not increasing the freight, but all indicators point out that very soon, if the situation is not normalized, we will see abrupt increase in the freight, not only of the sea freight, but even on the air freight.
Okay, but you're already seeing some increase in freight rates, isn't it, Mr. Sahai?
In fact, right now it has not impacted because most of the exporters have the contract where it has not been factored. But in the new rates which are being negotiated, we are seeing little uptick into the rates, and probably in times to come, we may see further aggravation on the rate side.
Cycle of that. Just trying to understand what is the cycle where you would see newer rates coming in and having to be factored in. Mr. Sahai?
In fact, if you look into very soon, we were seeing that Red Sea was becoming normal, roughly 30 to 40% the shipment which were going through the Cape of Good Hope, they have been brought under the Red Sea. But now, since Houthis are going to have a field day, we will be expecting that all the shipment will now be taken to the Cape of Good Hope. Definitely, it will not only impact the increasing voyage time, but probably the frequency of the shipping may not be there, and the number of ships which may be plying will not be there. To some extent, even our shipment to North and South America, which is going through the Suez Canal and through the Atlantic route, will also be impacted. We may see rerouting, we may see increased transit time, and we may also see irregular shipping. So it's not just the cost, probably the uncertainty in the shipping also is major concern for the export sector.
Yeah, so shipping companies definitely in focus, and we'll pull up a list of those stocks and listed companies which could get impacted. So with exporters, Pallab Banerjee, MD of Pearl Global, joining in now. Pallab, from your perspective, how do you see the developments of the last 3 or 4 days and the impact that it would have on trade routes? Nothing has started happening yet, but there is, of course, a threat of closing off the Strait of Hormuz, some trouble in the Red Sea. What are you experiencing, hearing and seeing right now?
Hi, thank you, Tamna. What we are finding in our experience of garment trade, most of the shipping lines that we use, or that means like the buyers have nominated, most of these big retailers and brands across the European and US countries have nominated these shipping lines. They are already following the route of Cape of Good Hope because the disturbance that has been experiencing for the last 1 year because of the conflict that is happening in that part of our world. So naturally, most of the shipping lines have been going through the Cape of Good Hope. So immediately, no change. Of course, as we just heard, the petroleum or the oil prices, because this is the Strait of Hormuz and that particular Persian Gulf is big time for the oil. And I think that's one direct concern that every industry would have. And the second would be the whole area, if it is getting more and more uncertain and inflamed. So it will impact the economy of a lot of these Asian countries where garments are manufactured. So these are the two things that we will be watching very closely. Your direct answer to your question in terms of the shipping at this point of time, that's a low concern. But yes, if we are late, if the goods are not delivered on time, normally the customers ask us to air freight the goods. That's going through the roof. So that's a huge challenge at this point of time. So yes, as long as the
so that's not happening. So to understand correctly and just to recap it, Mr. Banerjee, that's not happening yet, but this is something that could happen quickly, or are you already seeing demands for air freight which would be at higher rates?
Yeah, costs are already started going up. So we are seeing that in our things. I'm sure it will go up further. Because that's the first impact that happens. And a lot of these flights, even if you look at the flight routes from countries like India and this part of the world, there have to be a lot of detouries happening. So that itself is adding up to the cost for both passenger as well as air freights.
What is the extent of cost increase that you expect, Mr. Banerjee?
I'm not an expert in terms of giving a cost estimate of freight as of yet. But yes, air freights have started going up. Sea freights, we are not seeing any change as of yet. Also, last year at this point of time, the whole world was going crazy with the EV exports. And a lot of these shipping lines and containers were booked because of the EV. So I think we have a benefit because, if you remember, most of these Western nations, including US and EU, were imposing that tariff on EV, which came into effect after July, August, and henceforth. So this is the time a lot of these shipping lines were really freighting a lot of EVs into these countries. So annually, we are seeing a trend of lower prices of sea freights compared to what we were seeing last year at this point of time. So the baseline is low, but yes, let's see how it goes. Air freight definitely is a problem at this point of time.
Okay, so air freights have gone up. Mr. Sai, just trying to get a sense because there was, a conversation with the Commerce Secretary yesterday and we've heard from him as well. What is the kind of aid that exporters are asking for or importers are asking for from the government? What are you expecting to happen? What are you hearing so far?
In fact, government is constructively engaged with the industry. They want to understand the challenges which are being faced by the industry. Very soon, we are expecting a meeting to be convened for that. Government has a limited role into that. Probably the government role may come when there are firming of the insurance premium. Some of the government agencies like ECGC in the past have also looked into reducing the insurance premium. We have to see how the war premium is levied by the shipping line. What are the additional surcharge which may come out with the increased price in the fuel. So while from the exporter side, we are expecting the exporters also to look into forming up the contract where they can get the benefit because freights are set to increase. We are also looking into to what extent we can look into the services of the freight forwarder where the consolidation can take place. So I think some of the low-hanging fruits where the industry has to chip in. Government in this entire episode has a limited role, but definitely a lot of facilitation can be provided by the government, particularly with regard to checking the insurance premium.
Okay, thank you so much, Mr. Sahai and Mr. Banerjee, for joining in for that perspective. So the panic button has not been hit yet, but watch this space. And one interesting insight from Pearl Global as well, that there is an increase in demand that at least they're seeing to shift from shipping lines to air freight rates, and those prices have gone up. All right, but I think the stock of the morning is Sterlite Technologies. I mean, there's just no stopping this counter. Already up about 17% year to date, but another 12% up today. What's going on with Sterlite Tech? We know that there was a BSNL order of about 2,600 crores, but after that, a big announcement on June 16th, which has led to this current rally. Soumit Sarkar is joining us with more.
Well, yes, Sterlite Tech definitely remains in focus. If you look at the year-to-date gains, including today's gains, it's more than 20-25%, which is the best start that Sterlite Tech has seen to the year since 2021. It has been gaining for the last 3 consecutive months. In month of June, the stock has gained more than 45%, which is the best monthly gains that it has reported since April 2020. Now, recently there were a couple of announcements. First, it was the launch of new generation data center solutions, and the second was the announced order win of close to 2,631 crore rupees. But do these two orders warrant such kind of a move in the share prices of Sterlite Tech? Well, no, because firstly, yes, the market opportunity is huge when it comes to data center, but this announcement is just another product launch, and there is no such order win or confirmed order win that a company has announced on the data center front. Now, the order win related to the 2,600 crore BSNL order that the company had announced. Now, this order win is not for Sterlite Tech, but for its demerged entity, that is Sterlite STL Network. Now, this order win will be, and also this order win was notified back in March 2025. It is just another filing that the company had done. So nothing new in this order win also that the company had announced. Now, Sterlite Tech most likely will only get the supply of cable for this order, and the amount of which will be just a fraction of the total order win of close to 2,600 crores. So both these announcements do not warrant such kind of a move in the share prices of Sterlite Tech. And how has been the company's performance of late? Operating performance has been improving for the last couple of quarters on the back of the fact that inventory destocking has come to its final stages. So there could be an improvement in the financials. The net debt to equity has come down to 0.7 times from 1.4 times earlier on the back of the fund raise that the company had done and on the back of the demerger. However, the net debt absolute number and the leverage ratio, that is net debt to EBITDA, continues to remain on the higher side. Net debt stands at close to 1,350, while the leverage ratio stands at around 3 times, which is more than what the company aims to keep at around 2 times. Also, there are a couple of triggers for Sterlite Tech going forward, which is the Bharat Net project, which is estimated to give an opportunity of close to $2.5 billion US. Then the US BEAD project could also drive fiber demand, and the data center business could also drive demand for the company going forward.
Okay, well, it's certainly showing in the way the stock has moved. Samit, thanks so much for putting all of that into perspective. Now, the question is, what is the big picture looking like? Let's get in Vikas Khimani, founder of Carnelian Asset Management and Advisors, on our show to talk about how does he see the current landscape. Vikas, great having you. Thanks so much for joining in. The smile on your face tells me that your portfolios are doing well. Is it that the markets are conducive, or are you beating the market currently?
I think smile on your face should be irrespective of how the markets are, because markets will be good and bad all the time. And I think what we learn over the years is that, you got to live with all kind of markets. But coming to your question, I think yes, of course, we've been doing well. From the latest low points, we have recovered. We have generated significant alpha. So I think, yeah, we are happy. Our investors are happy.
Because is there reason to be constructive markets currently, or is there reason to be cautious? I mean, one geopolitical conflict hasn't ended and there is one more, but the markets are kind of showing resilience to that now. It's almost as if you're living with these and they may not impact sentiment too much. How do you foresee the next 6 to 12 months to be like for Indian markets?
So Neil, I think we will be in heightened geopolitical situation, not only now, for next, in my opinion, next couple of years, or maybe next 5-10 years. It's been going on for the last couple of years, since 2022, and markets get used to it. Historically, wars and geopolitical conflicts were far relevant for economists because of the oil price hike, and which is what partly played out in 2022. Fortunately, I think because of the oil cartel breaking, or I think, different source of supplies coming about, and countries managing to import oil from different sources, I think oil prices continue to remain in check despite the conflict in the Middle East. And I think that gives the big respite from a economic impact on the local economies, including India. So that's the reason I think by and large, the dependence on the, one source of supply of oil and oil prices are kind of checked. And if you keep that in mind, then I think broadly, by and large, and normal, conflicts will keep happening. There will be news flows, but news flows don't have impact on the, on the economic growth and on the corporate earnings, right? So hence markets are kind of overlooking that. And today, I say that India is far more resilient as an economy what our RBI governor has done in last 6 months is phenomenal. The 100 basis point rate cut and infusing liquidity in the system is far more powerful than anything happening in the world, because this is going to be growth boosting. And I do believe that in the current year you will see earning upgrades happening. There was a data I was seeing yesterday that in the March quarter, the positive surprises ratios went up from December quarter, and I think you will see the positive surprises ratio versus disappointment ratio will keep on inching up, in quarters to come. And as that happens, I think markets will keep doing well. I don't see any structural risk to the economy. I don't see any structural risk to the markets. Of course, sentiment-driven, news flow-driven correction can come anytime. Nobody can predict that. Nobody can plan for that. Other than that, I think business is as usual.
Vikas, is this a great opportune time? And we've seen this with crisis after crisis when it's a geopolitical crisis, even with the regional crisis, we saw trade tariffs, that there's a few days of uncertainty and then we come back to basics, which is an essentially strong economy, Q4 not as bad as expected, and from the second half of this year, things expected to improve. Is this an opportune time to shore up portfolios? And what would you say to those sitting on the sidelines or sitting on cash?
I feel bad for if you're sitting on cash, but I would say that you should have deployed last month, but it's never too late. Jab jago tab savera. So as long as your horizon is longer term, like I said, short term, I have no idea what can happen, but I don't see any major risk, and I see more positive momentum building towards markets doing well. I do believe that this year will hit new high, and corporate earnings will be in the range of 13 to 15%, which is, I think, very robust number, and hence that's the view one should deploy in. And history tells us that whenever interest rates do come down, markets do well, both from a growth perspective as well as a discounting rate perspective. We haven't seen anything happening in a meaningful because of the global uncertainty in the tariffs and the geopolitical. So to that extent, even at the current valuation, current price, current markets, you are getting a good deal. Again, I repeat again, I say the view has to be longer term. I don't know what can happen in short term, but I have no doubt that markets will do well. And that's when you should invest.
Okay. What are the spaces that you're finding interesting, Vikas? So would you say that BFSI, for example, a little ignored? Do you think that consumption theme now needs to be picked on, or are you as excited about defense as the street seems to be? Just trying to get a sense of where your attention is right now.
I think for us, they don't change very often. We have taken a call that, we broadly play in 5 opportunity spaces where we think there's a great opportunity over the next 5-10 years. Number 1 is banking and financial services. Again, it's a wide thing, but within that, you pick your stock. Right now, we are very overweight in this particular basket. Second one is the entire manufacturing basket, where we think that again, the structural opportunities there. Within manufacturing, you can have a very wide range, right from specialty chemicals to auto components to pharmaceutical to CDMO players to defense to EMS, all kind of thing, very wide play. But so that's again a basket been very positive. Of course, you keep making changes based on the what kind of companies you find and what kind of ultimately it boils down to finding a right company. Third one is consumption. As our per capita income goes, from $2,500 to $18,000, you will see many people, consuming more new and better, and that would create significant opportunities in the marketplace. So and fourth one is the infrastructure space, where India is spending a lot of money ports, roads, railways, airports, everything, right? And there will be lots of opportunities out there. And the last, in the services space, which includes IT services as well as the non-IT services, such as travel, tourism and all. And within those, you can have very interesting. So across these 5 spaces, you got to identify companies which can offer, superior risk-adjusted reward, risk reward. And we don't chase fads, we don't chase volume, undesired valuations. So I think you have to kind of stick to your knittings, and that's what we do. So across these 5 spaces, we made no changes in last month's crisis. Also, when the tariff was there, we had to make no change in our portfolio, and that just trying to say that that India is a very structural story, and if you believe in that, you don't need to react every now and then and adjust your portfolio if your view is long term.
Because amongst other things that have worked beautifully, and IT over the years, etc. But I'm stuck on this whole CDMO piece because the stocks are continuing to perform, right? My question is, are the future benefits, some bit of them or all of them, in the price already because of the sharp rallies that we've seen, or do you reckon that this could continue? And are you betting on the larger names or some of the smaller names? Because we've interviewed some of the smaller names because of late, and their guidance for growth is very, very large for the next 2-3 years.
So Neeraj, I think, in fact, if you remember in some of our previous conversations, I said CDMO is a trend where probably IT was there 20 years ago, in mid-90s and late. So I think it's a very, very long-term trend. And, fact that, lot of opportunities will move away from China and come to India, it's a big opportunity. Now, it will play out. Unlike, this requires a lot of approval. This requires a lot of sort of manufacturing facilities built out, all those things. So this is not as simple as IT in terms of having a linear growth. It typically happens in step functions. So you will see 2 years of consolidation, then 2 years of growth. Because by the time you put up new capacity, it takes time. So I think this is how the nature of the business is. I remember, we bought Laurus slightly ahead around 300 rupees, last year, and for 6 months it didn't do nothing and it didn't do anything. And then I think suddenly you saw numbers coming, and same thing happened with us in Newland, which from 1800 with 3 or 4 quarters number coming through went to 14,000-15,000, right? And of course profits also jumped to, suddenly a 40 P stock started looking at 20 P. So that's what happens when you have bit of a non-linearity in your profits, and that this space offers. And hence one has to understand. Of course, one can't say that every time it will happen, because again there are a lot of uncertainty involved, and one can't say that with every company it will happen. And hence one has to be very careful and know the subject, because what happens is that when the fads build, now everybody will start positioning as a CDMO company, and then retail investors will get carried away and they will get valued, and then that's how money will be lost. So while I'm saying CDMO is a play, it does not mean that every company will succeed, just like every company did not become big in IT services.
Yeah, that's true. That's true. Okay. Well, out of time completely on this. Unfortunate. We could talk only 9-10 minutes, but it was still good enough. Vikas, thank you so much for taking the time out and being with us and giving us your thoughts.
Pleasure is always mine.
And with that, it's a wrap, viewers, on this leg of India Market Open. From all of us who put the show together, thanks so much for tuning in.
Yeah. And what a day that we have seen. Hopefully some recovery on the other side. Ask Profit up next.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis. Conversations that matter.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Mahima Vachirjani, and we'll take you through the next 1 hour of trade. Good morning, Mahima.
Good morning. I think it seems like we've not anchored Ask Profit since the past 2-3 odd days. It feels like it's been long.
that is true.
Yeah.
I was under the weather, but much better now. And then Mahima was under the weather, and she's better now. Yeah. So, but let's take a look at where the markets are right now. Down about 0.33% for the benchmark Nifty 50, and this is really something that we were anticipating to play out yesterday. The consolidation, but we were surprised by the upside that the Nifty 50 and indeed the broader markets took. The broader market's looking relatively sanguine at this point. In fact, it is trading in positive territory, both the mid-cap index as well as the small-cap index trading with gains of about 0.25% to 0.33% or thereabouts. Let's very quickly take a look at the market breadth as well, and I would hazard a guess to say that it's positive and reasonably good at this point and remaining where it is. Yeah, there you go. So what really is panning out is that there's quite a lot of action in individual names, and that is shoring up the breadth of the market as well. Talking about a few stocks from the broader markets that are doing particularly well at this stage, and there are a few that stand out. You had the likes of Sterlite Tech, which gained as much as 19.2% yesterday. It's up another 13% as we speak right now on the back of its data centers venture, in that it's going to be providing the necessary equipment, wires and cables, etc., that will go into data centers. So this is something that is a pivot for them, and that is expected to do well for them as well. Remember, this is a company that posted a loss in the fourth quarter. It wasn't the best set of numbers, but June has seen it win a significant order, and there's also other things that are in the works that have worked in their favor. Mazagon Dock Shipbuilders also up and about in trade today, up about 5%. You have Tanla Platforms that is in the news, that is up about 5% or 4.5% or thereabouts. CRISIL up about 4% or so. Leighton View, quite a few. So, and Apar Industries as well gaining and looking pretty good. On the losing end, you have stocks that have gained considerably in the recent past and which are losing a little bit of ground, and this is par for the course. Something like a Shipping Corporation of India down about 5.6%. Jubilant Ingravia, if I remember correctly, there was a large deal earlier on in a few sessions back in which the stock gained quite considerably. It's down about 4% or so. You have Vishal Megamart, where there is promoter selling, and that deal got upsized, in fact. Quite a lot of supply coming through, and also the lock-in for quite a bit of the shareholding opening up, as a result of which that supply coming into the market is proving to be a little bit of a dampener in trade today, but it has recovered quite considerably from the low point of the day. And finally, something like a Manappuram Finance also losing ground today, down about 2.7%. No real trigger. There were a few stocks that were moving without any major trigger, and one of them was Prince Pipes earlier today. It was down 5%. I wonder if it's recovered just a tad bit. It is, in fact, above the low point of the day, trading with cuts of about 4% or thereabouts. And on the upside, from the realty pack, you had Suntec Realty that was looking particularly strong in trade today, and it was gaining about 4%. It is now up about 3.3% or thereabouts. An entire real estate play in the residential space on account of the rate cuts doing reasonably well.
Yeah, absolutely. And with that, let's also welcome in our guest for the day, Swati Hotkar, AVP Technical Research at Nirmal Bang and Astha Jain, Senior Research Analyst at Haim Securities, joining us now. Welcome to both of you, ladies. I take up the first question. Srinivas from Hyderabad is writing in and he's saying that he's a long-term investor and he's holding Tata Elxsi 400 odd shares at an average price of 1500 and wants to rebalance his portfolio now and saying whether he can further hold Tata Elxsi or exit from the counter and diversify into something like a persistent or some data center themed stocks. Asta, I'll come to you on this one. What would you suggest? Should he continue to hold Tata Elxsi or switch to something else?
Hi, good morning to all of you. See, I think it's better to book partial profit or to make an exit, because what we have seen in the Tata Elxsi is right now, they are, in fact, the kind of financial performance, we are still not very much convinced about it. Valuations are looking on the higher side. So I think partial profit booking is always recommended for this counter. So it's just a partial profit booking which we are recommending for this counter. And then, yes, one can make entry into the IT stocks, because I think IT stocks are in a good shape right now, in which TCS and persistent system, these two counters are looking very strong to us. So yes, he can exit partially and can make entry in any of these two IT stocks.
We've got our first caller from Ambala. Ajay is calling us. Very good morning, Ajay. How can we help you today?
Yeah, good morning, sir. Good morning, ma'am. सर मेरे पास AIA इंजीनियरिंग के शेयर्स हैं 300 शेयर 34-39 पे.
हाँ जी.
सर इसका मुझे फंडामेंटल टेक्निकल पूछना था, और सेकंड सर क्या ये इसको बेच के मैं एशियन पेंट ले सकता हूँ क्या? एशियन बस वही जानना था सर.
अच्छा, आपको AIA इंजीनियरिंग बेचना है और एशियन पेंट्स खरीदना है इस भाव पे?
हाँ सर, ये चलता ही नहीं है, मतलब काफी दिन हो गए मेरे पास 34-39 के 300 शेयर्स पड़े हुए हैं. तो मुझे लगा कि शायद एशियन पेंट राइट इन्वेस्टमेंट इस समय रहेगा कि इसी में होल्ड करूं AIA इंजीनियरिंग.
और आपका टाइम फ्रेम क्या है? आपने क्या सोच के
मैंने सर ये अपना रिजल्ट पॉइंट ऑफ व्यू से ही लिया था, तो AIA इंजीनियरिंग का तो सब चला था, थोड़ा सा ऊपर गया था, फिर नीचे आ गया ये.
ओके. और एशियन पेंट्स खरीदने का क्या प्लान है? मतलब व्हाई यू थिंकिंग?
सर वो एक्चुअली जैसे आप लोग बता रहे हैं कि रिलायंस ने सारा अपना स्टेक बेच दिया, तो एक हैंगओवर निकल गया, तो शायद चल जाए.
पर ओके, तो अगर आप एशियन पेंट्स आज खरीदेंगे तो फिर कितने समय तक आप होल्ड करना चाहेंगे?
सर मैं होल्ड कर सकता हूँ उसको, 1 ईयर भी होल्ड कर सकता हूँ. ऐसा अगर आप अच्छा इन्वेस्टमेंट रहा तो इस लेवल पे, क्योंकि काफी दिनों से चलता ही नहीं है सर ये, इसलिए पूछ रहा था एक्टिविटी के बाद क्या राइट टाइम है कि नहीं सर.
Okay, understood. So let me on the technicals go to Swati. Swati, what's the view on these two? AIA Engineering, as he's pointed out, has not done too much for him. If you can give your response in Hindi, he wants to know whether he can sell it and buy something like an Asian Paints.
AI इंजीनियरिंग में भी अभी भी पॉजिटिव है. नो वंडर हम लोग ने काफी अच्छी रैली देखी थी फ्रॉम ऑलमोस्ट 3050 टू 3600. उसके बाद हम लोग ने एक प्रॉफिट बुकिंग देखा है, बट अभी भी ट्रेंड अपसाइड है. आई विल सजेस्ट टू होल्ड ऑन. नीचे में एक स्टॉप लॉस रख सकते हो 3370 का, 3370 का स्टॉप लॉस रख के अपने लॉन्ग पोजीशन होल्ड कर सकते हो. उसमें क्षमता है वापस से 3600 के आसपास जाए एंड वहां पे आप प्रॉफिट्स बुक कर सकते हो. एशियन पेंट की बात करें तो डेफिनेटली यू कैन इन्वेस्ट कर सकते हो लॉन्गर टर्म होराइजन के हिसाब से, क्योंकि काफी हम लोग ने सेल ऑफ देखा है ये पर्टिकुलर स्टॉक्स में. प्राइस करेक्शन के हिसाब से मैं बात करूँ 3400 से ऑलमोस्ट 2200 है. यहाँ पे डबल बॉटम फॉर्मेशन बने. अगर आपका नजरिया 1 से 2 साल का है तो या करंट लेवल्स पे आप बाय कर सकते हो. 2270 के आसपास ये पर्टिकुलर स्टॉक ट्रेड हो रहा है. ओवर अ पीरियड ऑफ टाइम इनिशियल टारगेट्स मेरे 2500-2600 के लिए ओपन हो जाते हैं. तो लॉन्गर टर्म ड्यूरेशन के लिए डेफिनेटली यू कैन स्टार्ट इन्वेस्टमेंट इनटू द एशियन पेंट.
So that's with regards to where charts are concerned for both AI engineering as well as Asian Paints. It's interesting because the stock has not done much, year to date as well. It's hardly down 2% and 1 year it's been down 22%. But of course, the fundamentals of the company still not looking very positive because there is a demand overhang on the entire paint space. All right, moving on to the next question. Lucky from Ahmedabad is asking the next question. He's holding BEML 12 shares at 4,440 a piece. And has been holding for more than 15 months now, but saying no gains that he's witnessed so far on the counter. Wants to know as to what's the potential for this counter going ahead. Asta, I'll come to you on this one. Interestingly, we also spoke to the management of BEML today. So Lucky, I request you to go to our YouTube channel. In case you've missed the conversation, you can go to our social media handles and check out the interview. As I come to you on this one, the management guidance was quite positive. He said that FY26 order book will double. In terms of execution also, it will be better. What do you suggest? Should he continue to hold?
Yes, definitely, because yes, management is quite optimistic. They were expecting the order book to get doubled by FY26. They are getting good traction from the aerospace and defense space. And definitely, they are also expecting margins to go higher in the longer term. So I think overall, the defense space in particularly is looking very, very strong. And this is the counter which seems to be very interesting right now. My idea here is stay invested in this counter for the price target of 4,700 at the initial level. And these are short-term targets which I'm recommending because in the longer term, it can move above the level of 5,000. So hold the counter is what we can recommend for this stock right now.
Hold the counter is the view coming on BEML. Our next caller, Dheeraj, is calling in from Hyderabad. Dheeraj, a very good morning to you. How can we help you today?
Good morning, ma'am. Good morning, everyone. To everyone in the panel, actually. So, ma'am, my query is regarding Premier Energies.
Okay.
I have accumulated Premier Energies for a short-term trade, actually, for 45 days to 2 months for a maximum note.
Okay.
I have accumulated 420 shares of Premier Energies at 1,050 rupees, ma'am.
Okay.
So, is it good to stay invested in this counter because a lot of foreign investors and local domestic mutual fund houses added this stock at 1,058 levels?
Okay.
So, I thought there will be a good upside in shorter term.
Okay.
But there have been volumes, but there is no upside actually since a few days. So, one more small thing, ma'am.
Right.
Markets have corrected recently and they almost came back.
Right.
But individual stocks, if we look at like REC, Power Finance, REC and Power Finance Corporation and IRCTC,
right?
Not IRCTC exactly, actually, like all the power counters and some other counters like JSW Energy and CG Power and every counter like Tube Investment.
Got it.
In all these counters, the all-time high is like very high. Like if we come to Tube Investment, it is like around 5,000 rupees a piece,
right,
each share. So now they're currently trading at around 2,900 and 2,800.
Got it.
When will all these stocks come back to those levels again? Like many people like got held up at higher levels. Like
Understood.
Me too.
Understood.
Like I was held up in some railway stocks.
Got it. Dheeraj, I got your point. I'll take this up with Astha then. Astha, I'll come to you quickly on what he's mentioned for, the second part of his question. For Premier Energies, I'll go to Swati. But what he's saying is that a lot of stocks are stocks that people, bought in when they were at their all-time high. And then these stocks, corrected significantly. What should one do if they're stuck in these kind of stocks?
So first of all, it depends on the kind of industry they are stuck in. If it is a defense industry, definitely they are all long-term candidates. In the shorter term, because of the valuations we are seeing, or we can see some more downfall. But all these are short-term phenomena. In the long term, this sector is well poised to show more returns from here. Similarly, is the case with the sector like power and infra. So right now, I think these are some of the sectors which only due to the valuation and maybe due to the expectation that government spending will be more in the budget which gone by, and that does not come up to the expectation, the sector is showing some sort of, not so much strong performance. But in the longer term, I believe that the all counters from the sector, especially if their financial performance, which will continue to be stronger, definitely they will be a good candidates to hold for the long term. So these are all short-term phenomena. And right now we are very much positive on the defense space. Definitely we have given a call on the BML right now only. And in the other defense counters like BEL, etc., HAL, we are also very positive. In the railway sector, we are still positive. And I think power sector is also looking strong to us. So right now, stay invested in these counters. These are short-term phenomena. Due to the stretched valuation, they might not be working well in the short stock price momentum, but in the long term, definitely they will again prove to be a good gainers.
And Swati, not sure if you have enough data on the charts for Premier Energies. If yes, what are the charts indicating?
Yeah, as of now, looking towards the only technical setups, I believe my view will be a little bit cautious because from the last 2 months, the continuously counter is facing a formations of the low top, slow bottom formation and facing a very strong resistance of 20 DMA, which comes to at around 1050 levels. The client has the same CMP buying levels, I believe. The downside, it has a good support of 990 level, which has been tested yesterday also. So as long as it's maintained that support, we can witness some sort of a pullback rally, which might take a counter backs towards 2050 then 1100 levels. I will suggest not to book the losses, but please maintain the strict stop loss of a 990 because if it's break that level, then we are likely to witness more selling pressure, which might take a counter towards to 900 and so levels. So the view is a bit cautious. Try to hold your long positions or sell on rise strategy should be applied, but at the current level, you can hold on by maintaining a 990 rupees as strict stop loss.
Speaking of stocks that have dropped quite considerably from their all-time highs, this is not an all-time high for Tata Motors, but it is elevated levels. Rajesh, who's writing in, has bought Tata Motors at levels of 1,080 in September of 2024, so it's not very long back. But the stock has been facing headwinds of all sorts, whether it is problems in the US with regard to tariffs, or if it is certain pockets or markets that it has underperformed in, and specifically I'm talking about Jaguar Land Rover here, it's not had the best time. And the latest update, of course, is that the outlook for FY26 on the revenue front and on the margin front does not look very pretty, and the stock has taken a bit of a beating in the week gone by as well, or last couple of trading sessions as well. Stock is down about 1% today. Yesterday it was down 3.7%. So the question that Rajesh has is that he does not have cash to average even at this point, and he's wondering whether to hold or not. Asta, that's a question I think a lot of people will be asking. If Tata Motors is trading at 681, in your opinion, what is fair value, taking into account the Jaguar Land Rover business as well? And how long will he have to hold to recover his price?
So I think the time should be a longer term. Why? Because in fact, when we have attended the management meeting also, in fact, management was also not very much positive about the kind of CAGR growth which they have witnessed in the past. So that is the major thing. But now, one thing which we liked about that management meet is that they were very much confident about outperforming the industry growth and in fact increasing their share in the PV and the CV space. So I think that is what which we find to be very attractive. But yes, in the shorter term, there might be some challenges. So it is not a short-term phenomena. Stay invested in this counter, keeping in mind long term, which can vary from 6 months to 1 year. I mean, the time horizon can vary from 6 months to 1 year. So this is not a short-term phenomena. We are positive on this counter, but for the longer term. And I think there's no need to take out losses or profit from this counter. Remain invested with a price target of 750.
750, all right. So that's the view on Tata Motors. It's dealing with a tough time at this juncture, but it may not last forever. Obviously, it's the long-term philosophy that you should have with these stocks. Himanshu is calling us from Lucknow. Himanshu, namaskar. How can we help you today?
Namaskar, sir. Actually, sir, I am having shares of PNB Bank, 200 shares of PNB Bank at the rate of 99. And I want to know what will be the short-term target for these shares as per global scenario is going up and down. So should I book profit or should I hold more?
देखिए, ग्लोबल सिनेरियो का ज़्यादा कुछ लेना देना नहीं है पीएनबी के साथ. तो have you identified your duration? Do you want to hold for a few months or a year?
I am holding this share from last 6 months already.
Okay. And how long can you hold it for?
I can hold it for 2 or 3 months more.
Got it. Okay. So Swati, on the charts at 99, it's not too far away from the current market price at 107. And of course, fundamentally, there's a lot at play in the banking space. One would anticipate with the cut in the rate that has been announced over the course of the last few months, that lending activity starts picking up as well. So that's a fundamental story. But in the next 2 to 3 months, what is the potential upside on PNB?
See, the overall view is definitely positive on this particular stock because whatever the rally we are witnessing in the PSA, this is the particular counter also has shown a participation in those kind of a rally. Now, since the buying price is exactly nearby the CMP is almost 92 levels and currently the stock is trading at 107 levels, the short-term view will be little bit cautious because the stock is on the verge of giving the breakdown, but on the longer-term horizon, definitely my view is positive. If the client is looking for the trading perspective, I will suggest to book the profits, and if for the longer term duration, if you want to hold on, I will suggest to hold on by keeping a strict stop loss of 100 rupees on a downside. I'm looking for a pullback rally of at least 115 to 120 levels. So those are the target I'm looking for 2 to 3 months. So you may hold the long positions if you're looking for a period of at least 2 to 3 months. If not, then I will suggest to book the profits.
Okay, and did you give a stop loss?
Yes, 104 will be my stop loss.
Okay.
104 is the stop loss for PNB Bank. So that's the view with regards to where charts are concerned for PNB Bank. Our next caller, Arun, is calling in from Bengaluru. Arun, a very good morning to you. I believe you have a question on Vishal Mega Mart.
Right. So good morning, everyone. So my question was on the Vishal Mega Mart. So today, based on the bulk deal news I just bought in, I've seen the technical this thing as well. So I just wanted fundamental analysis how the Vishal Mega Mart looks.
Right.
I just wanted to check the target as well, target and stop loss.
Okay, got your question, Arun. I'll take this up with Asta. Asta, it's an interesting question for sure because the stock is trading today in the red because of the block deal that has taken place. The expectation was that the promoter will sell around 10% of the stake. Then the deal was upside. So roughly 20% of the stake is expected to be sold by the promoter. So that will bring down their holding from 74% to roughly that 54 to 55%. Just wanted to get your sense there. Plus, of course, 56% of the lock-in also ended today. So it's very likely that it's promoter stake sale only. And the other thing is that all these tier 2 cities tier 2 city based retailers have done very well, exceedingly well in FY25. What do you think should be the outlook for FY26? Do you think this kind of momentum will continue?
Yes, but today the kind of news flow which we have seen and what is happening right now regarding the block deal, that can be that is a major dampener. That is why we are seeing the prices falling because promoters selling a big stake or a big chunk is not always taken strongly or in a good way by the markets, and that is why we are seeing it falling down. But now if I look after other fundamentals, first of all, they have got a very high presence in the large pack SKUs, so that is very strong to them. In fact, in the private label space also, they have got connections with a very strong and the reputed manufacturers. So I think that is also helping the company. So yes, and they are getting now strong presence in the tier 2 space. So fundamentals are looking good, but when this kind of news flow comes, definitely it always lead the stock price falling towards downside. So maybe it can fall some downside more from here, but in the long term we are positive on this counter since the time the IPO came, and right now I'm maintaining my stance. This stock is poised for the upside of 135 to 140 in the medium to long term, so stay invested, but in the short term it can see some more downside.
Those would be opportunities, I would assume, to pick up further, right, Asta?
Right.
Yeah.
Right.
Okay.
Right.
Buy on dip strategy. Okay. An interesting question coming through from Balasubramanian, who's writing in from Bengaluru. And I think he's representing a lot of people that did subscribe to the Hyundai Motor IPO. It's a very large IPO and it was quite a bit of retail participation as well. But he has got 196 shares, he points out, through that IPO allotment. And from that date till this point, it's not really done anything. There you go. The screen tells you that it's just about recovered or very close to its issue price right now. So his idea is that he has 3.84 lakhs that he can pull out from this, and he can deploy it into something like a Tata Motors, which is down in the dumps as we've spoken about, or TVS Motor or Eicher Motors, and he's wondering whether he should do that. So Asa, we've had this conversation with another few market experts, and what they've pointed out is one of them said that they've actually gone out and bought Hyundai at this point, considering that it's out of favor. It has been. It's losing market share at this point. But at the same time, it's going to start production in a new facility down the line later on in this current financial year. And in the current facilities, it's operating at high capacity utilization. Its operating metrics look strong. So is there any reason to exit and move to other auto companies that might look better?
So right now, see, Hyundai, I tell you, first of all, the product launches pipeline is very, very strong. I think around 26 new products they are expecting to launch by FY30. So that seems to be very strong for this company. And now the company expects the volume CAGR to grow by 7% in the coming, years. Here, if I take about the Tata Motors, the same is the case when we listen to the management. Management was not very much optimistic about, volume CAGR growth. So I think I am taking these two cases together, and what I feel is that right now, although Hyundai has not given strong returns to the investors since the time of its IPO, but right now, rather than exiting from this counter and making entry into the Tata Motors or TVS Motor, the only problem with the TVS Motor is its high valuation. Otherwise, that counter seems to be very strong to us. So my idea here is exit partially or don't exit at all. These are the two options which I can recommend right now, because rather than exiting and making entry into the Tata Motor, this does not make any sense. Keep invested in the Hyundai Motor only, because if the company will be talking about its product launch pipeline, it is very strong. In fact, their new Pune plant is also the start of new Pune plant will also give very strong, impetus to the company. So overall, stay invested in the Hyundai Motor with a price target of 2,000 and 2,100.
Okay, so only because it's a pretty considerable amount that he's investing, I want to drive home this point. If I were to ask you on all metrics put together, valuations, earnings potential, and market share, all of that put together in the automotive space, and I will extend that to the auto anc space as well, auto ancillary space as well. Which, according to you, is the top bet? Is that Hyundai at this point?
If I have to select my options among these two threes, then yes, Hyundai is there. And in the total automobile space, if I'm talking about, then I think yes, other automotive counters like Maruti also looking good to us, but in the longer term. So among these three stocks, I think Hyundai Motor is my top pick. But among all the other, automobile space, if I talk about, then M&M, Maruti, these two counters are also looking good to us.
And just to then wrap up the conversation on automotive, Swati, you heard this entire conversation. How would you play this on technicals?
Yes, on the technical front, I believe definitely he should stay invested into the Hyundai itself compared to the Tata Motors, because there are a lot of news are flowing into this particular counter. No wonder on the technical pattern, the Tata Motor is trading at the lower level compared to the Hyundai. But I believe the fundamental reasons will play a very strong momentum rally on the technical front as well. So better to stay invested into the Hyundai compared to the Tata Motors. For a longer term on the technical front, I believe that if it's clear this 1970 levels on the high side on the closing basis, then 2050, 2100 levels can be seen very soon. So the overall view on the positive on the Hyundai will be a positive, and one should stay invested in this particular counter.
Okay, all right, so comprehensive view, not just on Hyundai, but on the automotive space as a whole. And this is the reason why you should continue watching Ask Profit. We don't just give you a short answer to a question, we give you a long answer where it's required. We have to slip into a very quick break. We've got more stocks that we'll discuss on the other side, so do stay tuned.
That's huge. That is a biggie. It's on.
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis. Conversations that matter. We break it down, cut through the noise and set the context for you. Hear from top policy makers and thought leaders from the world of business and beyond. The big question really is, are companies using dark patterns to take you for a ride? The big question we're asking today, is the US heading towards a recession? The big question is, are we sacrificing our health at the cost of convenience?
The questions you care about, asked and answered. The big question.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we
Welcome back. You're watching Ask Profit, a show that gets all your stock-related queries answered. For viewers who are just tuning in, you can either call us or WhatsApp us on the numbers that are flashing on your screen right now. All right, we've got our next caller. Paramjeet is calling in from Himachal Pradesh. Paramjeet, a very good morning to you. How can we help you today?
Good morning, madam. I'm having 400 shares of eMudra at the rate of 730.
Okay.
Want to know long-term as well as short-term view.
Okay. Okay, I got your question, Paramjeet. I'll take this up quickly with Swati then. Swati is holding eMudra 400 odd shares at 730. What's the outlook like where charts are concerned from a longish period perspective?
My view is a little bit cautious to bearish. I will suggest to exit the long positions at the current market price because the counter is trading in a low top, low top, bottom formations in a downward rising channel. No sign of any reversals from the current level. It has given the breakdown of the cluster supports levels of 735 and trading below that levels. I believe that if today it manages to give the closing below 730, then more selling pressure is likely to be intensified and which might take a counter towards to 710, 700 levels. So view is cautious. Try to exit the long positions at the current market price.
All right. So that's with regards to where charts are concerned for eMudra. Our next question is a very interesting question. The question is is in fact from Devender, who's writing in from Hyderabad. He's asking if he can make an entry in any of the consumer discretionary stocks from a longer term perspective where valuations at present are looking attractive. I'll come to you on this one, Astha. A lot of positives coming in for the consumer discretionary space. You have your tax rate cuts, your overall income tax rate cuts, plus there's 8th pay commission coming in. The expectation was that this will boost consumer discretionary as a space. Any particular counter that you think is attractive enough to enter right now where valuations are concerned?
So I think first of all, Blue Star is looking good to us. In fact, this is the counter which we like in the consumer discretionary space from last few months. So Blue Star is one of the counter, although it is down today, but I think in the longer term, it can move to the level of 1800 to 1900. So Blue Star and Voltas, these are some of the stocks which have started gaining momentum in the last few days. So this is one the space which we are liking right now. Another stock is Banco Products. In fact, that counter is also looking good to us. So these are 2-3 stocks which we are really liking in the small and mid cap space in the consumer discretionary space.
All right. So that's with regards to where, in fact, the counters that Astha likes in the consumer discretionary space. All right. Our next caller, Kaushik, is calling in from Hyderabad. Kaushik, a very good morning to you. How can we help you today?
Yeah, thank you for taking the call. So I would like to know if it is the right time to enter some pharmaceutical industries. As recently, US FDA has issued a Form 483 with 8 observations for its halal facility in Gujarat.
Right.
So the stock went down to 2% today. So I'd like to know if it's the right time to accumulate the stock.
Right.
for a long-term perspective.
Okay, got your question, Kaushik. I'll take this up with Asta. Asta, do you think Sun Pharma is the right counter to invest in right now, or any other in the pharma space that you like?
So I think one can make investment in this counter at the lower levels. And if I talk about the fundamental of this counter, I mean now they have started their reducing their dependence on the US generics, which seems to be very good, and there is a good strong growth visibility from the domestic space. So this is what we are liking about this company. And in fact, I think right now the kind of news flow it is having, maybe some more downside we can see, but that are the good levels to make entry into it. Maybe 1630 or 1620 are those levels where one can make a fresh entry into this counter as well.
Okay. We've got the next question from Jeevan Muddaji, who's writing on Canara Bank. And incidentally, on the banking space, I found it quite interesting. Earlier, we were talking about PNB, where we were talking about PNB Bank. It's like seeing Punjab National Bank. But if you think about RBL Bank, it used to be Ratnakar Bank Limited, right, and now it's called RBL Bank. So that's kind of a theme in the banking space. Anyway, Canara Bank is the name of the counter that we're talking about next, and the price is 91.81. And Jeevan wants to know what the long-term target should be. He's in the green right now. Asta, Canara Bank specifically, what's the view?
Canara Bank's view is positive because what we have seen that there is a strong improvement in their PCR ratios. Their asset quality have shown up very, very strong and healthy, figures. GNP ratio, if I talk about, so in fact, asset quality has improved a lot. And in fact, their margins are stable and healthy. So I think Canara Bank is a good bank to stay invested in. Price target at the initial level is 120 to 130, but these are initial level. In the long term, the stock can move till the level of 135 to 140 also.
All right, so that's with regards to where Canara Bank stands. Our next caller, Mansingh, is calling in from Andhra Pradesh. Mansingh, a very good morning to you. I believe you have a question on Avanti Feeds today.
Good morning, madam. Thank you for picking my query. Madam, I am holding Avanti Feeds, madam. Should I book profit and want to invest in PG Electroplast?
Okay.
Is this the correct level to enter into PG Electroplast, or should I continue to invest in the Avanti Feeds, or should I book partial profit and park that money into PG Electroplast or Adani Power? Please suggest me.
Okay, I got your question, Mansingh. Just want to understand what's the kind of time period that you're looking for?
I'm 1 to 2 years, madam.
1 to 2 years.
I'm holding this Avanti Feeds last 2 years, madam.
Okay. Okay, got your question then. I'll take this up with Asta. Asta, should he book partial profits? He's sitting on a profit of 27,000 odd rupees right now and enter into something like a PG Electroplast, or book full profits?
Partial profit booking is recommended for this counter because in the Avanti Feed results were strong. 41% growth in the bottom line of Q4 FY25 they have shown. So I was very much convinced with the results, and that might be one of the reasons that we have seen the stock prices momentum in the upward direction. So partial profit booking is recommended for this counter, and one can really make profit booking at the current levels also.
We've been contemplating starting a new sub-segment at the start of the show where we ask our fundamental and technical experts to give their recommendations on the day, their top fundamental buy on any given day, and the technical buy calls. So let us know if you'd like us to introduce that segment. The reason I'm asking that is because incidentally the next question is just such a question. So Kundaviti Srinivasa Rao is asking about today's stock recommendations, and he's got a short-term perspective that he's looking at. So Swati, on the charts, what are the top buys right now?
Currently on the technical front, Time Techno really looking very good. Why so? Because the daily chart shows that the stock is well placed above all the important moving averages, 50, 100 and 200 EMA. Also, the interesting fact, it has given the breakout of the flag pattern on the daily chart, which gives a very strong indications on upward rally. Currently, the counter is trading at 448, 449 levels. By maintaining the strict stop loss of 425, I'm looking for a target of at least 520 rupees on the higher side. So it's one of the strong counter to take a buy call on the technical front.
All right. So that's the view on Time Techno. That is the suggestion that Swati has. Lakshmi is calling us from Hyderabad. Lakshmi, very good morning to you. How can we help you today?
Good morning all. Thanks for taking my query. So I am holding 2,000 Tanla shares at an average price of 640 rupees.
Right.
So I heard there is a buyback, announcement at 875 rupees. So I would like to know whether to, hold it or to just sell and book profit. I am looking for a very short term, like 1 week to 10 days.
Okay, so let me get this straight.
Yeah.
You're not looking to offer your shares in the buyback, right?
No, I am just wanted to,
Book profits.
sell it off in like 1 week to 10 days.
Okay. So let me ask Swati the short-term time frame. The stock is up and about in trade today, 4% higher. Is there potential for further upside?
Yes, definitely there is a potential to see a upside rally at least towards 720 to 730 levels on the high side. But the main concern is that the stock is trading in the overbought zone, and even the client has a good amount of a profit she is earning. I will suggest to book the partial profits, not to take much more risk at CMP. Another half you can hold on by keeping a profit stop loss of a 650 on a downside and hold it for a target of a 740 to 750 levels on the high side.
All right, so that's with regards to where Tanla platform stands. Our next question, we've taken this. Our next question is from Shweta Kohli, who's writing in from Gurugram. She's holding Indus Tower at 380 a piece and wants to know for the next 3 odd months, what's the outlook like? Swati, I'll come to you on this one. What are the charts indicating for Indus Towers?
On the Indus Tower, yes, we have already seen a very good amount of a rally in the month of the May thing from the 350 to 420 levels. But currently the counter is also, the strength is remaining intact. We have seen that the stock manages to take a cluster support of a 370 levels. And there again, we are witnessing a upward rally on the higher sides. As of now, yes, stock is on the verge of giving the breakout of the downward sloping trend line. Very soon, if it manages to give the breakout of 400 levels, upside momentum can be seen towards to 420 to 430 levels. The interesting observation that it is under the consolidation phase, and after the consolidation breakouts, we are likely to witness a very strong momentum rally. So I will suggest to hold on your long positions for a target of 420 to 440 levels on the high side.
So that's a view on Indus Tower. Hope that answers your question. We've got a next caller from Chennai. Anbu is calling us. Anbu, very good morning. How can we help you today?
Good morning, everyone. Hi, I'm holding a 509 shares of JSW.
Okay.
Average of 529. Actually, I'm looking for outlook of 1 year's time. I just want to know information.
Okay. Anbu, before I get to that, can you tell me how to say good morning in Tamil?
Vanakkam.
Vanakkam. Okay, Vanakkam. All right, I will remember that. The next time you call, I will say Vanakkam. All right, so, and you've got a 1 year time frame, right?
Just 1 year time.
Okay, all right. Swati, I'm coming to you on this one. JSW Energy is the name of the counter. 529 is the buy price. What's the 1 year time frame, as in target?
Yes, the view is positive for longer term horizon, Alex. Why I'm saying that if you look towards the 2023 rally, whatever we have witnessed from 2,200 levels to 780, the stock has retraced almost 61.8%, which is the golden ratio of the Fibonacci retracements, and it manages to take a very strong support of a 440 levels. Now it is in a sideways momentum. As long as it holds that level 440 levels, very soon we are likely to see a strong momentum rally if it manages to give the breakout of a 520. Which is acting as a cluster resistance zone on the monthly chart as well. Any move above that level, we are likely to witness a very strong momentum rally towards to 590 to 620 levels on the high side. So for the year end, so I believe that the 620, 640 levels can be seen. So you can hold on the long positions for a 1 year end.
Okay, so that's with regards to where JSW Energy stands. Our next question is from Chintala Pudi, who's writing in from Andhra Pradesh. She's holding, he or she is holding.
No, Shekhar from Chintala Pudi.
Chintala
Pudi is the name of the place.
My bad. All right. Okay. Okay, I certainly don't know where this is exactly in Andhra Pradesh. Though I have, my mom's from Andhra Pradesh, but
shame on you.
I need to.
Shame.
Anyway, Shekhar from Chintala Pudi, Andhra Pradesh, is writing in and holding 450 odd shares of SJVN, bought at almost 100 rupees a piece, and wants to know if he can sell, hold or buy at the moment. He's not given his time horizon so far, but Asa, I'll come to you on this one. SJVN, what's the outlook like?
Outlook is positive for this counter, so I recommend hold among these three options: buy, hold and sell. Hold is the recommendation from our side with a price target of 110 to 115 at the initial levels.
Well, it's happened to me as well. We have a viewer from Karnal and I kept calling him Karnal. So it happens. It happens. I'm sure our viewers will forgive us these small lapses. Ram is calling us from Guntur. Ram, very good morning to you. How can we help you today?
Good morning. Good morning.
Please go ahead.
My query regarding the Rapti infrastructure.
Okay.
I purchased 10,000 shares at the rate of 508.
Okay.
In the month of April.
Okay.
And I hold up to 3 months continuously. Or can I book profit?
Okay. What was the thinking, Ram, when you bought it in April? It seems like a very good buy price. What was the trigger?
Hello?
Yeah, can you hear me? I'm asking, why did you decide to buy 10,000 quantity in April?
I am very interested in the real estate company.
Okay. All right.
Hyderabad based mainly.
Right.
But I am a native of AP.
Understood. So you bought it for fundamental reasons, but you made a sizable amount of profit and you wonder whether there is further upside in the next 3 months or to book profit right now. Is that correct?
Okay.
Yes, okay, all right. Swati, the question is therefore to you, 10,000 shares is a pretty large quantity, bought at 508. Should he book profits at this point or hold for 3 months?
The counter is trading nearby the buying price itself and he has a very huge quantity. I will suggest the view is definitely positive, but looking towards the quantity, I will suggest to book the half profits because 508 levels daily we are witnessing in this particular counter. So try to churn your principal amounts and you can earn the good amount of profits. So at the current market price, you can book your partial profits very soon. If it manages to give the breakdown of 505, you will get a more downside towards to 480 levels. You can add on those quantity at the lower levels. But the long-term horizon definitely view is positive. 530 is the initial resistance level. If it's break that level, then 560, 570 levels can be seen very soon. So partial profits book profits are recommended at the current market price. Second partial you can hold on for a target of 540 to 570 levels.
Okay, so that's with regards to where Ramke Infra stands. Our next question, it's from Rajesh, who's writing in from Bengaluru and wants a view on Azad Engineering, who's holding 150 odd stocks bought at 1,300 rupees from a longer term perspective. Asta, I'll come to you on this one. He's sitting on profits of 51,000 odd rupees. Do you suggest that he should continue to hold or what's the view like?
So Azad Engineering, we are liking this counter and we are recommending a hold on this counter with a price target of around 1,700 to 1,740. What we are particularly liking about this counter that the kind of order book they are having, in fact, the margin profile is looking very strong to us. And going ahead also, we expect the company to grow at a CAGR of 10 to 15% in over the time period of 2 to 3 years. So idea here is to stay invested, although short-term price target can be kept at around 1,700 odd levels.
Okay, so that's with regards to where Azad Engineering stands, and hold is the view coming in from Asta from a longer term perspective. All right, our next caller, Asif, is calling in from Patna. Asif, a very good morning to you. I believe you have a question on Geo Financial.
Yes, ma'am. Good morning, ma'am.
Good morning. Go ahead with your query.
I have Geo Finance at 200 quantity. I have at 243 rupees average.
Okay.
And I already have 10k profit. So I want to know, what is it right time to buy more? Maybe almost double or 200 share more I want to buy.
Okay, and this is from a short-term perspective or would you want to continue to hold this? Long-term perspective.
Long,
okay.
Maybe 2 year, 5 year anyway.
Okay, got your question, Asif. Then I'll take this up with Asta. Asta, he's sitting on profits of 10,000 rupees on Geo Financial and he wants to double his current holding and average out. What's the view like?
So view is positive because what we have seen a very strong set of numbers. In fact, they have got their customers more than double to around 2.31 million. And the Q4 FY25 was a fantastic quarter for this company. But we believe that, in fact, in their financial performance also, that rising interest income is really helping them, apart from the fact that they are launching new innovative products. So yes, one can make a fresh entry, but at the lower levels, or can accumulate the stock at the lower levels as well, at around 270 to 275 odd levels. But stay invested for the remaining quantity with a price target of around 330 to 340.
Okay. So I'm getting a few suggestions on message to say good morning in different languages, and apparently Tulu is Solmelu. I hope that you're not getting me to say something wrong. Ranjan, it is my fervent prayer that you're not asking me to say something wrong on national television. All right. The question is on Bajaj Finance. And the question is whether or not it should be accumulated at this point. Of course, yesterday is when it traded X split and X bonus, and so therefore the price change is quite dramatic. It is now available at 924 rupees a pop. So the question for you, Asta, is considering that it's more affordable right now, a lot of people were not able to buy a significant quantity. Is this the moment that you start doing that?
Yes, because credit cost, which we are expecting to get moderated, and in fact, the NIMs, whatever this company is posting right now, is also, we are expecting NIMs to improve on the basis of the interest rate cut cycle, which we are presently into. Asset quality is also at a stronger side or a decent side. So overall, I think this is the quarter which one can make a fresh entry as well as remain invested. So both are the recommendations which we are recommending for this counter.
All right. Our next caller is from Bengaluru. Vikram is calling us. Very good morning, Vikram. How can we help you today?
Namaskara, Alex.
Namaskara. Please go ahead.
Wonderful. Alex, I have 700 shares of Science Limited, which I bought last week at a price of 1,330.
Okay.
And I follow the show regularly, and this was a recommendation I picked up from Mr. Tokit in one of the conversations last week.
Yes.
I just want to understand if this is something that can be held on for a term of 3 to 6 months, and what is it that could be expected on this one?
What is the potential upside? Because I lost your voice for just a short while. Okay. All right. So 3 months. And I'm glad that you're already making a small profit. Let me go across to to Swati for the view on the charts, because our panelist on the show, Mr. Choklingam, has a very high degree of conviction on this, on the fundamentals for the long term, and so he's advocating. He says that he has asked his clients to buy. He's also pointed out that he doesn't hold it himself. But on the charts, would you hold on to this, and what is the kind of level that you would watch on the upside?
Surely, Alex, definitely the view is positive. Why so? Because after a sharp correction in the mid of 2024 to the start of 2025, we have seen a correction from 2,200 to almost 1,100. And from there onwards, we are witnessing some sort of a reversal signs on the technical front as well. The stock has came above the oversold zone, which indicates that the downside is limited. And at the current levels from the last 3 to 4 weeks, we are witnessing a strong consolidation phase. Now the stock is consolidating with a range of 1,300 to 1,400. Any move above that level will witness a very strong momentum rally towards to 1,600 to 1,800. So those are the targets we are looking on the technical front over a period of 6 months. So the view is definitely positive. One should definitely hold on the long positions. If you want to keep any stop loss downside, it has a very good support at around 1250 levels. So by maintaining that as your stop loss for a long positions, you can hold on for a immediate target of 1,600, and beyond that 1,800 levels can be seen.
Okay. All right. I'm coming back to you on this one, and it's relatively time sensitive, which is why I'm coming to you. Venkat from Andhra Pradesh wants to deploy 15 lakh rupees. It's a sizable quantity to buy DLF shares for a period of 6 months. I want to actually pull up the shorter term time frame. If we can pull up the last 3 months on DLF and see what the kind of move has been, because the entire pack has made a strong recovery. There you go. So 31% upside over the course of the last 3 months. Would you buy at this point though, or would you split your buy among a few other real estate players if you do want to play that real estate theme, Swati?
Yes, definitely. I will not suggest to take a long positions in a one shot into the DLF at the current market price, because from the last 3 years, week back or three weeks back only, the stock has given the breakout of a 750, and from there onwards we have seen a very swift rally towards to 900. So at the current level, the risk reward ratio is not favorable at the CMP. No wonder from the last 1.5 week, the reality packs are really doing very well. Majorly the small caps are doing really good on the reality packs. DLF, I will suggest hold for some more time. If you have witnessed any correction between the 780 to 820 levels, those are the good support zone for this particular standard. Try to add on the quantity, but not the lump sum quantity. I will suggest to 15 lakhs in a one sector itself. Try to diversify your funds. Any another counter looks interesting on the reality is the DB reality. This particular stock is also looks very good. Buy on dip strategy should be implied, because from the last 2 weeks we are continuously witnessing a very strong rally rally. Try to deploy the another funds into the banking counters and the IT packs. Those are the really good counters which will give a good amount of money from the IT pack, Tech Mahindra and HCL Techs, and from the banking sector, Axis Bank and the SBI. Those are looks very promising on the technical front. So try to diversify your capital into the different sectors so that your portfolio get hedged and you will not face major risk if you entered into the one sector itself.
Okay. All right. Our next caller, Murli, is calling in from Bengaluru. Murli, I believe you have a question on TVS Holdings.
Yeah. I bought TVS Holding. Good morning.
Good morning.
I bought TVS Holding, 25 shares at 11,010.
Okay.
I analyzed everything compared to Bajaj Holdings also.
Okay.
In all parameters, TVS Holding scores.
Okay.
As far as financial performance is concerned, ROE, dividend, and they are in the same industry. Our holding companies, the subsidiary companies are similar, the auto and finance.
Okay.
If I want to add more, whether I should do TVS Holding or to diversify, I should go for Bajaj Holding.
Okay.
I have one already in TVS Holding.
Got it. Got your question, Murli. I take this up with Asta quickly. Asta, I'll come to you on this query particularly. He's holding 25 odd shares of TVS Holding already. Should he continue to add more on this or should switch to something like Bajaj Holdings?
So I think, in fact, he has shown very, various merits about this company. And one merit or positive is that its valuation is also very strong. They are trading at a price to earning multiple of around 19, where the industry price to earning multiple is more than 20, 30. So in fact, the valuation seems to be okay. The only concern about this company is that the promoter pledging is there, if I remember it correctly. So the promoter pledging, and that is more than 5-10%. So that is the main concern for this company, and that's why I want him not to add more, because the financial performance was good. But I think it's better to stay invested in the quantity which he is having right now.
Okay. Yeah. Pledge percentage is 14.4% from what I can see. All right. We have to, Murli, apologies, we have to rush your question, but we have to hit the rapid fire round. And the first question that comes through on the rapid fire round is on GMM Fowdler. Ashok from Bengaluru is asking this question. Bought at an average price of 1,396. Should he add or sell at this point? Swati on the charts.
Not to add at the current market price, hold your long positions. The immediate target will be at 1200 and beyond at 1240 levels come see.
Okay, the next question is on L&T Finance. Reena from Mumbai is writing in. She's a senior citizen. She's already holding 2,000 odd shares at 150. Should she continue to hold this for the next 6 odd months? Swati on the charts?
Yes, definitely she can hold on the long position. Stock looks very promising. 210, 240 are the likely targets. If you want to keep a stop loss, 180 is the very good support. So by keeping that as a stop loss, you can hold the long positions.
Asta Aarti Drugs is the name of the counter. We've got Mr. Sudhakar, who's bought 246 shares over a period of 2021 to 23. He's asking, should he hold, average, buy more?
Hold is the recommendation because performance was strong. 30% rise in the bottom line in Q4 FY25 was strong. I think hold is a better strategy with a price target of around 490.
Okay, Sanjay, who is holding shares of GE Shipping at 998 a piece and wants to know what should he do next for this particular counter. I'll stick with you, Asta, on this one, especially with the Iran-Israel conflict perspective.
I think hold is a strategy for this counter. Although financial performance was not on the very strong side, but I think industry tailwind is still there. Hold is the recommendation.
Okay, Kirti Vasan wants to know about Triveni Turbines, bought at levels of 650 rupees per share. He's asking when it can break out of the range that it seems to be stuck in. Swati, what's the potential upside? Would you hold?
Yes, I will suggest to hold on the long position. 640, 660 levels can be seen as long as the stock maintains a trend above the 580. Those are the very strong support levels. So it's all from my.
Okay, Giri from Bengaluru is asking about BEL. His average cost price is 280. Wants to know if he can hold for the next 6 odd months. Swati, I'll again come to you on this one.
BEL definitely it's a strong contender. This particular stock we are witnessing very strong momentum rally. 440 is the likely target very soon. 385 is the crucial support level. So hold the long position by keeping that as a stop loss.
Okay, we're completely out of time. Swati, Asta, thanks so much for joining us today. Viewers, it's been an absolute pleasure. Do stay tuned. Up next is Know Your Company, and this is NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis, conversations that matter. We break it down, cut through the noise and set the context for you. Hear from top policy makers and thought leaders from the world of business and beyond. The big question really is, are companies using dark patterns to take you for a ride? The big question we're asking today, is the US heading towards a recession? The big question is, are we sacrificing our health at the cost of convenience?
Hello and welcome. You're watching KYC. Today we have an interesting company for you. It's in the wiring segment and it makes steel wires. Now what I want to know about Bansal Wire Industries is that they follow a cost plus model. So how powerful is that? Because you are basically going away from any raw material cost inflation which might eat into your numbers and your margins. Is this a sustainable model? One. Second, is there still some bit of risk, if any, from raw material pricing? If there is an inch up in raw material pricing, does that dilute your margins? That's what I want to understand. And how much of that is built in to your contracts with your customers. So a little bit around that, I believe that could well be a risk because the margins are single digit, mind you. Any piece of that hurting margins could well hurt the numbers in significant fashion. We haven't seen it yet in the last 4 years that we've looked at the data for, but it could happen. And that's what I want to understand, what the risk of that is. The second one is the geopolitical risk. Everything that's playing out in markets currently has the geopolitical risk if you are export facing. Bansal Wire does do exports and therefore could that be a very real risk is what I'd want to understand. The third one is their FY26 strategy. Now this is where it starts getting very interesting. Now Bansal Wire Industries has suggested that FY26 will be a tough year, it will be a muted year. And while volume growth will be the focus, margins will not expand, and therefore they are saying that we will keep this year more focused on market share acquisition. Can that in a significant fashion really aid market share and aid the FY27 numbers? Can this strategy play out? What is the downside risk of this strategy? And what is the rationale behind it is what I'd want to understand. Now, product mix. Post this strategy push, is there a change in product mix? And I want to understand this because the margins on each of the products is very different. And that's where, again, it's fascinating because you could well push one product with a higher margin, which could lead to a substantially different
margin picture FY27 and beyond, and therefore profits will just be in another orbit if that were to happen. I want to understand whether that upside possibility is there. Now, FY27, therefore, what should we expect overall, both in terms of top line growth, margins, volumes, and what will backward integration really bring? Because they are going into backward integration and they're saying that that cost control should aid the numbers going forward. But how much of that, how much do raw material prices stop mattering, and how much therefore does that give or lend to margins? Is so a lot of these questions is what I want to understand and try and break down. Let me first start off with what Bansal Wire Industries does. It's a manufacturer of steel wires. I did indicate that. It's the largest stainless steel wire manufacturer in India. It's the second largest steel wire manufacturer in India. The products cater to diverse industries, automotive, infra, even aero for that matter, and general engineering really. So it's a diverse set, and we'll talk a little bit about industry-wide as well as to how the split in terms of revenue across industries is looking. It's fairly diverse, and that will give you a better understanding. But it's setting up a stainless steel manufacturing facility for wire rod manufacturing. Now this could be again one of those business changes which could aid the numbers significantly going forward. So you want to look out for all of these. But let's first talk about the journey of the company. It was incorporated in 1985. In 1995, it added the stainless steel wire production line. It also commenced the manufacturing of galvanized wire in 2003. 2007 commenced high carbon wires production. Now I'll explain what each of these products is, but for now we're just going through the journey. The products in automotive industry was started in 2015. 2022 it commenced the infra for the Dadri plant, which is significant expansion. It acquired Bansal Steel and Power in 2023, IPO'd in 2024, and in 2025 January we have the Dadri facility which has commenced operations. Now I want to talk to you a little bit about the products, because what exactly is steel wires, right, and where is it used? So there are three types of steel wires that Bansal Wire Industries manufactures. The first one is high carbon steel. This is extremely strong steel. It has a very high carbon component in the steel wire. It's the stronger option where steel wires are concerned. So whenever a steel wire ought to be used, say for example for a bridge, right, you would want something which has very high durability and very high strength. This is where you use a higher carbon within your steel wiring, which is what high carbon steel wiring is. This also in terms of pricing happens to be the most expensive of the steel wires that you have. So again, something to keep in mind. We'll also look at the EBITDA and the possible margins on each of these products. But first off, let's understand the other two. You have mild steel wire, which is a lower carbon within the steel wire complex. There's a lower carbon component, and therefore it's slightly weaker than the high carbon option that you have. It is used where lower stress is required. It could be certain components within the auto space where you require lower stress, but at the same time you require steel wiring. So maybe that is one place of use. The last one is stainless steel wiring. This is corrosion resistant, and this becomes important because steel in general will corrode, but stainless steel will not. And again, you will have more versatile uses for a stainless steel wire than a mild steel or a high carbon steel. So all three very different uses, and at the same time you have these three products across categories. Now let's talk about the pricing here. And again, this stands out. Okay, so first let's talk revenue. Look at the diversity of the revenue, of the total cumulative revenue pie that there is. There's auto, which is 9%. Then there is general engineering, which is 12%. There is 19% in consumer durables. So you have a fairly large mix and a fairly wide 19%, I beg your pardon, in auto. General engineering is 12, infra is 11, hardware is 9, durable is 9, power transmission is 6, agri is 5, and then you have other component. This is as per a DAM capital report, so I want to quickly caveat that as well. Now let me talk about the EBITDA per ton for each of the products that they manufacture. This is the EBITDA per ton, so very high for high carbon, 11,000 rupees per ton, 4,500 for low carbon. Stainless steel is 7,000 rupees per ton. So that's the EBITDA per ton. And if you're looking at the margins as well, the margins are sitting at 14% for high carbon, low carbon is 6.3, and stainless steel is just 4.5. So again, that's something you want to look out for. There's backward integration happening, and we spoke about this a little bit. There's a 1.8 lakh ton induction based steel plant, 60,000 tons of low carbon and stainless steel wire manufacturing capacity is going to come up, and you have with steel which is going to be made from scrapped steel. So there's going to be smelting, or rather melting and casting, which is going to happen of scrapped steel, which is going to be used for the purpose of production of steel wires. Also, they're producing wire rods from the newly made steel. This will be commissioned only in FY28, and it increases stainless steel wires EBITDA by rupees 4,000 to rupees 5,000 per ton. Mind you, the stainless steel wires EBITDA per ton is 7,000. So this could well be a large inflection for the stainless steel part of the business. And this is where you want to also tie up what I mentioned earlier, the product mix. Because if the product mix were to evolve by FY28, then you have this very large stainless steel capacity, plus you have stainless steel EBITDA per ton going up. Both of those could well lead the numbers higher, FY27 of course, but FY28 as well. So all of this is what we'll try to quiz management on, because a lot of this is forward guidance. But let's talk about the metrics first. The metrics with regard to a Bansal Wire Industries, I'm going to start off with the income statement, the balance sheet, the cash flow, the return ratios. Thereafter, we look at shareholding, street cred, valuations, and street coverage. We look at all of the 8 parameters, and we'll assess and judge where it fits on our KYC ratings. Let's start off with the income statement. You're looking at the 3-year top line, which is compounded at 17%. Not bad at all, 17% CAGR. And mind you, it was unlisted for 2 out of those 3 years, right? So it's listed only for the last less than 12-month period. So you want to, again, keep that in mind, because there's good growth even during the unlisted period of the share. Let's talk also a little bit about the EBITDA. The EBITDA is up 36% on the 3-year CAGR basis. A large part of that came in FY25. Your margins have gone up from 4-5 odd percent, 6% in FY24 and 8% in FY25, nearly 8%. I would say 7.7% to be absolutely precise. Let's talk about net profit as well. 37% growth. That's what's driving PAT growth. The EBITDA is driving it. 37% up 3-year CAGR. So again, strong growth in terms of profitability as well. A lot of it back-ended, mind you, in FY25. You look at that margin jump, a lot of it has come in FY25, something you want to be cautious about, but it's a strong growth nonetheless. So a thumbs up with regard to where your margin as well as your top line picture goes in terms of growth. Let's talk about the balance sheet now. The equity share capital has gone up. It went up in FY24 pre the IPO. It went up FY25 as well post the IPO. Now you have the book value sitting at 1,268 odd crore, but you look at the borrowing has gone up. The borrowing has gone up, or rather currently sits at around 500 crore when I'm talking about short-term plus long-term borrowing. So both of those numbers are currently sitting at nearly 500 crore. Something you want to keep in mind when you're looking at a company of this size, that the debt to equity has gone up. Yes, they are doing capex, but the debt to equity has gone up. You want to be careful at this point with regard to a company like that. Let's talk about cash flow now. The cash flow, again, very interesting picture. The cash flow from operations has actually turned negative in FY25. And 2 factors I'll quickly list down as to why that is so. One, you have your receivables which have gone up substantially, and I'll enumerate that for you. 21 crore negative is the impact of receivables on cash flow from operations. Receivables have gone up FY23 versus FY24 by 21 crore and then by 173 crore between FY24 and FY25. Inventory as well from negative 11 has gone up, in FY24 has gone up by around 11 crore and then in FY25 has gone up by 224 crore. I want to understand as to why that is so and whether that unwind on both receivables as well as inventory happens in the current financial year, which is FY26. And therefore that negative working capital change in FY25 has gone up by 280 crore nearly, which is what is impacting your cash flow number in a significant fashion. So that's why you're seeing that negative 100 crore cash flow from operations, which is sitting in your cash flow. Your profit after tax though has gone up decently. It's at 269 crore. Your net cash flow not as relevant because you had all these fundraisers, you had these debt repayments, and you also have new debt which you have raised and the capex that you're doing. So all of that has gone into the net cash flow, which is currently nil or whatever, very, very small, both in FY23 and 24 as well. So not as relevant for such a high capex kind of business. Let's talk about return ratios now. Again, when you're looking at the return ratios, it's largely been steady, 14 to 16 odd %. That's good, right? That's positive. But can I go towards 20% from here, or will I maintain that 15% kind of number? 15% checks the box, there's no doubt about it, but can I go higher is the question as I scale up. So that's a question which we will try and understand, and that may not happen this year or maybe even next year, but could it happen in FY27 or 28 is really the question. So we'll have to wait and watch on that. Let's talk about shareholding now. You're looking at 78% of the shareholding held by promoters. Mind you, this company listed in July of 2024. So I don't have a large comparable in terms of the holding for promoters earlier versus now. Are they diluting stake? Well, none of that. They will have to dilute stake to a certain extent, and their lock-in completely expires in January of 2026. That's one date you want to keep in mind. When lock-in expires, you will see promoters dilute likely at least a little bit. They'll be forced to dilute because they have to dilute to 75% at the very least. What they do thereafter will be the question. But for the moment, there's a decent promoter holding at least already built in. So again, that's something you want to keep in mind, and look at the DII holding as well. Invesco India Manufacturing Fund holds around 3.6% in this company. That's the other piece that's standing out. Not too much public interest. That's the other thing that's standing out. So 3-4 pieces which are looking quite positive where shareholding is concerned. Now let's talk about street cred. And again, this is a tricky one because there's just 9 months of data available to me, right? So let's look at the IPO price. It was 256. Currently, the stock is at 370 rupees a piece. So plenty of value left on the table by promoters. Again, that's a thumbs up. I would treat that as a thumbs up. While the year-to-date returns are difficult, and since the listing as well, it listed at 356. So substantial value unwind happened there itself. But it currently has given only an 8% return to investors post if you have been a buyer from the listing date. So that not looking too good, but I would rate this more from a promoter perspective that they've left plenty of value on the table for investors, and we look at the valuations as well because that will also give us a decent indication of this. So once I've put that out of the way, now let's talk a little bit about valuations itself. Now you look at the EPS estimates. This is the average EPS estimate by analysts, 10.8 and 16. That brings the FY26 expected price to earnings at 35 times currently, and price to earnings FY27 at 23.5 times. The IPO valuation suggested 26.5 times 1 year forward, which was FY25 valuations. It listed in 2024 July, and therefore when I'm looking at FY25 valuations, it was trading at around 26 times basis the 250 rupees price that they listed at. So that's one thing that I have my eye on, and therefore your valuations don't leave too much room for positive surprise, and therefore we're giving this a neutral unless the numbers change, of course, and that will be something that we will ask and quiz management on. Let's look at analyst recommendations. There are 3 buy calls, no hold, no sell, potential upside 22%. So very, very strong upside that we are seeing on this. But just 3 analysts, 1 has not rated it, but 3 otherwise have rated it a buy, and a 22% upside is what they are seeing. Let's quickly go through the ratings, therefore. Let's sum it up. Let's put it all together. Revenue, revenue is a thumbs up. Income statement, balance sheet, cash flow, return ratios, that's how it stacks up. Shareholding, street cred, valuation, street coverage. And that gives us a 4.5 out of 8 on our KYC rating for Bansal Wire Industries. Let's go across to Pranav Bansal, CEO and MD at Bansal Wire Industries, to talk to us about how he sees the business and what to expect going forward. Good morning, Pranav. Pranav, I want to start off by understanding from you as to how much of a correlation or impact does raw material price increases have on your business? How sustainable is the cost plus model that you adopt? How much of this is built into agreements is what I want to understand.
Yeah, hi. So, in the last 85 years of our business, I am the 3rd generation now of my family in this business. And all along, we have tried to maintain a cost plus model in our industry because raw material accounts for a major part of our total cost. And we have done a lot of diversification strategy in our suppliers, wherein we are always able to maintain, kind of flexibility there, and which you will see in our past as well. But no matter how raw material has behaved, we have kept an intact margin.
That, Pranav, give us some understanding, some color.
Can you say that again?
How have you managed to do that? Is it on the basis of some agreements that you have with your customers which allows you to adjust for price? How does that work?
So yes, of course, we have a cost plus model where in any raw material increase and decrease that we get, we are able to pass it on to majority of our customers within a month or so. And apart from this, we have also widened our supplier base. So therefore, we are also able to do a long-term contract with our suppliers for pricing to maintain it on a stable side.
By majority, do you mean 80%, 70%, 51%? Just give us a number in terms of what that number would be. How much or how many contracts would you have in terms of where you're allowed to pass it on right away within 1 month?
So at least 85% of our sales happen within customers wherein we are able to pass on our increase and decrease within a month.
And what's the current geopolitical risk looking like? You also do exports. Does that put a dent on FY26 numbers at all, given everything that's happening with regard to geopolitics? And how are freight costs evolving? Because you also are impacted by that.
Definitely. So as a strategy, we have always tried to diversify as much as possible. Even in exports, we export to about 60 plus countries, although our major share of export is in the US and Europe. And those two economies have not given us a very good number in the last 2-3 years. But as a whole, because export is about 10 to 15% of our total revenue, so that does not really impact us at a large scale. There has definitely been a slowdown in our export sales in the last 2 years. But even after that, we've been able to keep our numbers growing and our margins intact. Freight cost is definitely another aspect that we have struggled with in the last couple of years. But most of our contracts are where prices are X our manufacturing facility. So freight cost does not really impact our margins, but it definitely is a factor that comes into play when we are trying to bid for new products.
Pranav, if exports were to turn around, and I'm trying to understand upsides here, if exports were to turn around, you said US, Europe has not contributed well for you both margin-wise and top-line-wise. What are the factors which will help it turn around? And 2, how quickly can it turn around, if at all, and how will it contribute?
So, as I said before, as a strategy, we have tried to diversify as much as possible. So, if we are in a situation where if export doesn't do well, it does not impact us a lot. Similarly, if export really does a lot better, still in total, it will not be a big part or big contributor to our growth. We are a company that is based on the domestic market. 85-90% of our sales happen within India, and that's where our focus lies.
Okay.
Because it already has tremendous opportunities for us.
Point taken. FY26, Pranav, what's the outlook like? You're going to sacrifice margins. Therefore, where should that margin number lie? And what's the thought process behind the strategy?
Sure. So even in the last 20-25 years, if you look at our numbers, as a company, we've grown at 20-25% on an average. There have been years in which we've grown at 10%, and there have been years in which we've grown at 30%. But on an average, we keep on growing at 20-25%. And that's our thought process even for the future. So next year, we have targeted this to be a year where we will grab volumes. And to do that, we might have to sacrifice some margins. Plus, there will be a bit of a margin decrease because of product mix changing as well. So we are looking at about 15-20% kind of a overall margin drop, in which most of it is also coming from the product mix that is changing.
And what's the thought process beyond that? So you're changing product mix. Will you do more of stainless steel? Am I understanding that right? And does that give you a leg up from FY28 onwards? Is that what you're thinking about? Saying that stainless steel from FY28 will have EBITDA per ton, which is far higher, and therefore might as well focus more on that. Is that the thought process?
Yes, definitely. You actually got it absolutely right. So stainless steel and low carbon as a product, we have not increased in this year. High carbon is the segment which increased rapidly. This is the reason why our EBITDA per ton on a blended basis also increased in this financial year. Next financial year, our focus will be more on stainless steel and low carbon wax, because after our backward integration initiatives, our margins in the other two products will also increase. So we want to focus on those two segments more.
Okay.
And today, all we are concerned with is absolute EBITDA. So even if our margin per ton goes up or goes down, does not really matter as long as we are able to get an absolute increase in EBITDA.
Pranav, I'm going to quickly ask you for three pieces. First, on the top line, what's the growth looking like in terms of CAGR for the next 3 years?
So as I said, as a company, we want to grow at 20-25%. So on an average, we want to continue growing at 20%.
So you likely double in terms of top line by FY28. That's the thought process. Okay. Where does EBITDA therefore go? Because you're looking at a better EBITDA per ton and product mix change. So where does that EBITDA number go? Should it grow at 30+%?
So EBITDA would actually not grow at 30% for the next year, for FY26 or 27.
Sure.
But yes, from FY28 with the backward integration kicking in, and with that also our foray into specialty wire will yield results in 28. So after that, we are definitely looking at a better EBITDA.
Okay, so what should that margin number be, Pranav? What should that margin number be?
So in FY26 and 27, let's say
give us that journey.
Percentage is decreasing a little bit in FY26, especially because of the hit that we are taking in our margin to grab higher market share. But FY28, I think we will be back to this margin or a little higher than this.
Is debt and cash flow a concern, Pranav? Sorry, last question.
So we are actually doing a lot. We are actually doing a lot to improve cash flows and better ROCs within this year and next year. So FY26, 27, although with a reduced margin, we will try to bring out cash flows in a better way. We are looking at a lot of cash flow positivity from the first quarter itself.
So why have receivables increased? Why have receivables increased, Pranav, this time around? Why is inventory high, receivables high? Why is that happening?
So that has happened because of a consolidation that happened within the group last year. When we went public, we said that we'll merge all our other companies within this Bansal Wire Industries, and that is what has happened last year, because of which our number have also increased by about 50% in sales. Now, to do that, we need to carry a lot of inventory, and we need to have a good amount of debtors, which is increased. But of course, we will try to normalize this within this year.
All right, thank you, Pranav, for being so patient and answering all of those questions, and fairly quick as well. That was good. Thanks, Pranav, for coming in and speaking with us, giving our viewers that perspective. Viewers, completely out of time on this edition of KYC. Thank you so much for joining. Stay tuned to NDTV Profit. More action on the other side.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis. Conversations that matter. We break it down, cut through the noise and set the context for you. Hear from top policy makers and thought leaders from the world of business and beyond. The big question really is, are companies using dark patterns to take you for a ride? The big question we're asking today, is the US heading towards a recession? The big question is, are we sacrificing our health at the cost of convenience? The questions you care about, asked and answered. The big question.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Markets recover from day's low, but Nifty trades in a tight range of less than 150 points, hovers above 24,850, defense and IT lead winners. Meanwhile, Sterlite Tech zooms over 15%, bets big on AI-led data center boom, eyes $1 billion opportunity globally. Vishal Megamart under pressure, Kedara Capital offload stake for over 9,800 crores, 56% shares exit lock-in today. AJ's Transact fails to pay its employees despite the management's promises. Less than 50 out of 2,500 employees active. Company places bouncers outside the office to block employees. And Prime Minister Narendra Modi is in Canada's Calgary to attend the G7 summit. This marks his first visit to Canada in a decade, the first visit to Canada since 2015, that is following an official invitation from Canadian Prime Minister Mark Carney. Hi there, you're watching Markets at 12 with me, Shreyanti Singh. First things first, let's take a look at the markets and see what they're up to before we get you an update on what the sectors as well as a certain few stocks are doing. At this point, of course, you do have the Nifty as well as the Sensex getting a little bit jittery in terms of that impact coming in as far as Iran and Israel tensions are concerned. When you take a look at some of the top losers, in fact, for the Nifty 50, you have Sun Pharma making it to that list. Add to that Bajaj Finance, ONGC, Eternal, in fact, 1.5% drop coming in for that one. And from the pharma pack as well, you do have Cipla. That is on the back foot at this point in time. Those are some of your top losers at this point in time. Of course, you do have select few auto counters as well. That is Tata Motors, Eicher Motors, some of those counters as well not doing all that well from within the Nifty pack. On the flip side, when you take a look at the gainers coming in from the Nifty pack, select few IT stocks, the likes of Infosys, Tech Mahindra, as well as HCL Tech doing quite well for themselves. Add to that a Wipro as well. So that largely is the kind of setup that you have coming in as far as some of those select few counters are concerned, but it's largely the whole host of those auto stocks, in fact, that are on the back foot, the ones that I just mentioned, Tata Motors, as well as others as well. So let's take a look at the demand picture, see how that is going to be shaping up going forward, especially heading into the festive season. What is that really going to be looking like? And Puneet, it's very important to take a look at what the demand picture is going to shape up to be like.
Well, definitely, and thanks so much for that as well, because you've seen one of the key aspects has been Tata Motors today. The key in news flow being that yesterday the Jaguar as well as the Land Rover Investor Day was held in London. Now, specifically, the guidance coming out of that has been actually quite negative, because the company is expecting a decline in its revenue to 28 billion pounds versus 29 billion pounds last year in terms of EBIT. And here is where the key negative is coming for. Just 5 to 7% EBIT margin guidance is what the company is given for FY26. Last year in FY25, they were able to clock in 8.5% of EBIT margins. Now, it's a very steep downtake. The company has mentioned key reasons such as, the global geopolitical crisis, as well as tariffs being one of the key reasons for the company's, essential guidance cut in this fiscal year as well. And to take forward the conversation on Tata Motors as well as the sector as a whole, we're now being joined by Mr. Pramod Amte, who is the head of institutional equity research at InCred. Mr. Amte, a very good afternoon to you. Thanks so much for joining in. Let me first start off with, what was your view essentially on Tata Motors, both on revenue decline expected for the Jaguar and Land Rover business, as well as for the EBIT margin decline range, which is being 5 to 7%, versus that of what your estimates were? Because post Q4, we did see some commentary by the company in terms of how they are looking at tariffs, but there was an issue in terms of some headwinds going into the investor day as well. Last week also the Tata Motors domestic investor day was held on 9th June. So versus your estimates for JLR, how have these new numbers and guidance come in compared to what you were estimating and guiding for?
Yeah, hi. Thanks for having me. So basically, if you look at the peer set, this was supposed to be highlighted by the peers, including Porsche and others who have a substantial exposure, and more so for JLR, which gets 25% plus revenue from US markets, which is the largest market for them, even overcoming the domestic markets of UK or to that extent Europe. So this was more like to happen. It has come as a print in the yesterday's analyst meet. Second, if you look at specific to our numbers, as we put out a report, clearly saying that it's worse than what even we thought. There is a risk of almost around 30% to our estimates on JLR EBIT, and on a console EPS, it can hurt almost around 21-22%, as nearly 70% of console EPS is still dependent upon JLR. So definitely it has come in as below even the worst of the expectations which we were thinking.
And Mr. Amte, just before I get into a little more detailed discussion on this, what is your current rating on Tata Motors? What was this earlier, what it's now, and what is the target price?
We have been having reduced rating for some time. We continue to maintain the same. We have a target price of around 642, which is still a downside from the current levels.
If I'm not wrong, your previous target price was 675, is that correct?
Yeah, that we revised post the
post this
results.
Yes, definitely.
No, post the results.
Got it.
There were some hints about the way the outlook can come through, as I indicated, not just the results, also with the uncertainty getting prolonged as some of the duties were changed and there was a cooling off period which was given for some of the regions. and some of the peers were coming through with the downgrades on the guidance ahead of the JLR itself putting it out in its analyst day.
And essentially, how do you see the capex number as well? Because roughly 3.8 billion pounds is similar to what they did last year as well. Part of the larger 18 billion pound capex for 5 years is what they had. But because of that, the free cash flow will be practically zero in this particular year. Did you expect that in the free cash flow number was something which was something that most analysts, including yourself, had spoken about very positively. So how do you see both these aspects going into the next couple of years? Do you see free cash flow recovering again in FY27, and how do you see this year of free cash flow being zero in terms of your estimates as well?
So clearly, there is no surprise on the capex front. They continue to deploy capex on a 4-year timeline, which they have given out in totality. There might be slight tweaking of the capex required. Also to look at is when you look at last year free cash flow, there was also a decent element of working capital benefit which came through, other than the profitability recovering in the second half. And there was a substantial lumpiness of profitability in the fourth quarter for JLR for the business. So in that context, looking at the slowdown in the global economy and also with the requirement of capex for new products, especially where they are trying to electrify or get into EV mode, both for Jaguar and Land Rover in a big way, which should start flowing through in the early part of CY26, for which the major spending is happening, both at the product seems to be majorly done, but at the plant level to realign for this big shift is going to continue. So hence the FCF, we always believed that the best was there in FY25. It will ease off in FY26. Looking at the way the cut has happened on the EBIT itself in terms of profitability, that has all flowed through and with a limited levers available on FCF to play at this year per se. Might be they will get some levers next year as the new models kick off, but we need to see how the broader global macros will play out, both in terms of tariff and the geopolitical side, to get the handle on exact numbers for FY27.
Fair point, Mr. Amte. So essentially, how do you see also, because one of the key aspects is that one of the key models, Defender, is now manufactured in Slovakia, and there is no FTA currently for EU as well as for USA. While there has been some developments on the UK as well as the USA FTA. So do you see a sense of the company shifting some production here? Because while we've also spoken to them post Q4, there's not been much in terms of what we could get from them. Is there a sense that you see, based on for you tracking the sector since a very long time, that the company will be able to shift the production from Slovakia to something like a UK for one of its key models that are exported to the USA?
I doubt so. At least the guidance which has been indicated looks like factoring the worst of Slovakia challenges, as they clearly called out. UK is 10% and Slovakia is much higher. Even though the negotiations are still on between Europe and the US after the cooling period to be seen. And production planning is usually done on a more medium-term basis, one. Second, they have also called out the rejig required within the plants to gear up for EVs. So in that context, it looks, at least in the short term, at least for this year, it will be difficult to realign the production back from Slovakia to UK, as the priority might be to get the EV right in the first place. That's my sense.
And Mr. Amte, we also had the India Investor Day last week on June 9th for Tata Motors, and one of the key aspects was the target for both passenger cars as well as the CV division. How are you seeing this development? Because for passenger cars, they are expecting a market share of almost 16% by FY27 and subsequently increase to 18% over the next couple of years post that. But currently, they are hovering around between 13 and 14%, seeing intense competition from all makers like Mahindra as well as from Hyundai as well in number 2 position. With the number of launches that they have planned, almost 7 in the next few years, do you expect that this could be a realistic number for the company to achieve, or do you see that while the number is something the company has put out, it might be a little difficult to meet that target?
So clearly the takeaway for us on the India Analyst Day is CV business is on a relatively better footing. We continue to like, as a sector, as a segment, CVs, and post split, we would prefer to hold on to the CV business of the piece versus the cars, which is a combination of both domestic cars and JLR, right? And we just talked about the overhang of JLR on the PV side, whereas the ROCs for CV business and the cycle for demand seems to be in favor of CVs. So that's how we would position ourselves. Specific to car segment, they need to get their product action back. They're trying it in the compact segment where they are looking for some volume to regain. But it's a highly competitive segment for the entire car space where the voluminous players like Maruti and Hyundai give a tough fight. Whereas the efforts in the SUV space may not yield a substantial volume. It may give you a value and the revenue, it may not give you a substantial volume. So our preference within the car space is to play Maruti over Hyundai and Mahindra over Tata Motors in the domestic car space.
Mr. Amte, this is Shreyansi as well joining in the conversation. I wanted to quickly check in with you about the demand picture as well, because when you take a look at some of the players, they do have a little bit of caution that they're deploying when it comes to demand as well as margins. What do you make of the demand picture going forward, especially when it comes to the festive demand as well?
So I think the macros are definitely favorable, and my sense is the weakness in demand may bottom out with the season of rains, and post which the factors of easing income tax and the easing interest rates should play out for the festival period starting from August itself. Hopefully by then we should be through with the rare earth magnet issue so that the manufacturers can fully participate for the demand revival. That's how we would look at the short-term demand trend for broader auto sector and more so specifically for cars in that context.
Mr. Amte, if I heard you correctly, you said you prefer Maruti over something like a Hyundai and you prefer Mahindra over something like a Tata Motors, right?
Right. Yeah.
So in terms of exports for, I think Maruti and Hyundai are two of the biggest car makers essentially there. Apart from the rare earth magnet issue, which is a very developing story, so I won't ask you about that. But in terms of exports as well, do you feel that the strength of something like a Maruti hasn't been tested yet because they're still not showing all the models in the export markets as well as not covering all the markets as well, which they could enter because now they've added developed economies like something like Japan as well as Europe over the last year. Do you think in terms of growth prospects for Maruti over the next 2 years, exports will be largely driving that? And do you also expect any kind of small car revival maybe in FY27?
So the key triggers which we are looking at for Maruti is to get the execution right on EVs. They have already displayed the product. We need to see how the product features and pricing and the customer acceptance will be both for domestic and global markets. So that is a key thing to watch. If the execution gets right for Maruti, then it can put to rest the concern on transition to EV, as we have seen in case of companies like Tata Motors or to that extent Mahindra. Post that, the trigger can be if they could succeed in this model on the exports. This is the top end, I would say, the technology automobile product, which is getting exported to the global markets. And hence a re-rating for that versus India has been known for exporting all the way the entry-level bikes to the compact cars into the global markets. But getting an EV into an export market and getting it established can be interesting re-rating for Maruti to be looked at.
Well, absolutely. Thank you so much, Mr. Amte, for taking time out and joining us this afternoon. That was a very extensive take coming in as far as the demand for auto is concerned and everything that is happening with the space is concerned. But tell you what, let's get a little stock specific, talk about Sterlite Technologies, because that stock is soaring in trade today, fueled by a new data center solutions launch as well as an order win. However, the question does persist, and that the lingering question, in fact, is that the current market enthusiasm, is it fully justified at this point in time? Somit, in fact, is joining in with the answer.
Well, yes, Sterlite Tech remains in focus. If you look at the year-to-date gains, it has gained more than 25%, which is the best start that we have seen for Sterlite Tech so far in the year since 2021. The stock has been gaining for the last 3 consecutive months, and alone in the month of June, if you look at, the gains have been more than 55%, which is one of the best monthly gains that we have seen for Sterlite Tech. So what were the recent announcements post which we have seen this rally in the share price of Sterlite Tech? Firstly, they announced that they have launched a new generation of data center solutions, and they also announced an order win of close to around 2,631 crore rupees. But do these announcements warrant such kind of a rally when it comes to Sterlite Tech? Well, simply the answer is no. Now, I agree with the fact that the opportunity when it comes to the data center business is huge, but this announcement was just a product launch, and there is no firm order announcement or order win that Sterlite Tech has seen in this kind of product. Also, the order win that they had announced of around 2,631 crore rupees, it was not for Sterlite Tech, but for its demerged entity, that is STL Network. So nothing of 2,600, not the entire amount of 2,600 crore will be coming to Sterlite Tech. Some of it could come to them as part of the cables that they will be supplying, but that will be just a fraction of the total order amount of 2,600 crore rupees. Also, the order win was just another notification, because back in March 2025, they had already disclosed this order win of around 2,600 crore rupees. Now, if you look at the company's performance of late, yes, the operating performance of Sterlite Tech has improved over the last couple of quarters on the back of the fact that inventory destocking is at the final stages. The company's net debt to equity has fallen to around 0.7 times as against 1.4 times earlier on the back of fund infusion that the company had done, and also because of the demerger. However, if you look at the company's net debt and the leverage ratio, that is net debt to EBITDA, that continues to remain high. Net debt stands at close to 1,350 crore rupees, while the leverage ratio, that is net debt to EBITDA, stands at around 3 times, while the management has a target of bringing it below 2 times. Well, now, what are the key triggers going forward for Sterlite Tech? Firstly, when it comes to BharatNet, they are estimating an opportunity of close to around $2.5 billion from US market. They are expecting order rollout to start in 2026, given the fact that they have a funding of 42 billion for the US BEAD projects. There could be a fiber demand growing going forward is what the management is expecting. And lastly, when it comes to a data center in the enterprise segment could contribute nearly 25% to the revenue and could be a big revenue driver for Sterlite Tech going forward.
Alright, then those are some of the drivers as far as Sterlite Tech is concerned. That stock is soaring in trade today, but let's also talk about Vishal Mega Mart, because that one is also in the spotlight. You do have Kedara Capital that's also offloaded some stake, and in fact that deal size, we're currently looking at 9,896 crores. Mahima is joining in with that detailed analysis.
Right, so as you rightly mentioned, it's the promoter stake sale that is set to take place. In fact, it has taken place, and the promoter is set to exit the certain stake in the company, and around 93.6 crore shares were exchanged in six different blocks today. Around 20% of equity changed hands in these block trades, and floor price was set at 110 rupees per share, which is at a 12% discount from its yesterday's closing price. The deal size was, increased to 9,800 odd crores from earlier 5,000 odd crores. In terms of how the shareholding will now pan out, the promoters were earlier holding around 74% stake in the company. That will come down to around 54% after the 20% stake sale. The promoter Kedara Capital via Samyat Services is set to sell this particular stake. And in terms of what triggered this lock-in period for Vishal Mega Mart, around 56% exits today, and because of this, around 254 crore odd shares are free to trade, and that amounts to roughly 31,775 odd crores. The shareholding is valued at this amount, and in terms of the current free float as well, that stands around 14,000 odd crores. In terms of how shareholding has panned since its listing, because Vishal Mega Mart was listed in September 2024, 18th September to be precise, promoter stake sale came down from 76% to 74.5%. That was the kind of stake sale that the promoter had done during the first exit lock-in period. Then FI's holding came down from 6.6% to around 7%. DI's holding, however, has increased from 9% to that 12% and public holding has decreased from 6.5% to that 6% mark. So this is the overall view as to why the stock is buzzing in trade today.
Alright, then thanks Mahima for getting us an answer as to why the stock is buzzing away in trade. But moving on, let's get you some details as far as AGS Transact Technologies is concerned, because there's a new development coming in there. The company in fact continues to fail to pay its employees even after the chairman had promised a repayment plan by mid-April. In fact, we have Agni Devu standing outside their Prabha Devi office to help us with all of those latest details.
what you are looking at right now was the entry to the corporate office of AGS Transact Technologies, a cash managing company which provides ATM services to other listed lenders. Now remember that AGS is a company that is facing corporate insolvency and problems with its cash management. But employees are also saying that the company has now employed bouncers to protect its top brass from employees who are coming in from other states demanding their overdue payments. So this is a wider issue where employees of AGS Transact all over the country are saying that they are not being paid their dues for at least 5 to 7 months. Dues which range from anywhere between rupees 3 lakh to up to 9 lakh per employee. Now remember that these employees were promised by the chairman Goyal earlier in April, where he had said that a resolution plan for paying outstanding dues would be issued within the month. But April has come and gone and no resolution plan has been given just yet. And these are employees who are also unable to quit the company, which is a very important thing to note, because as the company is unable to pay dues, people have just stopped showing up to work. This includes people from the HR department. Now remember, the company had around 2,500 employees and a senior level executive told us that less than 50 are now actively working for the firm. And as the HR department has cleared out, stopped showing up to work, there's no one to process resignations, there's no one to issue relieving letters, and there is no one to transfer PFs to other companies. So as an AGS employees, even if you put in your resignation, chances are it is not getting processed. So how do you then join another company? These are issues which employees all over the country for AGS Transact have echoed. We have talked to people from multiple cities and all of them are giving the same concerns. They have also issued legal notices to the company and the management, but there has been no response. Ravi Goyal has gone incommunicado and there has been no update. We have tried reaching in through texts, calls and even email, but even to us he has given no update. So even if a company fails to operate on its corporate level, remember the issue always boils down to real employees and on-ground challenges.
Alright, then that's quite the problem as far as AGS Transact is concerned. But with that, it's a wrap on this edition of Markets at 12. But we leave you with an interesting corporate conversation. In fact, we caught up with the management of BEML earlier today, who said that they're confident of doubling the order book for financial year 26. Let's go across and listen in.
We ended the year with 14,610 crores, and I'm looking at the same number as a further order inflow in 25-26, and once we are able to execute, a part of it, and the total order book kitty. So with that, we should end above the current year's order book value by at least more than 50%. The total capex that we are looking at this year will be around 600 crores, and it includes this current facility at Bangalore, plus some more facilities we are creating at Kolar Goldfields, that is mainly for defense, and Mysore unit we are now developing as a hub for defense and aerospace. So we are going to infuse capex for the aerospace facility in Mysore, as well as more defense facilities in Mysore and in Palakkad as well. And of course, to cater to our future needs, we have this new plant which will come at Bhopal, so that we can double the capability for the rolling stock.
That's huge. That is a biggie. It's out of there.
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis. Conversations that matter. We break it down. Cut through the noise and set the context for you. Hear from top policy makers and thought leaders from the world of business and beyond. The big question really is, are companies using dark patterns to take you for a ride? The big question we're asking today, is the US heading towards a recession? The big question is, are we sacrificing our health at the cost of convenience? The questions you care about, asked and answered. The big question.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as
Hello and welcome to NDTV Profit. A very good afternoon to all the viewers. You're watching Profit Buzzers. I'm Hiral Datia and with me is Anushi Vakharia. Anushi, good afternoon. An interesting day of trade right now. A lot of pockets that are buzzing, pockets which are seeing a lot of pressure as well. Defense, one of the outliers today. Pharma at the day's lowest levels. Major pressure coming in on that front. But very interestingly, let's quickly look at Nifty 50 as well as Bank Nifty as well, because it's a quite somber day of trade that you have been seeing right now. Nifty 50 now nearly at the day's lowest levels with cuts of around 0.4% coming in there. We've hit a low of around 24,846. So pretty much at those levels is where we are trading at. Let's pull up Bank Nifty as well as the PSU banking index as well, because that will give you some bit of cues there. Who have the day's lowest levels in terms of Bank Nifty as well, and the PSU bank index, which is seeing cuts of around 0.3%. The sectoral heat map will be interesting to watch out for, because defense is an outlier today. Strong moves in terms of individual counters. The sector itself is up 1%. IT, whether that sector is making a comeback or not is what anyone's guess, because it seems there is some bit of bottoming out that's happening. In the last 8 sessions out of 9, you have the IT sector, which has been trading in the positive, and you have Citi, which has come out and increased their target price as well, taking into consideration the earnings multiples for next year. We will talk in detail about that. Media, real estate also in the up move. Pharma is interesting. 1.4% is the kind of cuts that you're seeing in terms of Nifty Pharma. So there is something which is brewing in that space. Healthcare, metals, auto, all of them taking a beating, with FMCG seeing cuts of around 0.4%. That's the sectoral heat map. Let's quickly look at what individual stocks are looking like from the benchmark indices or from Nifty 50. The breadth, absolutely, you can see is in favor of the bears, at least in terms of Nifty 50. Sun Pharma, Bajaj Finance, ONGC, Eternal, Cipla, Bajaj Finserv, Adani Enterprises, Tata Consumers. These are the top losers, whereas it's the Tech Mahindra, Infosys. Asian Paints is an absolute interesting one because probably it's seeing the light of day. After many days, HDFC Life, Wipro, TCS are the other ones. NTPC on the back of that fundraise is also trading in the green. So Anushi, overall, that's what the larger markets are looking like. Interesting it will be if the broader markets are mirroring or probably underperforming.
Hiral, I would say they're almost mirroring to the levels of where the benchmark indices are concerned. In fact, if you look at where the mid-cap 150 index is, 0.25% of cuts there as well. Small cap 250 also 0.28% of cuts. Now, benchmark, as Hiral talked about, we saw about 0.4% of cuts or thereabouts. Currently, even if you look at both the indices, at the day's low are the kind of levels that we are looking at. But let's bring out some stock specific action on BSE 500 to see which are some of these counters which are buzzing in trade today. We are looking at something like a Sterlite Tech, and it's not the first day that we are seeing the stock seeing more than about 11% of an uptick. A couple of triggers that we have seen in the stock. Firstly, the big order win that the company had received a couple of days ago, 2,600 crore worth, is one of the triggers which has led to this rally that we have seen in Sterlite Tech. Happiest Mind up about 9%, Crystal, MMTC, Navin Fluorine, all about 4 to 5% up in trade today. While what is not working so well is something like Prince Pipes down about 5%, Eris Lives, Aster DM, Star Health, some of these other counters in focus seeing cuts of over 3 to 4% as well. So, I also want to just highlight Hitachi Energy here. And Hitachi Energy is seeing gains of over 4%. Even this counter has been buzzing on stronger volumes in the last few sessions that we are looking at. In fact, let's also see the advanced decline breadth for the broader markets to see what is the overall picture. Is it mirroring what is happening with the benchmark indices? So 1,400 to 860 is kind of ratio that we are looking at. Almost 6 to 9 is the ratio that we are seeing. So declines in favor of advances. So market breadth more in the red is what we are seeing. So some bit of pressure building in for the broader markets as well. So Hiral, that's the overall outlook that we are seeing in terms of the benchmark and the broader market indices are right.
Absolutely. But as you're mentioning, individual stocks is what we should be focusing on. You have Pharma, which is one of the top losing sectors. Let's just quickly pull up the heat map in terms of the contributors to the pharma sector, because that will tell you the story of what's happening. There you go. Apart from a Gland, Biocon and a JB Chemicals, all the other stocks which are trading under pressure to the tune of almost 2 to 3.5%. Now, Biocon is one of the stocks that is in focus, though that stock is seeing gains of around 0.4%, and this is on the back of the QIP. But what is interesting out of that is that Goldman Sachs is exiting Biocon Biologics, and that's the big story that you should be watching out for as to why Goldman Sachs is looking to exit a Biocon Biologics. My colleague Varsha has done the entire downtick on it, and she's standing by to get us more details. Varsha, what are you picking up? Because QIP is one part of the story, but the reasons why they are raising the funds is interesting, out of which exit to a Goldman Sachs is what we've picked up.
Yes, absolutely, Hiral, you're right on that. But so we all know that Biocon has launched a QIP of rupees 4,500 crore. One of the reasons is they primarily, the usage of the funds will be, they primarily intend to purchase outstanding convertible debentures issued to Goldman Sachs by its subsidiary Biocon Biologics. Now, the most interesting thing over here is why Goldman Sachs is exiting Biocon Biologics. Now, one of the reasons is Biocon. So Biocon Biologics IPO was in cards, and now board has not indicated any IPO timelines for Biocon Biologics. Board has mentioned in Q4 FY25 con call that they may look at merging Biocon Biologics into Biocon. So if there is no IPO for Biocon Biologics, that means no value unlocking which Goldman Sachs was expecting, and no exit for GS if no IPO. So the main reason is no IPO, no exit, and no value unlocking. Now, Goldman Sachs subscribed to OCDs of Biocon Biologics in 2020. They injected 1,125 25 crore at a post-money equity valuation of around 30,000 crore. With this, if you see, Goldman Sachs gets only 9% compounded return in 4 to 5 years. Now, the most important thing is why Biocon Biologics IPO is not happening or is a back burner. So maybe one of the reasons is the market volatility that we are seeing. The market conditions are not good. One of the reasons which Biocon management also highlighted in their con call, and maybe the second reason would be the valuations that has been given to Biocon Biologics by Biocon. Market may be finding that valuation as expensive, because at buyback price, if you see, companies valued at 416 per share, which takes a valuation of around 70,000 crore. Maybe market is not ready to give 70,000 crores to Biocon Biologics. Just on the QIP details, they've launched QIP to raise 4,500 crore at a floor price of 340.20 rupees per share. They're going to issue 139 million new shares, which is 11.6% of its outstanding equity. Indicative discount price to the floor price is at around 5%, and company had approved raising of funds by way of QIPs on 23rd April. What are they going to do with these funds? One is debt reduction. They aim to strengthen their balance sheet by reducing its net debt. They're going to repurchase convertible debentures from Goldman Sachs, and Biocon will use 1,710 crore to redeem these debentures. They're going to also invest in subsidiaries and considering the growth aspects that they have when it comes to biosimilars, generics and research services. And lastly, if you see, company had a robust pipeline when it comes to biosimilars, because they're going to launch few of the biosimilars in next 12 to 18 months.
Right, that's interesting, perspective that Varsha has got for us. In fact, let me get in Raghvendra Kedia as well. Raghvendra, good afternoon and welcome to the show, and a pleasure to speak to you as always at NDTV. We've been talking about Biocon, and what's interesting is we have a Goldman Sachs which is exiting Biocon Biologics, and the reason probably could be that the IPO is probably on the back burner. There will be no exit that a Goldman Sachs will get as well. And if a Biocon Biologics gets merged into a Biocon, that's something probably Goldman Sachs is not looking forward to. Taking this aspect into consideration, how would you look at a Biocon?
Good afternoon, Hiren. And broadly, this particular development where an institutional investor is exiting the company, that's a concern, and the reasons are also very out loud in the open, that there was an IPO of a subsidiary planned, and it is not going as per the promises or as per the schedule what Biocon would have had in discussions with the investor. So that's a concern, and any investor has the right to exit the parent company, which is what this particular case seems to be the point. So that's a concern for us. Now, moving specific to Biocon as a whole, we do believe that this there is also some dilution happening, which is a significant in terms of 11% of its overall market cap, or 11% of its total equity. So that's a huge supply coming into the market, in the secondary market, and we believe that that could actually fill up the appetite of a lot of investors for another 2 to 3 quarters. So we do not see any significant upside in terms of the price movement on the upside, considering this equity dilution right now. Moving on to the valuations also, the EPS of Biocon have been pretty erratic in terms of 1 rupee or 4 rupee in the last 2 quarters. And we believe that still at an EPS of full year basis, 6 rupees, Biocon trades at an expensive valuations of around 60 times on P multiple. So that is not very comforting to us. So with equity dilution, huge supply coming in, investor getting out, and 60 times of P multiple, it's an avoid at current levels.
Okay, so avoid is what we are seeing for Biocon, but let's focus on Asian Paints. Now, Reliance Industries, through its arm Siddhant Commercials, has completed its exit from Asian Paints, selling its remaining 85 lakh shares, about 0.88% of the company, and this is at a price of at rupees 2,200 7 per share that we are looking at. Mahima joins in with all the details on this one. Mahima, tell us more.
Right, so I think the kind of up move that we are seeing in the stock today is because the kind of overhang the counter had because of Reliance holding stake is now, Reliance planning to sell its stake is now over. Siddhant Commercial, that's a Reliance arm, has almost exited the counter in 2 different tranches in the past 1 week and today itself. Now, in terms of today, the holding that it sold was roughly 0.88% at 2207 a piece. Last week, it also sold around 3.64% in Asian Paints. Now, Siddharth Commercial overall held around 4.9% stake as of March, out of which after post the stake sale in 2 tranches, its holding comes down to around 0.38%, which is a slight stake that is still remaining on the cards. Earlier, the stake was held by Teesta Retail Private Limited, which got merged with Siddhant Commercial, and since then, since 2023, Siddhant Commercial was holding Asian Paints. Now, who bought these stake sales that Siddhant Commercial did? It's interesting because most domestic mutual funds have bought in stake. The stake sale which was done prior to this week, that was last week, around 3.64% stake, around 3.4% stake was bought by SBI Mutual Fund, and today yesterday ICICI Prudential bought in around 85 lakh shares of Asian Paints. So the question really here is that are these domestic mutual funds seeing some valuation now in Asian Paints after the kind of downtick that the stock has seen in the past few odd months? In terms of valuations, where they stand, just to give a picture, 2025, the valuation stood at around 61 times PE for Asian Paints, which has come down to around 59 times as of 12 months trailing. But further estimates suggest that 2026, the valuations will go down to 49%, and in 2027, it will go to around 44 times. But still, at 44 times, Asian Paints still not looking very cheap even in 2027. So that's the overall outlook as to where Asian Paints stands in terms of valuation, and of course, the stake sale done by Siddhant Commercial.
Okay, thank you for that, Mahima. Quite an interesting perspective there. Raghavendra, let me come to you on this one. Asian Paints, now one key aspect that we are looking at is this overhang, which was seen as an overhang in terms of Reliance exiting the stake. That is one. And now domestic mutual funds are seeing interest in this counter. Now, considering the overall perspective of paint companies, wherein they're seeing increase in competition, margins pressure, along with other factors that has led to most of the brokerages being cautious of this, what is your outlook on this counter?
So broadly, we are bullish on Asian Paints at current levels. There has been a significant concern in terms of loss of market share, and that has been very well reflected in the price, where the stock has fallen to levels of 2100, 2200. We believe that there could be volume surprises and some market share gain in the next 2 quarters of earning reporting. So we believe that this could also be reflected in the price, where we are looking at an immediate price trading target of around 2,400. So that's around 8 to 10% upside at current levels. In terms of the peers are facing some churn in terms of their senior management or employees leaving the company. So we might see some teething errors in the new entrants who were concerned as being competitors of Asian Paints. So that on a net basis is positive. Again, entries of institutional investors is taken as positive, specifically when the institutional investor is a domestic fund. So there is a significant comfort and due diligence and checks done on ground whenever a mutual fund enters any stock. So entries of this block deal through these block deals is a big positive. So Asian Paint at current levels, we are upbeat for a 1-year investment horizon, and we do believe that 8 to 10% upside can be achieved in the next 2 to 3 months as a trading target.
That's an interesting one to watch out for, because the story seems to be completely changing, Anushi, for Asian Paints, because all this while we've been talking about the kind of overhang, the pricing pressure, the growing competition, and Birla Opus coming in with regards to Asian Paints. That stock has been an absolute downer. If you just quickly pull up even a 6-month chart or a 1-year chart, you'll get to know the entire Asian Paints story in terms of the way what it has meant for investors as well. There you go. In the last 6 months, 4% is the kind of cut. So from that April highs, it's actually been a downer. 12 months, 20 to 23% is the kind of fall that we've seen on an Asian Paints as well. So a buy call at current levels and valuations coming in from a Raghavendra on Asian Paints. But moving on, JLR has gone ahead and cut its FY26 margin guidance. In fact, they did have their JLR Investor Day yesterday with analysts. Puneet joins us with all the details. Puneet, yesterday the stock did hit a low and a downtick of around 4 to 5% in intraday trade. Another 1.5% cut coming in today. It seems that the street is not really enthused with what a JLR could actually mean for a Tata Motors.
Well, definitely, and there are a few other negatives that the company has given now. Essentially, they had the investor day yesterday in Glasgow, London, June 16th, and there are 5 key points that they mentioned. One, they're estimating revenue to decline to 28 billion pounds versus 29 billion pounds last year. While there was expectation of a muted revenue growth, a fall is expected now, is what they've said. And the EBIT margin guidance, as you rightly highlighted, was one of the other key negatives. Last year, they did 8.5% in terms of EBIT margins. They're now anticipating in FY26 to be only between 5 to 7%. So the range is quite higher and could impact margins by almost 300 basis points. That's one of the key aspects and the key negatives. The third one is on free cash flow. Now the company is going to continue its investments of roughly about 3.8 billion pounds into this year, which is part of the larger 18 billion pound investment over 5 years. But because of no levers of growth, the company's free cash flow will be actually zero into this year of FY26 for the JLR division compared to 1.5 billion pounds done last year. So it's that is going to be one of the key negatives, and apart from that, a couple of others that they've said that the investments will continue, as I've just mentioned, and the focus on cost savings is something new that they've said. This wasn't part of the Q4 numbers of $1.4 billion, £1 billion savings rate from starting from this year. That's roughly 5% of the sales. If that will happen, that will be one of the key things. But I think on the EBIT margin decline, that's one of the key negatives. Brokerages have largely maintained their view, but cuts target prices. Some of them at least have. Jefferies has maintained their underperform on Tata Motors, cut target price to 600, and they've actually cut their EPS estimates over the next 3 years by 12 to 19%, while something like a Nuvama has retained the target price of 670, but they are only building in a 3% revenue growth over next year. So there are some investor concerns, and the company's new launch pipeline in the India business will be something to watch out for. But for JLR, it looks like a tough year for the company, at least in the global markets, because of geopolitical issues as well as the tariff impact.
Absolutely, a tough year for JLR. Raghvendra, in fact, thank you, Puneet, for that. Raghvendra, we've always discussed at Tata Motors that the valuations always look absolutely cheap and reasonable to look at the counter. But currently, if you see the way the stock has moved, if you can just pull up a 6-month chart of a Tata Motors, and you'll see the kind of, strides that the stock has made in bouts. If we can just quickly have a 6-month chart, guys, in terms of Tata Motors. There you go. I mean, it's 13% downtick, but from April to now, it's seen a substantial uptick coming in there. Would you say the valuations are now really not warranting a buy, and probably this would be a time to exit a Tata Motors if you have to look at a 1-year perspective, because 2026 or FY26 is going to be slightly subdued. They've gone ahead and cut the guidance, but probably a long-term perspective valuation is compelling. Let's look at both the scenarios.
So, Kiral, I'll take the last line from what you said. The long-term valuation scenario looks very compelling and very attractive. We are looking at among the largest automobile company of India, which has a significant presence in premium cars on the PV side in Europe, again in China. So these are 2 huge markets. It is among the significant players in also passenger vehicles and commercial vehicles, and in India, which is going through a great monsoon forecast. So we believe that the CV business would see some significant positive surprises going ahead. So we are rather looking at glass full of half full of water and half full of air. So we are looking at the glass as half full, where we believe that the valuations are very compelling versus its peers. A company like Tata Motors is trading at single-digit P multiples. We still have an EPS of around 26, gives a P multiple of 26. So investment horizon. We also believe that the demerger of the entire CV PV business would be a positive catalyst. So the negatives are factored in the price, and we do believe that even at current levels of 670, 680, there is a 20% upside if somebody holds it for a 1-year investment horizon. A global automobile player, good corporate governance, beaten down valuations and catch-up play with peers, we'll see Tata Motors gaining to levels of around 820, 830 by 1 year from now.
That's an interesting take with regards to Tata Motors. But you have a Maruti Suzuki, which is also ramping up its green logistics with its second in-plant railway siding project following Gujarat. And this initiative is set to slash 65,000 truck trips annually, saving 6 crore litres of fuel and significantly cutting the company's carbon footprint. My colleague Rishabh caught up with Rahul Bharti, Executive Director at Maruti Suzuki, to give us more details. Let's quickly listen in to that chunk.
So we are very happy and proud that India's largest in-plant railway siding or multimodal Gati Shakti cargo terminal is being inaugurated today. It has been done by Honorable Railway Minister Shri Ashwini Vaishnav and Honorable Chief Minister of Haryana Shri Nayab Singh Saini ji. This is India's largest cargo terminal with a capacity of transporting 4.5 lakh cars per year. Incidentally, this is the second one, and the first one is also from Maruti Suzuki, which had a capacity of 3 lakh. So that was in Gujarat. Today we are inaugurating it in Manesar. And this is a very positive move for industry because we can decongest a lot of road transport and shift the dispatch of finished cars from the factory to dealers instead of road transportation to rail transportation.
Right, so that's with regards to where Maruti goes. Raghvendra, a quick view in terms of where Maruti goes. I mean, clearly not something which will really impact in terms of the volumes, but where do you look at a Maruti at the current point in time, taking into consideration your rural demand is expected to see an uptick, and probably your entry-level vehicles and the aspirational SUV buyers, they would be the ones who would be looking at a Maruti then?
So, Hiral, this particular event is a non-event as far as we are concerned in terms of the price move. It's more on some brownie points on the ESG part of governance side of things. Now, moving to how do we look at Maruti on a broader perspective? Yes, we do believe that there is value in the stock, considering its market share and command across a pan-India distributorship network. And in the entry-level segment, this has a very commanding pole position. So we do believe that Maruti is a stock where one can actually have an approach where every dip, every correction should be taken as a buying opportunity. So we believe we are looking at levels of around 11,600, 11,700. So 6 to 7% correction would be better entries for Maruti for a longer term investment horizon. We are looking for a 15% upside. If somebody can enter at levels of 11,700, that would augur well. At current levels, we are on a wait and watch approach.
A good buying opportunity is what we are looking from Raghavendra if there's a 6 to 7% of a correction for Maruti Suzuki. Well, what is also interesting is something like Tanla Platforms. Now, this stock, if we see the last 1 month in consideration, has gained about 17%. And right now, the focal point for the company is after the board has approved a 175 crore rupees buyback. Now, this is the company's third buyback that we are looking at in the last 5 years. Let's get in Jasmeet with more details on this.
Well, yes, Tanla shares are up roughly 3% in trade today on the account of buyback and offerings. So here's all the details of the buyback. The board met yesterday on 16 June and here's the outcome. The company to spend rupees 175 crore for this buyback and plans to buy back roughly 20 lakh shares with a premium of 34% forming 875 rupees per share price. And this 20 lakh share forms 1.4% of the total equity base. While this is the fourth buyback and the third tender buyback in last 5 years, while according to SEBI, 15% of this belongs to retail shareholder category. So this forms the entitlement ratio of roughly 0.8%. Now to understand what is entitlement ratio, if a retail investor opts for the share buyback, so every 100 share he owns, he'll get a buyback of roughly 1 share, which is pretty less. Talking about the buyback history of tender and options. In 2022, the recent buyback was at 1200 rupee per share, which was a premium of 66%, and the acceptance ratio for the retail category back then was 19.4%. And now to understand what is acceptance ratio, which would mean for every 100 share buyback request placed by the shareholders, 19 shares were bought back by the company. While in 2021, the buyback was for open market at 65 crore, and in 2020, the buyback was at 81 rupee per share, and it was a premium of 55%. It'll be interesting to watch out how this buyback turns out for the shareholders and for the company's performance.
For that, Jasmeet. Raghavendra, coming to you for Tanla Platforms. Now, this is the third buyback that we are looking at. Of course, this reflects promoter confidence also in the stock, which is there. I want to understand your outlook, considering the acceptance ratio that we are looking at, and also the kind of premium that investors are getting. It's a 34% of a premium that we are seeing for Tanla Platforms.
So this is a theoretical number in terms of what the acceptance is being stated as. We historically, there has been cases where not every investor ends up tendering the shares. So the acceptance ratio goes significantly up, and that is the juice one should actually bank upon. So that is a positive. So we would actually have suggestion of retail investors participating in this buyback, and the big upside could come where the overall acceptance ratio would be significantly more than the theoretically calculated acceptance ratio. So that's one point. Now, overall, how do we see the buyback where the promoters have been doing their buyback significantly regularly in the last 4 or 5 years? So that's a positive where any stake sale or dilution is taken as negative. So on the positive flip side of it, a buyback is taken as a positive where the management who knows the company in and out, understands it very well, are putting more skin in the game. So that's a positive in terms of corporate governance, in terms of the overall longer term prospect of the company. So yes, Tanla Platform Solutions is positive, considering if you want to play this special situation corporate action of buyback, and post buyback also one can continue to look at Tanla Platforms as a candidate for a investment purpose on a longer term investment horizon, considering the management promoters are increasing their stake. That's a positive, comforting on the valuation metrics and the forensic analysis. We would consider that as a big positive.
Positive stance is what we are looking for Tanla Platform. The stock currently up over 4% in trade right now. But it's time to slip into a short break. Lots more lined up on the other side, so do stay tuned.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis. Conversations that matter. We break it down, cut through the noise and set the context for you. Hear from top policy makers and thought leaders from the world of business and beyond. The big question really is, are companies using dark patterns to take you for a ride? The big question we're asking today, is the US heading towards a recession? The big question is, are we sacrificing our health at the cost of convenience? The questions you care about, asked and answered. The big question.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or
Markets continue to trade under pressure at day's low. Nifty trades in a tight range below 24,800. Sensex down 300 points. IT and defense lead the gains while Nifty Pharma and metals lose their sheen.
Sterlite Tech zooms in trade as the company announces the launch of its next generation AI-led data centers. The company eyes $1 billion opportunity globally.
Vishal Megamart trades under pressure. Promoter Kedara Capital offloads stake in the company for over 9,800 crore rupees. 56% shares exit lock-in today.
AGS Transact fails to pay its employees despite the management's promises. Less than 50 out of 2,500 employees active. Company places bouncers outside the office to block employees.
And Prime Minister Narendra Modi is in Canada's Calgary to attend the G7 summit. This marks his first visit to Canada in a decade. The first visit to Canada since 2015 is following an official invitation from Canadian Prime Minister Mark Carney.
Hello and welcome back. You're watching Profit Buzzers. Let's move to a big exclusive for the day. Now, ED crackdown. This is what we're talking about. ED crackdown on betting apps. Former cricketers and celebrities are on the radar. Shrimi joins in with more details on this exclusive.
Indeed, the ED is widening its probe into illegal betting case where the now focus is on celebrity endorsement. What we are picking up from our top sources in ED that the agency has reached out to popular personalities and former cricketers, including some Bollywood personality as well, including Yuvraj Singh, Harbhajan Singh, etc. And they are seeking explanation on why they are endorsing such platforms which are banned by Government of India. And in fact, they're also saying that that is the clear violation of several Indian laws, including PMLA, FEMA, and the advisory from the Information and Broadcast Ministry. Now, sources telling us that during the course of probe, ED actually observed that how these betting platforms are using surrogate ads to kind of dodge its identity. For example, XBet became XBAT, and that is how they are kind of marketing themselves as skill of game under the pretext of online gaming to kind of hide its illegal operation. The second important fact emerging during the probe is that how the mule account and Benami transaction is being used to channelize the whole transaction, which ED is currently looking at, and plus the kind of promotional payout being given to some of the media houses. The ad rates are between 50 crore to 100 crore, and that is what they're also seeking inputs on. Some notices already been sent to these celebrities, and some will be issued soon in the coming weeks. Some interesting estimates have been also given by ED official. One is that how this entire market is growing and 30% annually and reaches around $100 billion. 27,000 crore is what the tax evasion, the top popular betting apps are actually evading. And third is that how the traction is increasing. Between January and March alone, they have seen 1.6 billion of traction, which clearly indicates the social as well as financial consequences of this entire, illegal betting platform. So ED is probing this entire case, and we will see more notices and more names emerging in the coming days.
Thank you, Shrimi, because it's an important story that you should be tracking. 27,000 crores is what is being evaded in terms of taxes every year. And what's interesting over here is over 50,000 crores has been traced for promotional payouts for surrogate betting app ads. Interesting story coming in there from Shrimi, which is a NDTV Profit exclusive. But moving on. Sterlite Technologies, that stock is on fire over the last couple of trading sessions. Let's pull up a 5-day chart of Sterlite Technologies, and that will tell you the story as well. It has cooled off from the day's highs today, but in the last 5 trading sessions, if you talk about a Sterlite Technologies, if we can have a 5-day chart, there you go, 48 to 49% is the kind of gains that you've seen on the counter. Somit is joining us to tell us more in terms of what's the story with a Sterlite Tech. Does it really warrant this kind of an up move or not? Somit, over to you.
Well, yes, Sterlite Tech remains in focus. If you look at the year-to-date gains, it has gained more than 25%, which is the best start that we have seen for Sterlite Tech so far in the year since 2021. The stock has been gaining for the last 3 consecutive months, and alone in the month of June, if you look at, the gains have been more than 55%, which is one of the best monthly gains that we have seen for Sterlite Tech. So what were the recent announcements post which we have seen this rally in the share price of Sterlite Tech? Firstly, they announced that they have launched a new generation of data center solutions, and they also announced an order win of close to around 2,631 crore rupees. But do these announcements warrant such kind of a rally when it comes to Sterlite Tech? Well, simply the answer is no. Now, I agree with the fact that the opportunity when it comes to the data center business is huge, but this announcement was just a product launch, and there is no firm order announcement or order win that Sterlite Tech has seen in this kind of product. Also, the order win that they had announced of around 2,631 crore rupees, it was not for Sterlite Tech, but for its demerged entity, that is STL Network. So nothing of 2,600, not the entire amount of 2,600 crore will be coming to Sterlite Tech. Some of it could come to them as part of the cables that they will be supplying, but that will be just a fraction of the total order amount of 2,600 crore rupees. Also, the order win was just another notification, because back in March 2025, they had already disclosed this order win of around 2,600 crore rupees. Now, if you look at the company's performance of late, yes, the operating performance of Sterlite Tech has improved over the last couple of quarters on the back of the fact that inventory destocking is at the final stages. The company's net debt to equity has fallen to around 0.7 times as against 1.4 times earlier on the back of fund infusion that the company had done, and also because of the demerger. However, if you look at the company's net debt and the leverage ratio, that is net debt to EBITDA, that continues to remain high. Net debt stands at close to 1,350 crore rupees, while the leverage ratio, that is net debt to EBITDA, stands at around 3 times, while the management has a target of bringing it below 2 times. Well, now, what are the key triggers going forward for Sterlite Tech? Firstly, when it comes to BharatNet, they are estimating an opportunity of close to around $2.5 billion from US market. They are expecting order rollout to start in 2026, given the fact that they have a funding of 42 billion for the US BEAD projects. There could be a fiber demand going forward is what the management is expecting. And lastly, when it comes to a data center in the enterprise segment could contribute nearly 25% to the revenue and could be a big revenue driver for Sterlite Tech going forward.
Right. Thanks, Amit, for that. In fact, let me also welcome in Gaurav Sharma from Globe Capital. We have Raghavendra, who's already with us. Gaurav, what are charts indicating? A 48-49% up move that has already come in on a Sterlite Technologies. Do you think it still further warrants an upside, or this is the time to book profits?
I think it will be a prudent approach to take some profits off the table. The stock has already rallied over 50% in just past couple of sessions. It started moving up from 75, went up to close to 120 today itself. Now currently trading at 112. So I think it is wise to take some profits off the table, because 50% odd move in just a few days is quite too much.
In fact, Raghavendra, very quickly, how are you looking at it? Because if you have to look at the years from, say, 2019 to 2024, their top line has been in that range of 5 to 7,000 odd crores. 2025, it's come down to around 4,000 odd crores. So there is that volatility that you're seeing in terms of where business is concerned. Similarly, is the trend in terms of their margin profile as well. You've seen highs of 20 to 23% as well back in those days. It's come down to that 10%. What is the fundamental view saying on a Sterlite Technologies?
So if you see, Hiral, the biggest yellow flag for us is a negative EPS, and they have been consistent on that negative EPS reporting, not for 1 or 2 quarters, even on a full year basis. So that's an avoid until and unless the company turns EPS positive. Huge volatility in margins, huge range in revenues is also concerning to us. What we as investors like is a moderate growth, but consistent where there is certainty, which has not been the case with Sterlite Technologies. So it's an avoid. The biggest reason to refrain is negative EPS until for the next 2 consecutive quarters, company has positive EPS reporting. We will not review it positively. Wait and watch, avoid till EPS turns positive.
That's an avoid that we are looking for, Sterlite Tech, but the stock currently up over 13% in trade. But let's shift focus to the IT space. In fact, if we look at the Nifty IT index, it was the second best performing index in overall sectors that we are looking at, almost up over 0.8% currently. Now, what's happening in the space if we are looking at now? Citi has come out with a note wherein they've upgraded the target price on majority of these IT players that we are looking at. In fact, if we see the Nifty IT, that has advanced 8 out of the 9 sessions and has gained over 6.1% in the last 9 sessions that we are looking at. But why has Citi upgraded the stock? Firstly, the exchange rates, that is one of the rationales that they are saying. The recent re-rating, as we spoke about, is also one of the triggers that we are looking at, while they maintain the sell call on all of the stocks which are there in the IT space. So while the stance remains the same, that is the maintained sell, it's a target price in which we have looked at an increase, right, Hiral?
Yeah, so interesting, I mean, they've revised their target price on all the companies, rating whether it's a neutral or buy or a sell for individual counters, that has been maintained, and the target multiple that has been upgraded, and that's the reason why you're seeing the target price uptick that is coming in there. And what a day to see IT moving in today's session. In fact, Anand Rathi also has an interesting note with regards to Happiest Minds. Let's pull up that one on the screens. A buy rating for a target price of 790, and that stock is one of the top gainers in today's session as well. There you go, 9 to 10% is the kind of up move that you're seeing on this counter. Why they're positive is because what they're saying is inorganic growth is what is driving the improved business mix, and this is towards BFSI as well as healthcare. Secondly, their verticalized organization structure is what will help improve client mining, I beg your pardon, and drive sales efficiency for the company. The appointment of CGO is something that will help in the net new client opportunities and drive cross-sell business opportunities across the unit. And a dedicated AI business unit would reinforce the company's commitment to leverage AI for winning deals. And that's one of the reasons why Anand Rathi has a target price of 790. The stock is trading at 656, but today also gains of 9% coming in there. Raghvendra, Happiest Minds, your view, and overall in terms of IT sector as a whole, do you think it has bottomed somewhere and this is the time where the re-rating is something that will begin?
So here, let me start with Happiest Minds. It's a great management. Promoter has actually walked the talk in the last many quarters since their listing. So they have been visionary and very proactive in terms of their boardroom realignment, in terms of expansion in geographies, and they are in the high margin space of BFSI and healthcare, and that continues to do well. Now, moving on to IT, we do believe that yes, it's a time for re-rating. The two major reasons is we believe that there would be strength in US dollar versus the Indian rupee. So that could lead to some margin expansion and positives in terms of their earning reportings, as rupee might weaken versus the US dollar in the days ahead or in the weeks ahead. Second, we expect that there could be significant corporate tax reduction in the US market. That would lead the US corporates to spend significantly more, and Indian IT companies, which have been focusing on US corporates as their top clients, benefit in terms of their order book. So that could be two positive catalysts for information technology software stocks for a re-rating: reduction in US corporate tax structure and strength in US dollar versus the Indian rupee. So any tips can be taken as buying opportunities, starting with large cap IT names.
Positive stance for the large cap IT names that we are looking at. Gaurav, want to understand your outlook also on the IT names. Do you think that this is a buying opportunity for the current stocks that are there in the sector?
Yes, pretty much so. Nifty IT is very much well placed. Still, a lot of room is left. I do firmly believe that the recent uptick that we have witnessed in the past two trading sessions will likely continue. I prefer stocks like Infi and HCL from the heavyweight large cap space, and Emphasis is looking quite attractive from the mid cap space.
Okay, so that's with regards to IT majors. Let's quickly pull up a Hindustan Zinc, which is flashing at the bottom of your screens. They've come out and announced a 12,000 crore capex, and it seems that the street is not enthused with that 12,000 crore number. The stock is trading at the day's lowest levels with cuts of around 4% coming in there. Let's understand what the details are. They've approved setting up of a 250 kiloton integrated zinc metal complex, and this will be at Debari, and associated mining and milling capacities at a capital expenditure of 12,000 odd crores. And this is as a part of the company's overall 2 times growth plan that they would have announced so far. That's the details that I'm picking up so far. In terms of the existing capacity, that stands at around 1,129 kilotons per annum metal. Existing capacity utilization with regards to FY25 was at 93%. The proposed capacity addition is another 250 kilotons per annum, and the period for which the proposed capacity will be added will be 36 months from zero date. So they're looking at 3 years with regards to the addition. The mode of financing will be internal accruals, and they will be utilizing some portion of the debt as well. And the rationale is that they're seeing a growth in terms of zinc consumption that is mainly driven by strong demand in steel and infrastructure. So those are the details that we're picking up so far with regards to Hindustan Zinc. The stock is now seeing cuts of nearly 4%. Raghvendra, very quickly a question in terms of 12,000 crore capex over 3 years. Expansion in terms of zinc capacity is what they are looking at. 250 KTPA is what they will add. Seems that the street is not really happy with it. The stock is down 4%. How are you reading into it?
No, we were also surprised when we read this, because a few weeks ago there was a dilution in the company and the major reason for the dilution was debt reduction. So, and now they are going for a capex, but that has been the trade of Anil Agrawal group companies, where they have been very aggressive in terms of organic or inorganic expansion, and Hindustan Zinc is no exception for that. But yes, we do take it as on a long-term basis positive. Zinc prices at LME are under a bullish undercurrent, so that's a positive. We believe that the silver component in Hindustan Zinc would also augur positive surprises in their earnings. So we are bullish on zinc and silver, and overall this capex could actually augur well for a long-term basis. So Hindustan Zinc as a 490 is a buy. Any dip could be taken as a trading buy opportunity also. It has rewarded shareholders in historically and might continue to do so in the immediate to medium term also.
Overall, an optimistic view that we are seeing for Hindustan Zinc. Current levels of buying opportunity as per Raghavendra. Gaurav, let me come to you as well on Hindustan Zinc. What is your view? Are you also bullish on this counter?
Not as of now. I'll wait for a dip close to 470, 465, 460. That is the level where I'll be more interested in taking a long position in this stock, especially with a short to medium term view. Thereafter, we can look for targets close to 520, 530, 550 zones. So yes, I'll from my side, it'll be a buy on dips.
Okay, so a buy on dips with regards to Hinzing, but it will be interesting to understand as to why the street is not really enthused, and Raghvendra was very apt in terms of pointing out as to what they had done with regards to the debt repayment, and now we're looking at internal accruals and a portion of debt that will be utilized for this 12,000 odd crore capex. It will be interesting to speak to the management as well. In fact, metals as a sector has been trading under pressure, but you have NMDC, which is India's top iron ore miner, probably will face squeeze in terms of its revenues as margins as the global prices have slumped. What about the other companies in this segment? Vansh joins us to tell us more in terms of the drop in iron ore price and how it will impact Indian companies. Vansh, over to you.
So the iron ore companies, the drop in iron ore prices are going to see magnificent.
There is some audio issue. Vansh, yes, go ahead. The drop in iron ore prices that you're seeing, how are you expecting it to impact the companies? Right, I think there is some audio issue there. But let's understand what has happened is in terms of where iron ore prices are concerned, there was a note that Citi did put out saying that there has been a downtick in terms of where iron ore prices are concerned. Now, basis this, if you have to look at NMDC, that will see a negative impact, and that's absolutely visible in terms of the stock price, where the counter is trading at the day's lowest levels, because this will affect their revenues as well as their profit margins, though they are awaiting the new pricing formula that will probably shield themselves from the global volatility. Talking about Tata Steel, what one research has mentioned is that it's expecting a mixed impact, where the operating margins have improved and 40 million tons of iron ore is mined in India itself in FY25. SAIL also probably will see a mixed impact on the back of this, because they cater to 100% of requirement of steel, SAIL steel plants, and they're positive on account of decline in raw material cost is what they will see. In terms of Vedanta, again, it's a pretty mixed impact that Vansh has mentioned. Positive impact, why with regards to JSW Steel, is because they rely significantly in terms of external purchases. They could see an improvement in terms of operating margins and lower operating costs amid decline in iron ore prices. In fact, Raghvendra, very quickly, all of these companies that we're talking about, with the way global iron ore prices are panning out, what would your advice be to investors?
So we would take NMDC as a buy on dips, and overall on the large cap names, JSW Steel remains our top pick. Global sales, great order book, $30 billion market cap. So they have sailed through the thick and thin, and it's a cyclical industry. So we are positive on overall metal space. NMDC and JSW Steel remains our top pick.
Okay, so that's the view that we are seeing for NMDC. But, let's shift focus to the defense space. Now, what's happening here is it's the top sectoral gainer of the day. In fact, if you look at the index, it's up over 1% in trade currently, if you can pull out the Nifty India Defense Index. Top stocks over here, if you are looking at Mascow, Dock in focus, up over 3%. Garden Reach also clocking in stronger gains. Apollo, Data Patterns, Garden Reach, all up over 2 to 3% in trade today. In terms of where the volumes are concerned, as compared to 30-day average, it's about 0.3 to 0.6 times of the 30-day average that we are looking at. Now, what are some of the key reasons why this index is buzzing? Firstly, in the 1 month period, we are seeing about 3% of an uptick in terms of where the defense index is concerned. Also, along with this, sentimental up moves regarding the escalation in Israel-Iran war is putting the focus back on these defense names that are out there. Even if you look at in terms of the recent triggers, we had Operation Sindoor. After that, also, we had some pretty large ticket size orders considering QR SAM also, which is at the size of 30,000 crore. So that puts defense sector again in focus. Gaurav, let me come to you on this one. Any of the defense name that stands out to you?
First, I'll come up with a disclaimer here. We have recently suggested some of the defense companies being discussed here. Mazagon Dock looks pretty much upbeat, and BDL as well. So these are some of our favorite stocks at the moment. They have performed well in the past. Some little bit of correction was seen on profit taking was visible, and I think these kind of profit takings are good buying opportunities. Rightly said, the recent ongoing rift between Israel and Iran, Operation Sindoor, and other geopolitical tensions arising here and there, not settling up of the Ukraine-Russia issue, keeps this sector on the limelight.
Right, so that's with regards to where the defense pack goes. But let's quickly just address the flashes. Your Air India's London flight that has been cancelled. In fact, flight AI 159 to London that was scheduled to take off at around 2 is, I think, is what I'm picking up. That has been cancelled. Now, the reasons with regards to the cancellation are not known yet, but at around 1:10 is when the flight was scheduled, and that has been cancelled so far. So that's the latest update that we're picking up in terms of where the aviation cycle goes. That's again an Air India, a London-based flight. It's a Boeing 787-8 Dreamliner operated flight that has been again cancelled, and assuming and taking into consideration last week's crash, probably that could be one of the reasons why there is some glitch that could have come in. But that it was, this is something that we will monitor at NDTV Profit. But very quickly, latent view. The stock is up. Volumes are up around 24 to 25 times its 30-day average. The return potential is around 6 to 7% if you have to look at analyst estimates. And the other stock that I want to talk about is NRB Bearings. Stock is up around 7 to 8%. Volumes are up around 3 to 4 times. Both these counters, Gaurav, what are charts indicating? You seeing further strength?
NRB bearing is looking very attractive at current levels. It just tested its 150 DMA and bounced back after that, trading firmly above its 200 DMA as well. I think this stock is all set to test 290 to 95 zones.
So that's with regards to where NRP Bearings is concerned. But Raghavendra, let me come to you also on Z Entertainment. They held 2 board meetings and the outcome is there. I want to understand your view on this.
So after the deal with Sony collapsed, there was some disappointment in the last few quarters and how Z Entertainment would unfold, even in terms of corporate governance and the boardroom. But I think the management has come out, the entire industry is settled and the investor fraternity is also pacified. So we believe that even at 138 levels, Z Entertainment could be a contrarian call and could be a good bet if one look at a 2 to 3 year investment horizon. Company will move on slow and steady now. So we believe that with this infusion of promoters into the company, where they would put more skin in the game and kind of stakes in the company going up, G Entertainment could be a buy. We expect a 25% upside at current levels and a price target of around 175 to 180 in the 12-month to 15-month investment horizon. So it's a buy on Z Entertainment at current levels. This recent development boosts their overall valuations and the valuation metrics and comforts the investors for a longer term investment. It's a buy at current levels.
At current levels, but my colleague Somit had pointed out earlier as well the kind of EPS dilution that could be happening in the range of 14 to 15%. And when they are sitting on a cash balance of 2,400 odd crores, what is the requirement of infusing in the company so far? It's an interesting game. The Raghavendra does have a buy rating on the counter, but completely out of time. Thank you, Raghavendra. Thank you, Gaurav, for joining us on the show and sharing the views. In fact, thank you, viewers, as well. A wrap from Anushi, the team that put the show together, and myself. In fact, lots more lined up on the other side. Please stay tuned to NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis. Conversations that matter. We break it down, cut through the noise and set the context for you. Hear from top policy makers and thought leaders from the world of business.
Hello and welcome. You're watching Top Trades on NDTV Profit with me, Somit Sarkar. Well, if you look at the markets have Nifty has declined around 100 points from day's highest point. In fact, after gaining close to 250 points yesterday, we are again seeing a downtick, which clearly shows that the 24,950 level is working as a resistance here for the benchmark. When it comes to sectoral indices, Nifty Pharma is down around 1.5% in trade, followed by Nifty Metal, which is down 1.2%. Nifty IT is the only sectoral index which is trading in green. It's up 0.9%. Now, if you look at the stocks that have been leading the rally in the Nifty IT index, it's Tech Mahindra, Persistent, LTI Mindtree, Infosys, which are gained more than 1% in trade today. When it comes to the Nifty Pharma index, the stocks that are leading the losses here is Granules, it's down 3%, Lupin again down 2.5%, Oro Pharma down 2.5%, Natco down 2%, DV's Lab down 2%, while Sun Pharma is also down around 2% in trade. Apart from that, the other sector index is Nifty Metal. Now that's down around 1.5% in trade. Stocks that have fallen the most, Hindustan Zinc, after the company announced the mega capital expenditure plan of close to 12,000 odd crore rupees. Hindustan Copper is down around 3.5%. NMDC down around 2% in trade. But the stock that continues to remain in focus is Sterlite Tech. Now, why the stock is in focus? Because on a YTD basis, if you look at the gains for Sterlite Tech, it's more than 25%, and this is the best start that the stock has seen to the year since 2021. The stock has been gaining for the last 3 consecutive months, and in the month of June so far, it has gained more than 55% in trade, which is the best ever monthly gains that we have seen for Sterlite Tech. Now, what were the recent announcements in Sterlite Tech? Firstly, the company announced the launch of new generation of data center solutions, and they also announced an order win of close to 2,630 odd crore rupees. Now, the key question here is whether these announcements actually warrant a rally for Sterlite Tech. Well, the simple answer is no, because if you look at the data center announcement, it is just a product launch, and it does not mean that the company has got new orders or got confirmed orders for this new product that they have launched in the market. And also the order win that the company had announced of around 2,631 odd crore rupees, it is not for Sterlite Tech, it is for the demerged entity, which is now not part of the listed Sterlite Tech entity. Also, this order announcement was just another notification that had come in on the exchange. Earlier also, the company had announced this order win back in March 2025. So nothing new in this order announcement which has come in from Sterlite Tech. Now, if you look at the company's performance of late, operating performance has improved in the past couple of quarters on the back of inventory destocking, which is coming to the final stages. Along with that, the company's net debt to equity, that has also come down to around 0.7 times from 1.4 times that we had seen earlier on the back of demerger and the fundraise of around 1,000 odd crore rupees that the company had done. But again, if you look at the net debt on a standalone basis, which is the absolute number, and the leverage ratio, that is net debt to EBITDA, that continues to remain high. The net debt number stands at close to 1,350 odd crore rupees, and the leverage ratio stands at around 3 times, which is much ahead of what the company has guided of around 2 times. And what would be the key triggers for Sterlite Tech going forward? Firstly is the BharatNet orders that could be a key trigger, because the estimated opportunity size here is around $2.5 billion US dollars. The US orders could start coming in from 2026. That's what this company is expecting, and this with around $42 billion of funding that US has for fiber project, it could actually drive the fiber demand going forward, is what the street is expecting. And lastly, when it comes to data center business, the data center and the enterprise segment is expected to contribute around 25% to the top line. So that could be also one of the key triggers for Sterlite Tech going forward. Let's welcome in Sneha Poddar, the Vice President Research Wealth Management with Motilal Oswal. Sneha, coming to you firstly on Sterlite Tech, have you seen this counter? The stock has gained more than 55% so far in the month of June. Any specific triggers that you have noticed for Sterlite Tech here?
See, for Sterlite Tech, I mean, the AI, the recent news is a big positive for them. And moreover, if you see for overall for the telecom space, the capex intensity is expected to improve. In fact, it has started intensifying, and going ahead, it's expected to pick up pace. So Sterlite Technology stands to benefit from it. So these are the two main triggers which is driving the rally. Having said that, post a sharp up move, I would suggest to not make any fresh entries at such a high level. Probably one can let these stock cool down a little, and then probably one can have a look at them.
Right. Well, another stock that remains in focus is Vishal Mega Mart. Now, this is after Kedara Capital has sold close to 10% stake in the company. Let's get in Mahima with more details on that.
Right, so as you rightly mentioned, it's the promoter stake sale that is set to take place. In fact, it has taken place and the promoter is set to exit the certain stake in the company, and around 93.6 crore shares were exchanged in six different blocks today. Around 20% of equity changed hands in these block trades, and floor price was set at 110 rupees per share, which is at a 12% discount from its yesterday's closing price. The deal size was, increased to 9,800 odd crores from earlier 5,000 odd crores. In terms of how the shareholding will now pan out, the promoters were earlier holding around 74% stake in the company. That will come down to around 54% after the 20% stake sale. The promoter Kedara Capital via Samyat Services is set to sell this particular stake. And in terms of what triggered this lock-in period for Vishal Mega Mart, around 56% exits today, and because of this, around 254 crore odd shares are free to trade, and that amounts to roughly 31,775 odd crores. The shareholding is valued at this amount, and in terms of the current free float as well, that stands around 14,000 odd crores. In terms of how shareholding has panned since its listing, because Vishal Mega Mart was listed in September 2024, 18 September to be precise, promoter stake sale came down from 76% to 74.5%. That was the kind of stake sale that the promoter had done during the first exit lock-in period. Then FI's holding came down from 6.6% to around 7%. DI's holding, however, has increased from 9% to that 12% and public holding has decreased from 6.5% to that 6% mark. So this is the overall view as to why the stock is buzzing in trade today.
And Sneha, coming to you on Vishal Mega Mart, do you see this as an opportunity for retail investors to invest in this company?
Yes, definitely, because post the sharp run-up, the stock has, given the block deal, the stock has corrected significantly. In fact, the correction had started over last few sessions, and now this the block deal further adds to that to the correction in the price. So now this level is seems to be quite a reasonable level for one to make a fresh entry, because overall, in case of the retail sector, if you look at the value fashion retail segment, that segment is doing comparatively much better compared to the premium and the branded peers. So for them, the entire FY25 was very good, because the kind of shift that we're seeing from unorganized to organized, and given the value fashion that they offer, so both these factors are driving growth for them. In fact, for these players, the value fashion retail players, the SSG growth was in double digit compared to the branded players, where we were witnessing low single digit numbers, and moreover they saw the gross margin expansion as well. So this overall space where within retail, the value fashion retail space stands out a lot, and within them, Vishal Mega Mart definitely has an upper hand in terms of their financial performance. So one can actually take an opportunity at this correction and enter the counter.
Right. Another stock that remains in focus is Maruti Suzuki. Now, the company is ramping up its green logistic with its second in-plant railway siding project following Gujarat. This initiative is set to slash 65,000 truck trips annually, saving 6 crore liters of fuel and significantly cutting the company's carbon footprint. My colleague Rishabh caught up with Rahul Bharati, the executive director at Maruti Suzuki, to give us more details. Let's listen into what he has to say.
So we are very happy and proud that India's largest in-plant railway siding or multimodal Gati Shakti cargo terminal is being inaugurated today. It has been done by Honorable Railway Minister Shri Ashwini Vaishnav and Honorable Chief Minister of Haryana Shri Nayab Singh Saini ji. This is India's largest cargo terminal with a capacity of transporting 4.5 lakh cars per year. Incidentally, this is the second one, and the first one is also from Maruti Suzuki, which had a capacity of 3 lakh. So that was in Gujarat. Today we are inaugurating it in Manesar, and this is a very positive move for industry, because we can decongest a lot of road transport and shift the dispatch of finished cars from the factory to dealers instead of road transportation to rail transportation. So it will decongest roads, it will cut down many truck trips, 65,000 truck trips it will clear, and that will save about 6 crore liters of fuel which goes into that trucks, and by burning that fuel which is now avoided, we'll be saving about 1.75 lakh tons of carbon dioxide. So it's a very positive move for Indian logistics infrastructure. It makes way for sustainable transportation.
Got it, sir. Beyond this, we just saw one of the cars getting loaded into the train. What is the sort of, in terms of capacity, we're seeing already about 50% of the cars that are built here will be transported to different facilities. Where all are these cars now heading to via these trains?
So there are 17 hubs from where these trains can go immediately, and they are further connected to about 380 cities in India. So that's the kind of connectivity we have. We have been steadily increasing our railway penetration in our dispatches of finished cars from the factory to the dealers or from the factory to exports. We have moved from about 5% penetration to now almost 1/4, 24-25% last year, and we wanted to go up to 35% by 2030, by the turn of the decade.
Right, so that's the immediate target, about 35% of your cars being transported via rail to your various export hubs as well as dealers as well.
That's right.
Right.
Right. Sneha, coming to you on Maruti, the recent announcement that had come in where the company was supposed to delay their EV production, do you see that as a major negative that could come in for the company?
I mean, obviously, in short term, this might trigger a little negative, but then, with regards to this rail structure that the management was talking about, I believe that will be a big booster to their overall margins, because that will bring down the logistic cost significantly. The EV push, anyways, if you look at the overall landscape in India, there's a little slowdown which is being anticipated in the overall, EV space. So if even Maruti slows down, this will not have a major impact on it, because there are various key new launches planned by the company, and if that comes on time, then obviously that would drive the volumes for the company. And with the railway sliding, which the management talked about, so that will be a big booster to their margins. Obviously, the impact of it will be seen over the quarters, but then it will have a good long-term impact. So we are still positive on Maruti from that point of view.
Right. Another stock that remains in focus is Zee Entertainment, as they get a boost of close to 2,237 crore rupees as promoters look to pump in funds via warrants. This will raise the stake close to 18.39% from current 3.99%. Let's get in Vanch with more details on the same.
Right, so Zee Entertainment will be in focus today after a couple of board meets that had taken place yesterday. The first meet was with the banker JP Morgan to discuss growth plans and strategic initiatives for the company. While the second meet, which is of key importance, the board has approved fund infusion, and the promoters are to infuse 2,300 odd crores via warrant subscription, and the issue price for this is set up at 132 rupees. Zee will receive 25% of the first tranche of the payment immediately, with the balance remaining over the next 18 months. The warrant issue will increase the stake of the promoter from the current 4% to 18% in the company. The funds may be used to strengthen financial foundation or fortify core business. Now let's understand why it's considered positive for the company, as it is the first biggest promoter investment post the Zee-Sony saga merger last year, and the fund infusion will help the company to strengthen its balance sheet and stand against the RIL Disney thing. Also, the key negatives for the company would include the company already has a cash balance of 2,400 crores, which is 18% of their market cap. So a question arises, was this fundraise really necessary? And also there is a report on Zee by Motilal Oswal. They have remained neutral on the stock with a target price of 150, representing an upside of 9%. The promoter infusion should be viewed sentimentally positive by the brokerage, and the funding for warrants have been driven by the recovery of certain dues of the SL group. The funds intended to strengthen their financial base, and the use of funds will still remain a key monitor to watch out for. This is what the overall picture looks like for Zee Entertainment.
Right, Sneha, coming to you on Z Entertainment, this fund infusion of 2,200 crore rupees that the company has done, how are you seeing that? Is it a major positive given the fact that promoter holding is increasing in the company, or this could also remain as an overhang because there is no clear direction of how these funds will be used by the company going forward?
So see, the announcement is being viewed as positive for the company, but yes, we really do not know how the funds will be. I mean, basically, it has not been disclosed by the management what is the intended use of the funds, and so the key monitorable going ahead will be how the capital allocation will be done. But at the onset, we believe that this fundraising is positive. Now, if we in the like recently, the management did talk about that they would improve their overall margin profile to the industry levels in FY26, and they are actually looking to deliver decent revenue growth. So, in order to drive this and in order to see a sustainable recovery in their overall revenue profile, obviously investments are required, and probably the funds will be utilized for it. But since we do not have much clarity, so we are still awaiting those clarity. But fund infusion will provide power to the company's balance sheet to improve their competitive positioning. That's what we believe. So from that angle, we are positive on the company. Even the valuations are pretty attractive. But then there are few key monitorables, like as I mentioned, the capital allocation, and along with it, what's the outcome that comes out with regards to the ongoing litigation for ICC rights with Stars. So that will also be another key monitorable. So these two factors are making us a little cautious on it, but otherwise the valuations are pretty attractive.
Right, another stock that remains in focus, NMDC, as India's top iron ore miner, faces squeezed revenue and margins as global prices have taken a hit. But what about some other companies in this segment? Let's get in Vansh with more details on the same.
Yeah, so iron ore prices have dropped significantly, and let's look at the impact on the Indian metal and steel companies of this. So the NMDC is involved in primary ore mining, and it's a direct negative for the company, as they will affect their revenue and the profit margins for the company. Also, we need to wait for the pricing formula. The NMDC has guided that there will be a new pricing formula to shield itself from the global volatility. So this will be a key thing to watch out for. Second, when it comes to Tata Steel will see an improvement in the operating margins. However, they are also engaged in iron ore mining. 40 million tons of iron ore has been mined by Tata Steel in FY25, augmenting iron ore capacity in line with steel capacity. The second one in the radar is SAIL. There will be a positive on account of decline in raw material cost versus SAIL. However, it is the third largest producer of the Indian iron ore. So, SAIL caters to 100% of the requirement of itself. So it's a mix for the company. Third one on the radar is Vedanta. There has been a decline in raw material cost for the pig iron operations. However, Vedanta will be impacted negatively as the overall annual saleable iron ore production is at 6.2 MTPA megatons per annum, which is up 12% year on year. However, there will be a positive impact on JSW Steel as they rely significantly on external purchases, which will further see an improvement in the operating margin. So lower operating cost amid declines in iron ore prices will be viewed positive for the JSW Steel. This is what the overall picture looks like for the steel pack.
Right, Sneha, coming to you on this metal space, yes, fall in iron ore prices is definitely negative for NMDC, but how are you looking at the steel sector currently?
Okay, so see, overall steel sector is looking quite promising because on the domestic front, with the capex program being front-loaded by the government, so obviously the steel demand will pick up quite drastically. So from that angle, we are quite positive. Given the global turmoil, obviously the price fluctuation will be there. So on that front, we are a little cautious, but the domestic demand will keep companies like SAIL, Jindal Stainless Steel in action. Now, we really prefer currently Jindal Stainless Steel because it's the leading player in the stainless steel segment, and that segment is doing pretty well. There are a number of there are various sectors which is driving the demand for them. It's like across the segments that we are witnessing, and with the company moving from the basic stainless steel product to the various value-added products, it has transitioned very well, which is driving the overall margin profile for the company. So, in the entire space, while the steel companies are looking good, within them we really like Jindal Stainless Steel currently.
Right. New developments coming in for Aegis Transact. The company continues to fail to pay its employees even after the chairman promised repayment plan by mid-April. My colleague Agnidev is outside the Prabhadevi office to bring us all the latest developments when it comes to Aegis Transact.
What you are looking at right now was the entry to the corporate office of AGS Transact Technologies, a cash managing company which provides ATM services to other listed lenders. Now remember that AGS is a company that is facing corporate insolvency and problems with its cash management. But employees are also saying that the company has now employed bouncers to protect its top brass from employees who are coming in from other states demanding their overdue payments. So this is a wider issue where employees of AGS Transact all over the country are saying that they are not being paid their dues for at least 5 to 7 months. Dues which range from anywhere between rupees 3 lakh to up to 9 lakh per employee. Now remember that these employees were promised by the chairman Goyal earlier in April, where he had said that a resolution plan for paying outstanding dues would be issued within the month. But April has come and gone and no resolution plan has been given just yet. And these are employees who are also unable to quit the company, which is a very important thing to note, because as the company is unable to pay dues, people have just stopped showing up to work. This includes people from the HR department. Now remember, the company had around 2,500 employees and a senior level executive told us that less than 50 are now actively working for the firm. And as the HR department has cleared out, stopped showing up to work, there's no one to process resignations, there's no one to issue relieving letters, and there is no one to transfer PFs to other companies. So as an AGS employee, even if you put in your resignation, chances are it is not getting processed. So how do you then join another company? These are issues which employees all over the country for AGS Transact have echoed. We have talked to people from multiple cities and all of them are giving the same concerns. They have also issued legal notices to the company and the management, but there has been no response. Ravi Goyal has gone incommunicado and there has been no update. We have tried reaching in through texts, calls and even email, but even to us he has given no update. So even if a company fails to operate on its corporate level, remember the issue always boils down to real employees and on-ground challenges.
Well, that was the news coming in when it comes to Aegis Transact. Now on to a big exclusive ED crackdown on betting apps. Former cricketers and celebrities are on the radar. Shrimi is joining us with more details on the same.
Indeed, the ED is widening its probe into illegal betting case where the now focus is on celebrity endorsement. What we are picking up from our top sources in ED that the agency has reached out to popular personalities and former cricketers, including some Bollywood personality as well, including Yuvraj Singh, Harbhajan Singh, etc. And they are seeking explanation on why they are endorsing such platforms which are banned by Government of India. And in fact, they're also saying that that is the clear violation of several Indian laws, including PMLA, FEMA, and the advisory from the Information and Broadcast Ministry. Now, sources telling us that during the course of probe, ED actually observed that how these betting platforms are using surrogate ads to kind of dodge its identity. For example, XBet became XBAT, and that is how they are kind of marketing themselves as skill of game under the pretext of online gaming to kind of hide its illegal operation. The second important fact emerging during the probe is that how the mule account and Benami transaction is being used to channelize the whole transaction, which ED is currently looking at, and plus the kind of promotional payout being given to some of the media houses. The ad rates are between 50 crore to 100 crore, and that is what they're also seeking inputs on. Some notices already been sent to these celebrities and some will be issued soon in the coming weeks. Some interesting estimates have been also given by ED officials. One is that how this entire market is growing and 30% annually and reaches around $100 billion. 27,000 crore is what the tax evasion, the top popular betting apps are actually evading. And third is that how the traction is increasing between January and March. March alone, they have seen 1.6 billion of traction, which clearly indicates the social as well as financial consequences of this entire, illegal betting platform. So ED is probing this entire case, and we will see more notices and more names emerging in the coming days.
Well, city gas distribution companies also remain in focus, and this is after Nomura has come out with this note where they have upgraded the rating on Mahanagar Gas to a buy from neutral, while the target price remains at around 1,680. For IGL, they have maintained neutral rating with a target price of 210, and when it comes to Gujarat Gas, they have a reduced rating with a target price of 406. Now, their brokerage says that the falling APM gas prices, which is the cheaper gas allocation that has been done, is kind of a near-term challenge for the city gas distribution companies. However, the same could be manageable by them by taking price hikes. Now, they are also saying that both Delhi and Mumbai are planning to roll out aggressive policies to incentivize or increase the usage of electric vehicles. Given the fact that their rising air pollution has been one of the major concerns, but the brokerage believes that CNG as an auto fuel could grow alongside electric vehicles. They're also saying that inclusion of gas in this GST could benefit the entire sector, but Gujarat Gas would benefit the most out of this. Now, one of the reasons why the brokerage has upgraded its rating on Mahanagar Gas and why Mahanagar Gas remains one of the preferred buy for the brokerage is due to its highest expected volume growth amongst peer, limited exposure to volatile industrial and commercial segments, attractive valuations compared to peer, and also says that MGL is much better placed compared to IGL when compared to EV related regulatory challenges. So these are broadly the factors why the brokerage has upgraded its rating on Mahanagar Gas. Neha, coming to you, any view that we have when it comes to city gas distribution companies, and what would be your top pick here?
Yeah, so as you rightly mentioned, even we have mentioned in our recent report that CNG is one of the fastest growing engine types in India, and it is gaining traction because it's more affordable when we compare to the EV vehicles. And moreover, if you look at the recent various policy support with regards to EV, I mean somehow the policy support is waning off, and IEA has recently cut its oil displacement estimate by 17%, and more cuts are likely. So all this indicate that the CNG market will pick up much faster compared to the EV market. So keeping that in mind, these city gas distribution companies will benefit as the market share of CNG vehicles improve. So with the higher penetration, obviously the margin expansion will take place for these companies. Now in this sector, we prefer MGL, where MGL and IGL. In fact, in case of IGL, we recently upgraded the target price as well. So both these companies are our preferred picks.
Right. Thank you, Sneha. Thank you for joining us and giving us your perspective on the markets and the stock that we discussed. With that, it's a wrap on this edition of Profit Top Trade. Stay tuned and keep watching NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis. conversations that matter. We break it down, cut through the noise and set the context for you.
Hello and welcome. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita. Let's look at where we are on the Nifty. We're off the day's lows. So that's likely a positive, but we're 100 points down on the Nifty 50 as we speak. 0.4% lower with the Bank Nifty underperforming marginally. Let's look at the Nifty 50 intraday, and we'll see that from the lows of the day, it pulled back up a little bit, just a wee bit, and we clocked a low of 24,813. So around 40 odd points or maybe 30 odd points from the day's low is where we are at this point. Let's look at the heat map. It's extremely weak breadth. That's what we're seeing. Just about 14 advances to 36 odd declines. The declines are significant outside of IT. You can see some IT names standing out. Tech Mahindra and Infi, HCL Tech, TCS, all of those doing fairly well for themselves, and Asian Paints is doing well. Despite all the selling that's happened, it's been absorbed very, very healthily, and that's what's giving the stock a little bit of a lift. You're seeing HDFC Life and SBI Life do well, second day on the trot again. So some of those themes continuing to play out, especially life insurance as a theme. In terms of losers, well, plenty of them, but no big ones. Let's look at the contributors as well, and that will give us an indication, especially on the IT pack, which is dominating the positives. But you look at some of the losers on the large cap space also not contributing significantly to points, and that's what's reflecting on this advanced decline ratio. It's just 100 points despite a 35 stock out of the Nifty 50 sitting in the red. So that's the way to look at it. Let's look at sectors now, and within sectors as well. You look at IT standing out, no doubt there at all, and no surprise. But look at defense doing very well in trade, 0.5% higher on the Nifty India defense. What's not doing well? Metals, pharma. Within the large cap basket, even auto is sitting around 0.6% lower. We spoke about banks as well. So those are some pockets within the large cap space. The PSU banking index is down around 0.5% as well within the mid small cap kind of space. So that's how it's shaping up. Let's look at the advanced decline before I toss it to Neeraj for broader markets, and look at the volatility there. We were sitting well on the breadth for a long period of time. Midway through the day we reversed, and now there's been such a sharp reversal. We're sitting 1400 declines to just about 750 advances. Neeraj, broader markets.
I mean, 0.5% lower, right, for the mid cap and the small cap indices apiece. So therefore, you know that the strength isn't there. But you could even argue that part of this would have been anticipated. I mean, with all that's happened overnight and the evacuation of Tehran, I presume that is what is leading to this kind of a move. You would expect that to happen. Shipping companies are bearing the brunt, so you would see a Shipping Corporation of India presumably at the top of the pile, and I'm guessing that giving it company would be names like GE Shipping. So that one bucket isn't quite doing well, and then there is varied set of stocks which are correcting. So Jubilant Ingravia is down about 6%. So is Hindustan Zinc, down about 5%. Valor Estate for the last 2 days has been correcting after having a meaningful uptick in the preceding few. So those are the key losers in trade. I mean, you could add a Manappuram, Aster DM, Hindustan Copper, showing that the metal names aren't exactly doing the best in trade today. On the gaining side, Sterlite continues to rise and shine. Happiest Minds has a 10% uptick as well. There's strength in Hitachi Energy, which is up about 5%. And names like Nuama, Mazgon Dock, and the pipe companies like Supreme, etc. are all doing well for themselves. But let's take it to our guest to try and understand what to do in a scenario like this. Kush Bohra, founder of kushbohra.com, with us on the show to talk about how does he approach trade. Kush, you were arguably cautious on Monday morning. For now, that caution is paying dividends for today. My question is, from levels that we are at right now, is there a trade, fresh trade, that you can initiate on the Nifty or the Nifty Bank or any other index?
Sure. Hi, Neil. First of all, a very good afternoon to you and to all the viewers. Perhaps on Bank Nifty and on the long side, and I'll come to that in just a minute. Nifty, if you look at it right now, has a PCR of 0.86 thereabouts, which means it's neither here nor there, but certainly closer to the oversold territories. Put option for the weekly expiry. This week's expiry has a good base near 24,800 that is acting up, but we are seeing the resistance is also slipping lower. So now you've got a good call base at 25,000, and we did see Nifty recover, or rather slide from those higher levels. I think Nifty is going to be a no trade for the next couple of days at least. There is a lack of positive news, and if there is any, it's on the negative side. So I think a long trade on the Nifty is avoidable. Short trade also, because of the support zone that we have close to the 24,800 mark, the very near term support zone. I think that will act. So consolidation is perhaps par for the course. I think this is something that the option writers might enjoy, a whiff of, or rather some trading, in the Nifty. Now coming to Bank Nifty, what's happening here is that the heavyweights, ICICI and HDFC, we've been speaking about how these two were close to the resistance zones, and hence an upside, a big one on Bank Nifty at least, was a little unlikely. Now they've corrected, and they're very close to support zone. So I think further downside for Bank Nifty could be restricted to 54,800, perhaps 55,000 levels. PCR is now 0.7, and we are seeing some sort of consolidation with a mild positive bias. Not today, but if you put the last two sessions together, then HDFC, ICICI taking some support at key levels. This is actually a healthy sign. I will play for a rebound on the Bank Nifty, but here too, 56,000, 56,200, those levels will perhaps act as a resistance. So mild bullishness on Bank Nifty. Nifty at the moment remains, an avoid trade, unless of course you're an option trader. But since you mentioned that, this is only for professionals and who know how to deal with options. So have your risk management systems in place if you do sell options.
Does this apply to the stock recommendations that you are going to give today, Kuch?
Yes, indeed it does. Needed a long and a short. I have to include a short just to be a little cautious, on the markets and given how everything is panning out. So first with the long trade, Lloyd's Metal, very interesting moves on this one. The dip that came about 4 sessions ago has been bought into very smartly. Volumes today are already clocking the average volumes for the last 20 odd sessions. And we've got about an hour and a half or so left. So Lloyd's Metal very interestingly poised. I think 1545, 1575 are your near-term targets. 1490 is where you place that stop loss. Now on the short side, I've got Kalyan Jewellers. Here what's happening is that the stock's actually seen a good rise if you see in the last few months after the debacle that came about. But this is being used as an opportunity to sell. Even as we speak, the stock is actually at the low point of the day. So if you want to consider a short trade, I think Kalyan Jeweler is setting up beautifully for targets of 510 and 500. You could consider shorting the June futures of Kalyan Jewelers with a stop loss around the 530 mark.
Got it. Okay. Now, just want to mark these flashes, Harsh, for a moment before we move ahead. And Israel Defense Forces, and this is coming in from the agencies, I believe, from Bloomberg. The comments are that it's too soon to assess the success of the attacks on the nuclear sites of Iran. And I think I read that they are deepening attacks on the Iran nuclear sites every day. Now, this would mean that maybe, if you read deeply into it, that unless success is met, these strikes might continue. So are we looking at an earlier resolution or a very early resolution? Remains to be seen. Let's wait and watch. But these are interesting comments. I wonder what's happening to crude prices as well. It's something that we'll mark a bit later on in the show as well. But G. Chokalingam, founder and MD of Economics Research, with us as well. Mr. Chokalingam, thanks for joining in. Are you risk off right now, or are you fully invested?
We have suggested our clients to fully stay invested.
Okay, you're not worried about any kind of major downtick because of what's happening between Israel and Iran?
I would see its net impact on the oil prices. I would press the panic button if crude oil prices crosses $90 and moves close to $100.
Okay, and if that were to happen, what's the strategy? Are you going to sell a certain pocket of stocks, a certain sector? How do you go risk off? What do you believe will likely be may not be impacted, but at the same time might well see a correction and therefore may actually be something on your buy list as well?
Yeah, so there are a couple of points. First of all, despite such a intensive conflict, the markets are not crashing. So the first lesson I learned is that after this Ukraine war, even on our own border, market is slowly learning to live with this war. Probably because that's the second point, that soon some compromise may be found, some talk may happen, and it may not escalate into a war among many nations. So that is why I do not want to rush to give any sell call on the market, because the punishment would be heavy. If at all there is a moderation in the conflict, the bounce also would be very short. Yes, one has to monitor the oil price. That is a consequence of all these conflicts, because that matters a lot for Indian economy and markets. So now it's already recovered from the bottom 25%, 52-week low. Still it is around 14-15% lower than the 52-week high. By any chance oil goes to $90 to $100 range, then we will have a significant adverse consequences. So if such fear comes and if we see the trend, I would give a sell call in equity asset to generate a cash of 30-40%, and the balance equity you should have at least 50% in the large Sensex and Nifty stock, because DIs would come and rescue the market as usual. So therefore, you will have a relatively more comfort with that approach.
Okay, Mr. Chokalingam, just give us the composition. Is there some amount of cash you're sitting on at all? And would you generally do that to try and wait or find opportunities at the right time?
No, basically I hold a research license, so I only keep writing it to my clients and clients take the decision. So in such a situation, yes, when there was a conflict on our own border, I even gave a suggestion of 20% cash, but now I am sitting very tight. It is far away from us, and I believe ultimately after both parties seeing bigger damages, they would come to talk, and I feel there may not be a need to generate a cash call at this juncture. So still one needs to remain alerted, because for us what would impact is only the trade and oil. That is what we have to worry, because otherwise the conflict between Iran and Israel, I don't think it can affect our other fundamentals. So therefore I believe there is no need to give a cash call now. Only if oil price goes above $90, then one should cash call.
Okay. Mr. Chokalingam, if there's one sector you had to bet on for the next 12 months, what would that be?
Still public sector banks.
Public sector banks, okay. You expect ROA re-rating to continue for all of them, or would you go selective?
Obviously, it will be selective. Segment as a very bullish. Very interestingly, there is a structural change. Yes, market has started rewarding. There is a massive structural change as far as public sector banks are concerned. All of us know about 10 years back, gross NPA used to be even 16%, anywhere from 8 to 16% for majority of the public sector banks. Net NPA used to be even 6 to 8%. And in the last 10 years, for majority of the public sector banks, net NPA has come down below 1%. It is around 0.55, 0.6%. So the quality of asset improvement in the last 10 years is unbelievable. And second, what was considered as a pain point, that is vast network, as against digital network growth, now that what is considered as a pain has become a blessing, because of vast network, the PSU banks are able to retain the low-cost deposits. They are able to avoid major slippage in the growth rate of overall deposits. So particularly the low-cost deposits stays with a very high level as compared to many private banks. So these two are helping these banks. So obviously, even now, many banks are trading at 1.1, even one time, one or two PSU banks below one time adjusted book value. I think at this rate of growth in the sector and the quality of assets, time has come for PSU banks also to command, if not 2-3 times, at least 1.3 to 1.5 times price to adjusted book value. That itself would mean 30 to 50% upside from the current side for selected quality PSU banks.
Okay, well,
the other interesting piece is, of course, what's happening to some of the other smaller pockets as well. And we've been talking about the kind of strength that some of the IT names are showing. And today is no exception, because suddenly you have a Happiest Minds which has come to the fore and is up about 10%. So that is our stock of the day. And let's get in Jasmeet to talk about what is it that could be working for Happiest Minds. Jasmeet, good afternoon. What's happening with Happiest Minds?
Well, very good afternoon. The Happiest Mind is up 10% in trade today. So let's understand why is this happening. But as of 2025, it has been a transformational year for the company. The company has leveraged and grown more towards the inorganic growth sectors, which would be BFSI and healthcare. And company continues to focus on Gen AI with a separate Gen AI unit. While company has had few acquisitions, that would be where company spent 90 million US dollar on firms like Pure Software, Aros and Middle East Tech. While company is also benefiting from cross-selling of its services to its acquired entities, company is also looking to acquire furthermore clients in cybersecurity with a size band of 5 to 15 million US dollar. Understanding the future outlook of this particular share, company expects a double-digit organic growth in the coming time, while it's also looking to expand geographically. While there are also key risks which an investor look for. Firstly would be the slowdown in the US, which remains on constant focus. And secondly, the education tech has seen a slight slowdown, which can hinder and impact the revenue in the coming time.
Thank you so much for that, Jasmeet. We'll let you go. But Neeraj, when I'm looking at Happiest Minds and I'm looking at what the average analyst is baking in terms of upside, just two analysts have a buy call or an accumulate call above 700 rupees a piece. The stock currently sitting at 665. So therefore, upsides it seems is capped, while Anand Rathi is very positive, and that note today has sent the stock zooming. It's 10% higher today. But the average return potential on this one is -1% now for the next 12 months.
Wow.
Yes, I'm just trying to also see, it's, of course, trading volumes are the other piece which is pushing the stock higher. It's trading, the trading volume is at 5 times today, and more than 60 times the 20-day average. That's what's really pushing the stock higher. The RSI is above 70. Want to quickly take a view with Kush, in fact. Kush, what's the sense like on a Happiest Minds?
Book profits, or at least start to book profits.
Okay.
Not just because of the big move that you're seeing. There's a supply zone coming up from 670 to about 695, 700. Since you mentioned that number, but there's a supply zone coming in, around that level. Now, if anyone's been holding on for a while, they're perhaps seeing their costs now. If you're holding from lower levels, you're finally seeing some gains. So not a bad idea to start booking profits and, take some money home. Not, as I said, I rarely get disturbed by these, big moves on a single day unless there's a technical factor to it. Right now there is, and as I said, that's the supply zone. 670 to 695, the stock could see supply pressures. If, however, in this momentum, the stock is able to take out the 695 level, 700, to round it off, then you would see further upsides. But given the kind of setup that there is, we are in right now, I would suggest book profits partially, hold the rest of the quantity.
Okay, Mr. Chokalingam, any view with regard to Happiest Minds in particular first?
It's a good opportunity to sell in phases because it's a more of tactical these days. It's a clear sell even at current price, because year-on-year profit growth is not at all supporting, the kind of PE it is enjoying now. I would give a sell call on the stock.
Appropriate price to earnings for this one, sir. Give us perspective.
See, if profit is able to grow 20%, for a momentum stock like this, I would maybe happy to give a 40 PE. But if you look at the consolidated profit growth for FY25, profit is almost stagnating. The growth is not at all there. And why should one pay 45 to 50 PE for this kind of profit growth? And if you see for last 2-3 years also, it has been struggling. There is a big mismatch between the the PE multiple and year-on-year profit growth. So I would sell, and I believe for this kind of valuation, it is very difficult to expect the company to benefit from any consolidation or merger acquisition which can happen in the industry. I'm not talking about happiest, but I do believe in further consolidation and merger and acquisition in the entire small and mid-sized IT space, because large companies are finding it very difficult to grow, even at 4-5% their revenue in dollar term.
Point taken. So I want to cap off this IT discussion by asking you, what do you make of some pockets of the market believing that IT will likely see a turnaround H2 FY26? Do you see that at all? And we've seen the IT index rebound quite sharply from those lows. In fact, it's been a rank outperformer last 4-5 trading sessions. Do you think that that this warrants merit in terms of the possible outperformance that we could see?
I may be absolutely wrong, but I have a firm view on the IT stock. One, the wealth creation story in the IT stock is over, especially in the large IT stocks. And the large IT stocks are going to find it very difficult to grow beyond 2 to 4% of their revenue in the dollar term, at least for next 4 to 6 quarters, if not much longer. Third, now buybacks are not happening because the tax provisions are not conducive for buyback. On the other hand, these companies continue to generate a lot of cash. And what happened in 2014 to 2019, I expect that kind of trend to repeat again, because if you see in Q4 also, the revenue growth was around 4% for majority of the large IT companies, which could encourage more acquisition and consolidation like what we saw from 2014 to 2019. And therefore, small and mid-sized IT companies which are trading at around 20 to 25 PE, enterprise value to analyze IT revenue around 2.5 times, they are the kind of stocks which can get re-rated, and there is an opportunity to create a lot of alpha or even significant wealth in such stocks. So one has to look for the comfortable valuation in terms of PE and also enterprise value to annual revenue, because most of the acquisition from 14 to 19, they happened around 2.5 to 3.5 times enterprise value to annualized IT revenues. So that is the benchmark I have been using. So I am very bullish on that particular space.
Got it. Coach, what are technical indicators suggesting within the Nifty IT basket? Any names that are standing out and you would buy from a short-term perspective?
I'd still go with the likes of Persistent and Coforge, and adding an emphasis to it. Bit soft today, but on the whole, if you see, it's had a very good run. Over the last 10 odd sessions, continues to add volumes on the on the long side. So if I were to look at it, yes, I do agree that the bulk of the trading opportunity or money making opportunity in the IT space lies with the mid cap names. So Persistent and Coforge preferred, and adding an emphasis to that list.
Okay, all right. So that's all about IT, and plenty happening there. The largest sector in terms of, or the best performing sector today. Let me go on to the second best, in fact, defense. And BML charges ahead is what the company is confident about. They're confident of doubling order book for FY26. They're also working on high-speed trains and expect to deliver the prototype by December 2026, year and a half from now. We caught up with Shantanu Roy, Chairman and Managing Director at BEML. Listen into a slice of that conversation.
We ended the year with 14,610 crores, and I'm looking at the same number as a further order inflow in 25-26. And once we are able to execute, a part of it, and the total order book kitty. So with that, we should end above the current year's order book value by at least more than 50%. The total capex that we are looking at this year will be around 600 crores, and it includes this current facility at Bangalore, plus some more facilities we are creating at Kolar Goldfields, that is mainly for defense, and Mysore unit we are now developing as a hub for defense and aerospace. So we are going to infuse capex for the aerospace facility in Mysore, as well as more defense facilities in Mysore and in Palakkad as well. And of course, to cater to our future needs, we have this new plant which will come at Bhopal. so that we can double the capability for the rolling stock.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis, conversations that matter. We break it down, cut through the noise and set the context for you. Hear from top policy makers and thought leaders from the world of business and beyond. The big question really is, are companies using dark patterns to take you for a ride? The big question we're asking today, is the US heading towards a recession? The big question is, are we sacrificing our health at the cost of convenience? The questions you care about, asked and answered. The big question.
All right, back with India Market Close right here on NDTV Profit. And what's happening to individual pockets is the key thing. So we established that IT is having a great run. We've spoken a bit about defense as well, because that is doing okay. Pharma today though has, so pharma and healthcare are the top losing indices in the session today. And there's quite a bit of a, how do I say, in that sense, a corrective move that's happened. Aurobindo Pharma is down about 3.7. There is weakness in Granules, Lupin, Laurus, Natco. In fact, all of the high-flying stocks of the last few days have corrected a bit. Now, Kush, the charts were looking very strong, presumably in a lot of those, if not all. But what do you do now? Let's say you are long in a Granules, in an Aurobindo Pharma, in a Lupin. Would you stay with your longs or would you cut your positions?
Neeraj, even if you check today's move on something like a Granule or a Lupin, this corrective move started a couple of sessions ago. It'll be a good idea to take some profits off the table. Now, if I look at a Granules, you look at the returns from May up until now, you're still making about 15% on this one. Lupin's practically flat. I think what's happening in the pharma names is more of profit booking. Although it did start a couple of sessions, or maybe sometime during the mid of last week. The fact that they've not been able to recover is more of a worry for me, rather than the fact that they are seeing cuts today. So for most of these names, this seems like a profit booking round, but backed by slightly heavier volumes than I'd be comfortable with. So not a bad idea to book profits. Anyway, they've had a good run, some of these names. So book profits, sit on the sidelines. We'll wait for the next leg of up move, on some of these names.
Book profits or book losses as the case may be, but effectively cut your positions into these pharma stocks for the time being. I believe that would be the advice. Okay, so that's the set of some of the top moving sectors today. But it is 2:30, that time of the show, wherein we do what a lot of people are waiting for, which is what is being heard on the street. And Sumit Sarkar joins in with all the dope in the dealing rooms and all the dope that matters. Sumit, good afternoon. What are you hearing?
Good afternoon. Firstly, the stock that is in focus on HNI list is Tata Chemical. Dealers are indicating that large HNIs have started to accumulate this counter at lower levels on expectation of a potential corporate announcement, positive corporate development that could come in from Tata Chemical. So keep an eye out for that. Nazara Tech is another stock. Dealers indicate that the company is started to work on another potential large acquisition, and announcement related to the same could come in. When it comes to Hindustan Zinc, now today the company announced their capital expenditure plan. The stock is down around 5% in trade. Dealers are indicating that there is a buzz on the street that there could be a potential stake sale from Vedanta, and hence the stock is down 5% in trade today. When it comes to Navin Fluorine and Keynes Tech, dealers are indicating that both these companies have started roadshow for a potential fundraise via QIP. So keep an eye out for Navin and Keynes. The fundraise announcement could come in. And lastly, when it comes to Astral, Supreme Industries and Prince Pipe plastic pipe manufacturing companies, dealers are indicating that a big domestic broking firm might initiate coverage on these companies very soon.
Sumit, the interesting one is the Hindustan Zinc and Vedanta, right? About 63.5% stake that Vedanta holds in Hindustan Zinc. But it's been a great dividend spinner for them.
Right, it has been giving dividends to them. Today also it has gone ex-dividend. Hence the street is expecting that there could be a potential stake sale, because the capex announcement, I don't think that was that negative for the stock to fall 5% in trade. So this is potential buzz. Let's see whether there is a stake sale that comes in or not.
Could be interesting.
Yeah, but Hindustan Zinc has also had an insane run up because of silver prices. So that's been in focus. Thank you. So Sumit there with all the buzz that we're seeing today. Just an eye on what's happening with pharma stocks for a second, because this flash on your screen, Donald Trump saying that pharma tariffs are coming very, very soon. Nifty Pharma down 2%, but then, so is the street. Let's look at the internals within the Nifty Pharma, and Aurobindo hurting right now, Granules, Lupin, the whole host of them. Now, this has been one boogie which has come back and forth quite a few times. G. Chokalingam with us, who is Kush Bora, founder of kushbora.com. Choka, let me come to you on the whole pharma story. We've seen this play out. Trump says pharma tariffs, stocks take a bit of a hit, then there's collective wisdom that, they can't do without Indian pharma companies, and then they bounce back. Do you see that cycle continuing once more?
I have a slightly different view. I firmly believe that Trump is not going to spare Indian pharma. Yes, he may not impose aggressive duties, but definitely there would be incremental duty hike on Indian pharma, because, as I discussed earlier also, the trade deficit is close to $1 trillion for America. So unless Trump controls the trade deficit across various sectors, it's going to be in deep trouble after 5 to 8 years. That's my firm view. And second, even before this proposed tariff hike is going to happen, the pharma companies are being under pressure, particularly from American business. If you see the Q4 results, many of them have been struggling to post significant year-on-year growth, particularly the companies which are exporting to America. So considering all that, I would be very, very cautious on export-oriented companies. Rather, I would focus more on domestic pharma company, where I do not find any negative trigger. So therefore, I would continue to recommend stocks which are focused on domestic pharmaceutical market.
Some of these, Mr. Chokalingam, these domestic stocks that focused pharma companies that you find interesting?
Yeah, so I like FDC Limited. Of course, after recommending, I also bought in my company. FDC Limited is one stock which I like, because most domestic branded pharma companies trade at even 5 to 8 times enterprise value to annual branded sales, whereas this company is available at around 3.3, 3.4 times. So that is a great attraction. And then one can look at large cap as well, something like IPCO or any other stock, at least 45-50% of the businesses from the domestic branded business segment can be considered.
Kush, do you have a view with regard to pharma? Granules, Oro under pressure, 4% down nearly, both of those names in particular, but even otherwise?
So, Harshan, as we just spoke, I think, I'll exit out of some of those names, but let me just add two more into the buying list, actually. One of them is Glen Pharma and the other is Eris Life Sciences. Now, the reason I'm adding is because, the medium-term trend for these, as opposed to, let's say, an Oro or even a Lupin, which were flat and negative, the medium-term trend for Eris and Glenmark were actually very, very bullish. Now, what's happening is that, along with, the entire pharma pack and with this, news coming about, they're seeing profit bookings. So closer to support zones. And, that comes at 1600 for a Glenmark, about 1700 for Eris. If they do come to those levels and steady ground, then, I will actually look to enter or perhaps re-enter, as the case may be, in the Glenmarks and Eris Life Sciences of the world. The others that we discussed, Granules, Lupin, Oro, some of these, I would actually take some money off the table.
Okay. No, it's interesting. So take money off the table on pharma, as Kush mentioned earlier too. By then the news had also not come in.
The only statement I was making is everyone's already got that idea of taking money off the table on Granules and Lupin. So that was just that little aside. Kush, everyone's already got that idea that you have. Granules and Lupin seeing heavy selling today.
Yeah, just to Kush's credit, just before the announcement came in, he mentioned that if you were long or if you were short, best to take money off on this sector, and then we get to know that okay, it's Donald Trump who is doing this reason. But yeah, 2.25% now and counting. So not the best of days. Yeah, so certainly a bit of an issue. Okay, well, we're talking about stocks which have fallen. Let's now shift focus to three more buzzing stocks in trade today. Anushi Johnson with the details on Inox India, which I presume has gotten an order, or a Siemens, which I presume has gotten an order, or a Tata Platforms, which I think it doesn't have an order, but is active today. But Anushi, why is it that these stocks are active?
Right, so I'll start off with Inox India first. Now, this is on the count of the multiple orders that the company has received at the size of 373 crore. This is the size that we're looking roughly so far in FY26. Now, if you're taking the order split in consideration, 151 crore of orders is for the cryo-scientific solutions segment, 141 crore is for industrial gas segment, and LNG segment contributes about 71 crore of an order size. Now, the company has categorically divided its orders in large categories. So, it had secured a major contract from ITR for repair of cryostat thermal shield as well. Now, taking the context of these order wins in terms of where the order backlog was stood at 1,356 crore at the end of March 2025, while the order inflow was up around 28% in FY25. Talking about Siemens India now, similar peg to Inox India as well. Now, here they've received a 4,100 crore of an order for India's first high-speed rail project. That's the Ahmedabad-Mumbai bullet train project that we are looking at. Now, this was a consortium-led order that we are seeing, in which Siemens share is around 1,230 crore of the total project. Now, what this includes design, installation and maintenance of European train control system level 2. That is what we are seeing. Project execution period for this is 4.5 years, including a 15 years of maintenance services contract as well. Now, order book positioning of this order backlog was up around 7% on a YOY basis, while new orders were up around 44% to 5,305 crore in the last quarter that we saw for Siemens India. Lastly, Tata Platform not in focus on the back of order wins, but on the focus of buyback is the reason why we are seeing this uptick in stock price. Now, the board had met on June 16 to consider buyback, and here the company is to spend 175 crore on shares. This includes buying up to about 20 lakh shares at a price of 875 a piece. Comparing that with the last closing price, that indicates a 34% of a premium. Now, do note that this will be a third tender buyback in 5 years for Tanla Platforms, and it is the reason why the stock is buzzing in trade today.
Okay, Mr. Chokalingam, let me thank you firstly so much, Anushi. But Mr. Chokalingam, let me come straight to you. Would any of these three really look interesting to you? One, of course, Inox India in a niche kind of industry of its own. You have something like a Siemens, and then you have a Tanla. Three totally different stories, but give us your perspective.
Siemens, I have looked at it. The recent digital initiatives give a lot of confidence. Apart from the balance sheet quality and management quality, this is a hold. Even if there is a marginal decline, one can buy. I studied INOX India also. The business model looks quite unique and looks very attractive. Yes, stock trades at around 47 PE, and FY25 profit growth was around 15%, but still Q4 profit growth was almost around 47-48%. So considering the the business model, orders on hand, and the Q4 performance, yes, one can buy INOX India for long term. Tanla, I would sell. I don't know about the management quality, but in the last 10 to 15 years, one simple principle I have followed, which worked out very well for me, that is, if any technology company is using the employee cost at a minimal level and based on the business model is based on purchase of goods and services, I found quite a high amount of risk in the stock. So of course, I would not blame this company. I would not express any doubt on the business model. But this is my personal view that I focus on building the business from the bricks rather than just buying and selling. So if you look at this company, the employee cost is poor single digit of total revenue. So therefore, I would look for opportunities elsewhere.
Okay, another set of companies. So obviously everything is paining and in hurt right now, but metal stands out apart from pharma. The whole pharma pack in pain, but metal stands out as well. And one of them is Hindustan Zinc. That could be more reasons than one, rather than macro reasons. Stake sale concerns or stake sale in the offing is going ex-dividend. Some of those stories also whirling around. It's also run up a fair bit. But the basic premise why it ran up in the first place, with silver prices zooming, Choka, do you think that Hind Zinc at these levels, and if there is some opportunity, should be a buy?
Yes. I have been giving on this media many times a buy call on Hindustan Zinc. Yes, as a metal business, the valuations are slightly stretched, no doubt. But then, as you rightly mentioned, silver is now almost becoming 45% of the total profit, which used to be less than 1/4 long ago. So it is becoming an equally dominant source of profit. And world over, silver stocks are valued much higher than the pure metal stocks, industrial metal stocks. So therefore, I would like this business model, and I would give buy call because the company also giving very good dividend, distributing a lot of annual profits to the shareholder. And third comforting factor is that the government of India is still holding around 30-31% stake in the company. That also adds to a lot of quality to the governance of the company. So considering all that, I would believe that it's a good buy at current rate.
Okay, on the charts, Kush, Hindustan Zinc, or anything that you'd pick up also from the metal pack, if you see an opportunity. But let's talk about Hind Zinc specifically.
Sure. So Hind Zinc, 5 consecutive weeks of positive close. This is the first week that it's starting to see any kind of meaningful cuts. Plus, if you see the last couple of sessions, including today, in fact, have had fairly high degree of high volumes, on the way down. So while yes, the medium-term trend does remain intact, I would want this fall to halt somewhere and then look to accumulate. That could very well happen near the 200-day moving average and the 20-day moving average range, which is close to 465 and about 475. So somewhere between this range, if the stock does settle, then yes, it does make for an entry point. The risk reward ratio becomes favorable. Also, the cooling off that needed to happen after 5 weeks of gains from overheated territories is underway. So let that settle. I think between 465 and 475, there could be a base formation that will happen in Hindustan Zinc. Once that happens, that's where you look to enter, not at current levels.
Not at current levels. In fact, yep. Okay, fair point. Just that particular thing to note that it's had a bit of a rally, and therefore you want to be careful before you try and think more about what to do going ahead with a Hindustan Zinc. But yep, pharma metals are being taken to the cleaners today. As we speak, some of those pharma losses have deepened. Granules is now down 4% as well. With that, the mid-cap index and the small-cap 252 have come off a little bit in trade. But there are a few stocks which are really zooming in trade today on pretty good price and volume action. So I was looking at some of those mid-sized names. Kalyani Steel, for example, volumes versus a 2-week average are at 38 times and the stock is up some 15, 16%, 14% now. Birla Cables, 28 times the 2-week average volumes. The stock is up about 14%. There is strength in Bharat Wires as well as Gokul Agro. A couple of others wherein both the price and volume action are looking very, very solid. So keep them in mind. Well, we spoke to Vikas Khimani of Cardinal Asset Management earlier, who is focusing on 5 key drivers of India's growth over the next decade. He stated that despite geopolitical challenges and global uncertainties, the Indian market remains fundamentally robust. Listen in.
जब जागो तब सवेरा. So as long as your horizon is longer term, like I said, short term I have no idea what can happen, but I don't see any major risk, and I see more positive momentum building towards markets doing well. I do believe that this year will hit new high, and corporate earnings will be in the range of 13 to 15%, which is I think very robust number, and hence that's the view one should deploy in. And history tells us that whenever interest rates do come down, markets do well, both from a growth perspective as well as a discounting rate perspective. We haven't seen anything happening in a meaningful because of the global uncertainty in the tariffs and the geopolitical. So to that extent, even at the current valuation, current price, current markets, you are getting a good deal. Again, I repeat again, I say that view has to be longer term. I don't know what can happen in short term, but I have no doubt that markets will do well. And that's when you should invest.
What are the spaces that you're finding interesting, Vikas? So would you say that BFSI, for example, a little ignored? Do you think that consumption theme now needs to be picked on, or are you as excited about defense as the street seems to be? Just trying to get a sense of where your attention is right now.
I think for us, they don't change very often. We have taken a call that, we broadly play in 5 opportunity spaces where we think there's a great opportunity over the next 5-10 years. Number one is banking and financial services. Again, it's a wide thing, but within that, you pick your stock. Right now, we are very, very overweight in this particular basket. Second one is the entire manufacturing basket, where we think that again, the structural opportunities there. Within manufacturing, you can have a very wide range, right from specialty chemicals to auto components to pharmaceutical to CDMO players to defense to EMS, all kind of things, very wide play. But so that's again a basket been very positive. Of course, you keep making changes based on the what kind of companies you find and what kind of ultimately it boils down to finding a right company. Third one is consumption. As our per capita income goes, from $2,500 to $18,000, you will see many people, consuming more, new and better, and that would create significant opportunities in the marketplace. So that's and fourth one is the infrastructure space, where India is spending a lot of money ports, railways, airports, everything, right? And there will be lots of opportunities out there. And the last in the services space, which includes IT services as well as the non-IT services, such as travel, tourism and all. And within those, you can have very interesting. So across these 5 spaces, you got to identify companies which can offer, superior risk-adjusted reward, risk reward. And we don't chase fads, we don't chase volume, undesired valuations. So I think you have to kind of stick to your knittings, and that's what we do. So across these 5 spaces, we made no changes in last month's crisis. Also, when the tariff was there, we had to make no change in our portfolio, and that just trying to say that India is a very structural story, and if you believe in that, you don't need to react every now and then and adjust your portfolio if your view is long term.
And does a portfolio adjustment get warranted now is the question. Now, here's what's happened. Let's just pull up the intraday very quickly for you, as well as the advanced decline ratio. Sentiment has dipped in the last half hour or so of trade, and you're seeing that gap between the red and the green there expanding as well. The advanced decline ratio also getting in negative territory. So a couple of things happening. Few statements from Donald Trump which have come. He's in no mood. He's saying, I want to get a better deal than a ceasefire from Iran. Now, that makes one wonder, what is that better deal that they're expecting at that point? Bank Nifty also seeing some pain. today. But one stock which seems immune to all of this is Sterlite Technologies. Another sharp gain today, and this has been going on from the last several days. Another 15% up today, actually, fueled by the new data center solutions. That's an announcement which came on the 16th of June. An order win from BSNL came on the 11th of June. But why is the market still enthusiastic, and is that enthusiasm justified? My colleague Somit Sarkar joins with more.
Well, yes, Sterlite Tech remains in focus. If you look at the year-to-date gains, it has gained more than 25%, which is the best start that we have seen for Sterlite Tech so far in the year since 2021. The stock has been gaining for the last 3 consecutive months, and alone in the month of June, if you look at, the gains have been more than 55%, which is one of the best monthly gains that we have seen for Sterlite Tech. So what were the recent announcements post which we have seen this rally in the share price of Sterlite Tech? Firstly, they announced that they have launched a new generation of data center solutions, and they also announced an order win of close to around 2,631 crore rupees. But do these announcements warrant such kind of a rally when it comes to Sterlite Tech? Well, simply the answer is no. Now, I agree with the fact that the opportunity when it comes to the data center business is huge, but this announcement was just a product launch, and there is no firm order announcement or order win that Sterlite Tech has seen in this kind of product. Also, the order win that they had announced of around 2,631 crore rupees, it was not for Sterlite Tech, but for its demerged entity, that is STL Networks. So nothing of 2,600, not the entire amount of 2,600 crore will be coming to Sterlite Tech. Some of it could come to them as part of the cables that they will be supplying, but that will be just a fraction of the total order amount of 2,600 crore rupees. Also, the order win was just another notification, because back in March 2025, they had already disclosed this order win of around 2,600 crore rupees. Now, if you look at the company's performance of late, yes, the operating performance of Sterlite Tech has improved over the last couple of quarters on the back of the fact that inventory destocking is at the final stages. The company's net debt to equity has fallen to around 0.7 times as against 1.4 times earlier on the back of fund infusion that the company had done, and also because of the demerger. However, if you look at the company's net debt and the leverage ratio, that is net debt to EBITDA, that continues to remain high. Net debt stands at close to 1,350 crore rupees, while the leverage ratio, that is net debt to EBITDA, stands at around 3 times, while the management has a target of bringing it below 2 times. Well, now, what are the key triggers going forward for Sterlite Tech? Firstly, when it comes to BharatNet, they are estimating an opportunity of close to around $2.5 billion from US market. They are expecting order rollout to start in 2026, given the fact that they have a funding of $42 billion for the US BEAD projects. There could be fiber demand growing going forward is what the management is expecting. And lastly, when it comes to a data center in the enterprise segment could contribute nearly 25% to the revenue and could be a big revenue driver for Sterlite Tech going forward.
Mr. Chokalingam, firstly, thank you so much for that, Somit. Mr. Chokalingam, on what side of the fence do you sit on when it comes to a Sterlite Tech, and does it warrant the kind of re-rating that it has got? Maybe 10 trading sessions, 75 to 115 stock price.
I stay too far away from this stock. I have not studied the fundamentals, but I have studied the price trend from 2007. Very surprisingly, the small cap has extraordinary volatility in the stock prices. If you see from 2007, majority of the years, the stock tend to fall even 40 to 60% intra-year. So that kind of small cap with huge volatility, I normally stay away. I do not study fundamentals of such companies.
Okay, Kush, do you have a view with regard to a Sterlite?
I do, and it's a sell. It's been on this roller coaster ride for some time, as even Mr. Chokalingam has mentioned. Right now, it's breaking above the falling trend line resistance, which actually started about 4 years ago. But with the kind of volatility that you're seeing in the stock price, I don't think it's a good idea to stay invested. If you do have a position and you're making profits, or there's a substantial reduction in your losses, good idea to get out of this one.
Okay, right. So clearly cautionary, both fundamental and technical. So both those perspectives coming in with regard to a Sterlite Tech, the stock up 14% as we speak. Well, we'll wait for that correction likely. But let's quickly move on. We have a bull versus bear segment. Tata Motors in focus. Jaguar Land Rover has flagged a weak FY26. JLR is 2/3 of Tata Motors' top line, and the recent US-UK trade deal offers hope of tariff relief and potential revival. But Puneet's here to give us a perspective, both of the bull case as well as the bear case. Puneet.
Well, thanks so much for that. We'll be focusing on the Jaguar and Land Rover division because we've spoken a bit about the company as well as the domestic side of the business last week. So essentially, that's one of the first bear cases. They are expecting a revenue decline in this fiscal year, expecting it to go to roughly about 28 billion pounds versus 29 what they did last year, and that's largely because of the what they mentioned, essentially because of tariff impact as well as geopolitical crisis. But those is one of our bear cases, and because of that, the company's revenue is expected to fall. On the other side, they have mentioned that the recent US-UK FTA will help the company, at least in terms of a majority of its manufacturing, because it's in UK, that will help the company impact and get less impacted because of tariffs. That's one of the first bull cases as well. When you look at the other aspect, with a revenue decline, they're also seeing a EBIT margin decline as well. 5 to 7% is what they're expecting in FY26. For context, in the last fiscal year, they did about 8.5% EBIT margin. So it will be a steep downtake, almost 250 to 300 basis point impact on EBIT in FY26 was what the company is estimating. They have mentioned though, and this is a new info that is coming after Q4 earnings, a 1.4 billion pound program of savings for the next few years. At least in FY26, it'll be the first full year. That could help, have some positive impact on the margins. But currently, their outlook looks very weak, at least in terms of EBIT margin profile. Finally, in terms of what the valuation are as well as the guidance, is guiding for free cash flow to be zero in this fiscal year from the JLR division. Last year, they did 1.5 billion pounds from it, and this has been a continuous trend with the company. Between 2019 to 2023, the company did zero free cash flow. 2024 was the first year where they did some, but meaningful of that came in 2025, and again this is expected to be just zero in FY26, will hamper valuations as well. And that's one of the key reasons why JLR is between the, when you do the SOTV valuation, is trading at roughly 2 to 2.5 times EV/EBITDA versus historical valuation of 4 times when the financials were also not in the right place. So definitely the market is reacting to that aspect. Finally, in terms of consensus, we've seen largely being maintained in this particular time frame. Ratings haven't changed much. The target prices have been cut, and that's impacted the return potential to 9.4%. But definitely a tough year expected for JLR going into FY26.
I'd also borrow, Puneet, from, and you talked about some of those notes, what Morgan Stanley is saying. They're also not as negative on JLR and Tata Motors as some of the others, and let's get that to G. Chokalingam also. They're equal weight on Tata Motors, and they say that the worst is over. There is a clear focus on improving free cash flow and improving the EBITDA. Would you have that faith, G. Chokalingam, when it comes to Tata Motors right now?
I firmly believe that worst is not yet over.
Not yet over. Okay.
Yeah, it is still a long way to go to see the worst getting bottoming out for Tata Motors, because as your colleague has rightly pointed out, the issues related to JLR. Now, on the domestic front, if you look at the passenger vehicle segment, it has lost out to competitors like M&M. M&M still growing SUV sales year on year in double digit, whereas Tata Motors has shown 11% degrowth in May month. And if you come to the CV segment as well, there is a significant degrowth, 5%. So when you have all three major segments pain points, and there are no optimistic view on passenger vehicle or commercial vehicle industry as a whole in the country, I don't think one can confidently say that the worst is over for Tata Motors.
I was just pulling out, in fact, the data for what the average analyst is on the street is seeing in terms of upside on Tata Motors. It's a 10% upside that they see from here. So 741 being the average target price. And we have 17 buy calls, 12 holds and 6 sells. So it's even Steven. Buy versus hold sell, 1:1.
So maybe if you want to look at a longer term bet, Tata Motors could definitely be an option. Kush, how are you feeling about Tata Motors amongst all of its peers?
So just to Harsh's point, Harsh, the last 2 months high on Tata Motors has been 742 and 744. So in that case, the analysts, have been right, but it's retraced from those levels. Now, what's happening here is that Tata Motors has a decade-long support at 600. This time around also, it did slip briefly below that, but we've seen a rebound from those levels. So Tamanna, from a risk-reward perspective, Tata Motors seems a fairly good bet. The news flow is rather mixed, every now and then. So the momentum indicators aren't really pointing, a sharp north. But otherwise, from a risk-reward perspective, 12 to 18 months kind of a time horizon, so close to a decade-long support zone, I think if you should continue to hold. If not, you could park a small amount to it and continue to hold this one. Once the 745, 750 resistance zone is taken out, I think you could see further upsides on Tata Motors, although it could just be gradual and not a V-shape kind of an up.
Okay, so Tata Motors next, and Maruti also in focus today. We had an interesting conversation with the management. They're accelerating their eco-friendly logistics with a groundbreaking in-plant railway siding at their Manesar facility. It's the second after Gujarat. So this will eliminate about 65,000 truck trips every year and save 6 crore litres of fuel, significantly reducing carbon emissions. My colleague Rishabh is at that Manesar plant and sent us this report.
Right, we're here in Manesar, we're here at the Maruti Suzuki facility, and what we are seeing here is the inauguration of India's largest multimodal cargo terminal that is part of the PM Gati Shakti project. Why this is important is because this is what the vision is. This is the vision of India sort of developing with the various sort of infrastructure lines getting merged into one another. Right behind me, you see there is a train. This is all set to be loaded with cars, chock-a-block with cars, and being sent straight from Maruti Suzuki's facilities right to its various export hubs, as well as the various dealerships that engage in selling Maruti Suzuki cars. Now, what's very interesting also is the fact that with the about 50% of the cars that are made right here in this Manesar facility per year, so about 9 lakh cars per year, about 4.5 lakh cars will be directly shipped by these railway lines that are located right inside this facility here in Manesar. This is the second such facility here in India and the largest. The first one was in Gujarat, also by Maruti Suzuki, and the second one is now being inaugurated as part of this Gati Shakti project, which aims to sort of integrate all these various infrastructure lines that have come up, including shipping, including railways, road logistics, as well as the many other sort of power and infrastructure lines that will power India's growth going ahead.
Okay, so Rishabh, with that report from the plant where this Gati Shakti program is taking place. We'll take a very short break, but we come back with last minute ideas. We also tell you why there is a panic on pharma stocks and top BTST trades. Stay tuned.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis, conversations that matter. We break it down.
Back with India Market Close right here on NDTV Profit, and the markets are, well, certainly a lot weaker than what they would have been at 2 o'clock, or they were at 2 o'clock. IT index 2 has come off a little bit really from the highs of the day, but the main pain points, as we've stated through and through, are pharmaceuticals stocks currently. And Donald Trump has announced that tariffs on pharma imports are coming, quote unquote, very soon, which may have serious ramifications for Indian pharma companies as well, possibly. Let's get in Varsha to first tell us about Indian pharma companies or businesses that could be at risk in the wake of the potential tariffs. Varsha.
Yeah, thank you for that. So yes, again he has said the same thing, that pharma tariff will be coming soon, but from an Indian perspective, Indian generics companies perspective, Indian pharmaceutical companies have almost more than 30% of exposure to US. Let me read out a name for our US. You have Gland Pharma, which has 50% exposure from US, Aurobindo Pharma, Dr. Reddy's, and Zydus Life Sciences, which has exposure from ranging from 40 to 50% to the US. When I talk about Lupin has almost 38% exposure coming from US. Glenmark has 35%. Although Torrent Pharma has a very little exposure to US, that is 9%. And all these companies, so except Torrent Pharma, if you see, all these companies have almost more than 25 to 30, more than 30% of exposure coming from the US, and that's the reason you're seeing overall the pharma indexes under pressure. Now also, couple of months back, Trump also came an order with wherein he want to reduce the prices of prescription drugs from 59 to 90%. This means that the Indian pharma companies who has specialty portfolio will get impacted. One of the companies which is growing big when it comes to specialty or branded portfolio is Sun Pharma, so Trump has given drug makers 30 days to set price targets, and he said that if the pharma companies do not reduce the prices of branded drugs, he would take possible actions on some of these pharma companies. So overall, because of the fear of tariffs coming in, which would directly impact generics companies, the pharma sector is down today.
Okay. Yeah, and certainly down in trade. In fact, we'll get in Vishal Manchanda of Systematics, I believe, in just moments from now to talk about this. In fact, I'm told that he's with us right now. And Vishal, great having you. Thanks so much for agreeing to talk. Now, this is a reiteration of what was going to happen, right? Or what, according to Donald Trump, was going to happen. We don't know if it eventually happens or no. But the question, Vishal, is that between now and when we know the final decision, would the stocks remain under a bit of a cloud?
Sorry, I wasn't able to hear you correctly.
I'm saying,
is it the tariffs that you're speaking about?
Yeah. Donald Trump saying that the pharma tariffs are coming soon. Do you think this makes negative sentiment for the pharma sector?
Yeah, so I think sentimentally it does impact, but my belief is that the tariffs will largely impact the innovator drugs more than the generic drugs. That's what I think, because on the generic side, if tariffs are imposed, we don't have a choice but to kind of pass the tariffs to the consumers. So either it will be the middlemen in the US who would kind of have to kind of absorb the tariffs within their margins, or it would be the consumers who would have to pay on top of the current prices they are charging. So I think the situation for Indian companies to absorb the tariffs, we are not in that, we don't have those margins to allow us to absorb the tariffs within our cost structure.
No, but okay. So we don't quite know, Vishal, which shape or form the margins will come in, right? So until that happens, do you reckon that the pharma sector will remain under a bit of a cloud, or do you reckon that it might be an opportunity to buy some of the non-impacted companies?
So I think the stocks should remain range bound until we see an announcement on the tariffs. And then there is another overhang which pertains to the most favored nation pricing policy that Trump has proposed. So these are two overhangs where we'll see more clarity emerging over the next maybe next 1 month or next 2 months. And I think once that clarity is there, and that's where we should take a call on the stock price. But I think we can see some transient corrections even from where it is. But then if we see those corrections happening from current levels, that should from there we should pick up the stocks.
Okay, Vishal, this is Harsh joining in. So at best, we'll see this blow over. But let's talk about downside. If this were to play out and if tariffs were to be imposed on innovator companies, would that mean some part of the margins, of course, will shrink, or will they be able to hold on to margins predominantly? Where is it that you sit here?
So I think if tariffs come through and we don't have a choice but to absorb them, obviously then margins will shrink from where they are, and probably will be in a very bad shape if that happens. So it's going to be the impact is going to be very painful if we need to absorb, but I don't think that will be the case.
Vishal, Tamanna here, two parts to this. And first, let me start with what are the domestic-facing companies you think would be safer to go with right now in the space till this tariff cloud clears up? Let's start with that.
I think the audio is not very clear, but what I'm hearing is...
Let me repeat, domestic-facing companies that don't have as much exposure to the US market.
So I think right now we should only kind of, so my call is to kind of stay away from any companies that has large US domestic exposure and large exposure to kind of 1 or 2 drugs that is giving disproportionate contribution to the profits. So those are two kind of companies I'll stay away from. So anybody with 40 to 50% exposure to US sales and lot of profit concentration coming from 1 or 2 drugs. So I think the best way is to kind of be aligned with companies with large domestic exposure, 70%, 60-70% plus domestic exposure is where I would currently be in the pharma space.
Which is exactly my question. Which are your picks in that space? Pharma companies with large domestic exposure.
So among the large caps, I prefer Sun and Cipla. So they have about, so Sun would have 30. So on Sun, the thing is they have only 15% US generics exposure, and the rest 85% is coming from other areas. So basically their US generic exposure is low. So that's why I like Sun. And then the other is Cipla, which is again about 30% exposed to US generic. But they have a large exposure to domestic business, about 40% exposure to domestic business. So those are 2 names, and in the mid cap, I think Ajanta Pharma is one name I like. So these are 3 names I prefer in the space.
And Ajanta. So the second part of my question, Vishal, is that since, and you're also saying it's unlikely that, Indian pharma companies, even with exposure to the US, will have to absorb those tariffs. That's unlikely to happen. There will be some kind of going back on the tariffs, the TACO trade as it's called. In that case, if you're feeling brave, what are the stocks that you'd look at right now? Would you look at a Granules or Lupin, some of those that have taken the worst hit?
So if you ask me, I think I still see the valuations a bit stretched for some companies. Maybe we can look at Aurobindo. I think a lot of I don't have coverage on Aurobindo, just to clarify that, but I think a lot of things in Aurobindo would depend on how they ramp up the penicillin G project that they have initiated. So that's one important variable there, but since I don't have coverage, I may be missing the details here.
No issues. Thank you so much, Vishal. Yeah. Always a pleasure to speak with you.
Thank you.
And thank you for speaking to us on such short notice, Vishal Manchanda at Systematics. And I thought that was interesting. That's something that the others have echoed as well. Go domestic. And frankly, not just in pharma. That's across the board.
Yeah.
Everyone you speak to, they're saying, look at businesses which have a more domestic-facing presence.
Yeah.
Yes, but it's also the other way. Like we've seen from the lows of April, we've seen some stocks really rebound, maybe 20-30%, especially on the back of tariff wars. Some of them have rebounded. So how do you play this? Actually, let's go across to Mr.
Are you talking about the taco trade?
Yes.
Yes, so you bet that he will go back on it.
Yes, and Mr. Chokalingam, so therefore, how should one play this? Give us some perspective.
No, it's a very tough question to answer it. See, these things happen. In the last 30 years, I have seen, I sold out a BSE after 8 times it rose. From there, it has risen another 8 times. So very difficult in the short term. In the Indian market, you have to understand that, the role of P in explaining the price projection is much more predominant than the role of EPS, So, therefore, I always suggest to my clients that everything you do it in phases. That's the only way. But of course, you have to stick to the fundamentals. Here, as everybody covered pharma, ultimately the tariff has to come. Otherwise, all this fight and the efforts of Mr. Trump will become futile. And as per the economics, any hike in the tariff would be definitely bring down the demand. It is slightly price sensitive. And third, even after pressure on the realization, many of these pharmaceutical companies are generating profit margin of even 25 to 30%. I'm sure, there has to be some correction in the margin post tariff hike. So therefore, I agree with you all that this is a time to be extremely cautious on export-oriented pharma company, but be extremely bullish on domestic companies that will not disappoint investors at all.
Mr. Chokalingam, just want to continue this part of the same conversation of the answer you gave us. Did you say you sold out of BSE and thereafter the stock has been a multi-bagger?
I initiated at 60 rupees.
Okay.
Adjusted for 2 bonus.
Yes.
So it became a 7-8 multi-bagger in 2 years, 2.5 years. I gave a sell call. So after that, it went up again another 6-7 times. So therefore, what I'm saying is that, the PE plays a major role. So we fundamental analysts look often clowns. We go wrong in predicting the PE. You can't predict PE in this market. It is very tough, perception-driven market. So a lot of changes happen quickly at unbelievable levels, mainly because of the perception in the market. So therefore, I wanted to address your first question that it's very difficult. You can't, scientifically forecast what is the range. Forget the precise price point. Even the range you can't forecast in the short term. Yes, of course, in the long term, all would align. But in the short term, it is very difficult.
Okay. Now, before we get in Aditya Agarwala, and he's been waiting by patiently, and Aditya, thank you for that. But just before we come to you, since we spoke about pharma at length, let's hear out from the man himself, Donald Trump, who said that pharma tariffs are coming very soon.
I said, check the tariff column, and it's about $88 billion that they've never seen before, and that's nothing compared to what it's going to be.
You've got other tariffs coming down the pipe here.
I have a lot of them, yeah.
What's the timing of those things like pharmaceutical?
Yeah, we're going to be doing pharmaceuticals very soon. That's going to bring all the companies back into America.
All of them are focusing on.
It's going to bring most of them back in, at least partially back in.
Okay, now Aditya Agarwala is with us, and Aditya, let's take in your closing strategy as well, along with your index call. And once again, thank you for waiting by patiently. And then we want to talk to you about a sector which has gone completely cold, and the pun is intended there. But first, your closing strategy and your index strategy.
Hi, good afternoon. Thanks for the show. I think it's more of a consolidation. Yesterday was an uptake. Today it's slightly downtake. Indices continue to oscillate in a narrow band. 24,400 on the downside, 25,100 on the upside as far as Nifty is concerned. And my sense is markets will continue to oscillate in this. We have a lot of negative news flows which keep coming, be it in terms of Trump tariffs, which to be honest has just been talk so far from April onwards. If you just really check, it's just now and then he comes up with a statement, a new tariff is going to come, but nothing really has happened. So it's more of talk so far, because of which you see this volatility in the markets. And along with that, you have geopolitical tensions also which keep rising. So my sense is markets will not see any immediate breakout or breakdown, so to say. Interesting is all the negative is getting priced into the indices, and then it's not really seeing any sharp reaction on the downside. So both on the Nifty and the Bank Nifty, I feel it will remain range bound, while sector specific churning will continue to happen. So for the Nifty, maybe 25,100, 200 will be difficult to take out on the downside. 24,500, 24,400 continues to act as support. Same holds true for Bank Nifty as well. 56,200, 56,500 on the upside is a hurdle. That is difficult to take out. 55,000, 55,200 is a support on the downside that is likely to continue. Talking of stock specific strategies, I've got a couple of buy recommendations for viewers. One is from the IT space, because I think IT has done its bit of correction and now it's steadily inching higher. So I'll stick to large cap names now, because mid cap has already made its move. Infosys is looking interesting to me at current levels for a target of 1710 on the upside. I'll be a buyer with a stop loss at 1600 on the downside. From the four-wheeler space, Maruti is looking interesting. I'll be a buyer in Maruti for a target of 13,000 upside with a stop loss at 12,350 on the downside.
Okay, Maruti Suzuki it is. Now the other thing to notice, guys, and we spoke to Blue Star a couple of days back, right? And he said that those very specific words, that relative to expectations of a 20% growth in FY26, growth may come in between 10 and 15%. So it might still be growth, but lower than expectations. And I think what's happening is that while they are trying to mention that there is growth, the commentary per se of loss of this peak season because of unseasonal rains is now finally getting to start being felt on the prices, because it is a busy quarter which has been lost out partially due to these unseasonal rains.
But he's also saying that there's close to a 20% drop year on year, even though there is growth. He also, though, if you remember, Neeraj, he put it down to base effect, that the last summer was scorching. So yes, that is also
they will take advantage of a low base.
Yeah.
And then they will not say.
At that time it's perfectly fine.
Yeah.
But the fact is that there's going to be some pain, whether it's a Voltas, and some of the sources telling us of what's coming from that key analyst meet, that's also a pain point. Voltas also, not saying the exact same thing, even in the commercial refrigeration business they're finding a problem.
Yeah, they I reckon this is the reason why. I mean, so we should bring up those stocks. One is Voltas, of course, but I think EPAC Durables, Amber Enterprises, and there is an SME stock called Virtuoso Optoelectronics, which has Voltas as its big client. It's listed on BSE. I don't know if you can pull that up or no, but Amber and EPAC Durables I think should come up, and bring up the 5-day chart or a 7-day chart, if not just today's chart. Virtuoso 2 is down today, and bring up EPAC. Is EPAC down today? Need to pull that up and see what that one is going through. Yes, down about 2%. This week is down about 6%. So no surprise that some of these stocks are actually seeing a pullback. Voltas has seen a sharp downtick as well in the session right now. I think post-star flashes. So keep that in mind too. Now, the question, Aditya, is there firstly, let's quickly get off the bat. Is there a trade here? Voltas, EPAC, Amber Enterprises, is there a trade into any of these?
In fact, as a disclosure, we have recommended a couple of these stocks, Amber and Voltas, to our clients that might be in their portfolio.
On the long side, you are saying?
Yes, absolutely, Neeraj, on the long side. In fact, we believe that this correction and the consolidation that we are seeing in both these stocks is an opportunity to go long. The worst may be priced in to the stocks already. If I purely go by the chart setup, it's an excellent risk to reward at current levels. So on Voltas, I will be a buyer with a stop loss somewhere around 1170 on the downside, look for a target of 1600 on the upside. As far as Amber is concerned, we are a buyer there as well, and we are suggesting a target of 7,500 with a support on the downside closer to about 6,200. So both these stocks, I think, have entered into a good consolidation. Waiting a breakout in them offers an excellent risk to reward at current levels. Not a day trade or a couple of days trade, more of a positional trade. Hold it for at least a quarter or so, and you will see decent returns from current levels in both these stocks.
Mr. Chokalingam, if you were long here, would you take money off the table in the cooling solution companies? Would you wait for a better entry point?
I would buy Blue Star. I would buy after the summer because a lot of people will come back on the set when summer is about to set in and buy the stock. So that is the time you have to sell. And the Blue Star is down 30%, and FY25 profit growth has been quite impressive. Even though the stock is trading at 60 PE, the profit growth has been around 35-37% year on year. So, which I believe probably justifies that kind of PE. So, therefore, I would suggest buy recommendation on Blue Star. As a strategy, it is always buy when everybody is selling after the monsoon season starts, because definitely when summer starts, a lot of traders and short-term investors will jump in. That is the time to book profits.
Summer is just ended in some way off, but interesting note out from Jeffries also on India air conditioners, and talking about both the companies that G. Chokalingam has mentioned. This is what they're saying. They're saying unseasonal rain between May and June 2025 is estimated to fuel a 15 to 20% year-on-year decline in industry sales. Channel inventory is higher than normal 3 to 4 weeks. And you recall we asked Blue Star this question about inventory. He said, no, that's not really what you should look at because we've cut production. He went as far as to say we've cut production to match inventory. But they go on to say Q1's last year has high summer base. Okay, they estimate the first quarter of FY26 UCP sales to decline by lower double digits for Voltas and Blue Star. They've cut FY26 to 28 estimate EPS by 6%. They say the next trigger for RAC volumes could be inventory liquidation in Q3 ahead of a new BEE norms from 1st Jan 2026. They have a buy on Voltas and a hold in Blue Star. They say risk reward appears better in Voltas versus Blue Star at current valuation. So some of those details up there.
Yeah, no, just just wanted to set one thing on record. I mean, viewers, I don't think me or Taman were trying to say that Blue Star kind of takes advantage of a base in good times and not during bad times. All we are trying to say is that he mentioned the base effect, but that is that was him mentioning why the numbers could be lower, but that doesn't mean that the stock will not get punished, and I think we're seeing that because of the slow sales, some of these stocks get punished. In case it came out wrongly, that was not the idea here. So just bear that in mind. But flattish numbers here. Anything else that has stood out or shot up or shot down as we wind up trade? Aditya Agarwala, we haven't quite spoken about this, but almost everybody who came on air with regards to Sterlite Tech mentioned that now they take money off the table. 4 minutes left. Would you do that too? Would you take money off the table on Sterlite Tech?
Not really. In fact, I would stay invested in the stock. If anything, look at the kind of volume that the stock has shown in trade today. I would remain put in the stock if you already have long position in the stock for a target of 140, 160 on the upside. I don't see any reason to exit this kind of volume and the up move that we are seeing in the stock. If you're looking for a fresh entry, maybe wait and see how the stock behaves tomorrow. If you get it somewhere around 105, 106, then you can again initiate a fresh long for a target of 130, 40 on the upside.
Now the other one which is interesting is Vishal Mega Mart. There was a large block around 5,000 crore which was put on block. Believe that has been upsized to 10,000 crore. This is of course all promoters selling. Kedara is the private equity fund which is selling out of Vishal Mega Mart. And look at the way the stock has moved from the bottom. From 113 we are sitting at the day's high of 129. Some of these in terms of value retail, Mr. Chokalingam, do they look interesting? And this kind of a move just shows strength, right?
Yeah, definitely. It shows confidence and people are absorbing it. But fundamentals I have not studied, so I am not in a position to give a firm view on the stock.
The other one to talk about, I think Choka spoke about BSE a short while ago, and let's pull up that BSE stock and how it's been behaving through the day. So we will likely hear on the decision of SEBI on Tuesday and Thursday expiry day. Now, if NSE gets Tuesday as it's pushing for, and we've reported that, negative for BSE, if it's vice versa, positive for BSE. So that's one to look for as well in tomorrow's trade before we close in. Aditya Agarwala, is there a position to be taken on BSE?
It's slightly weak, Tamanna, I won't deny that. But if in the event of a correction, I would be a buyer in the stock. If we get NSE expiry on Tuesdays, you might see a knee-jerk reaction on the stock of BSE. That will be an excellent opportunity to go long on the stock. I still feel stock has potential to hit levels of 3,600, about 4,000 on the upside. And from here on, if you get a 4 to 5% kind of a correction, just go ahead and buy the stock. At current levels, I'll not be a seller because it's sitting at a very strong support area of 2,600 to about 2,620 on the downside. So for those reasons, I'm not a seller in the stock, waiting patiently to see if there is a sharp spike on the downside. I'll be a buyer in the stock for sure.
Aditya, 10 seconds. Vishal Megamart, what do you make of the move?
Instead of Vishal Megamart, I like V2 Retail because of its recently listed. I have little history on Vishal Megamart. V2 Retail, I think, is an excellent stock. Continue to hold, buy at current levels for a target of 2,100 on the upside. Look for a stop loss somewhere around 1,700 on the downside.
Okay, no worries. Just wanted a perspective on the move today. Anyway, thank you, gentlemen, for joining us this afternoon. We'll let you go on that note. We're just about 30 seconds from close. Let's look at where the Nifty is closing in, and it's been a rather flat move over the last hour and a half of trade. We're down around 0.4%. The Nifty Bank also largely in line with the way the Nifty has played out. Let's look at the intraday chart on the Nifty. Gives us an indication that, of course, we're off the day's highs, but we're slightly off the day's lows as well. Just about 30 odd points from the day's lows, but 100 points shaved off the Nifty today. Let's look at the breadth as well, the larger heat map, and that will give us and indicate to us that the breadth was weak and has weakened right at close. This is, of course, on the NSE, but let's have a look at the breadth on the Nifty 50 as well, the heat map. There you go. The breadth was weak. IT dominates. Look at some of those IT names, the Tech Mahindra, Infi, TCS, HCL Tech, and a Wipro. Wipro closed absolutely flat, but all of those gaining in trade. So IT really taking center stage today as well. It's been a couple of days where IT has outperformed, and that outperformance seems to continue. Outside of that basket, you're seeing plenty of pressure across the board. Specific names like an Asian Paints have done well, especially after those blocks have gotten absorbed extremely well by the mutual fund industry within that Asian Paints block deal basket. Let's look at sectors now, and within sectors, IT standing out, of course, but if you look at the intraday chart on the Nifty IT, let's pull that one up. We're off the day's highs for sure. The day's high was 39,500. We're well off the day's highs. 39,300 is where we have closed in at. So sharp downtake from that day's high, around 200 odd points. So something again to bear in mind. But let's look at sectors once again. Defense was the other space which has done very well in trade. We're up around 0.4% on the Nifty India Defense. What's not done well is pharma, healthcare along with it, and metals, 1.5% lower on the Nifty Metal Index. PSU banks also have underperformed, and so has the Realty Index. So some of those indices facing some pain. The mid cap, small cap, not surprised that there's been some bit of an underperformance from both of those indices. Let's pull those up intraday. Because the breadth just weakened right towards the end. Midway through the day, we reversed in terms of the market breadth, and thereafter we've just increasingly weakened as the day has gone by. The Nifty Mid Cap Index closing roughly 0.6% lower at the day's low, and the Small Cap Index as well, 0.7% at the day's low. So those two indices seeing some bit of pressure. The BSE 500 top gainers, top losers, let's quickly pull that one up. Those are some names. Sterlite Tech just on a roll, third straight day where it's one of the top gainers. Happiest Minds was the other one on the back of that Anand Rathi note. We spoke about that. Some pipes companies down were also facing some pressure, including a Prince Pipes down 6%. Then you had a Sona BLW, which continues its downtick of 4% But back to you, Tamanna.
No, it's okay. Just as at the close of the bell, we are learning that yes, NSE is getting Tuesday, and BSE may get Thursday expiry. NSE likely to get Tuesday expiry, BSE likely to get Thursday. You're seeing that stock under pressure already at close. We're going to get Charu up in just a second. Hopefully we'll hear from folks at NSE on what this means. This is something that they were pushing for, so let's get Charu up on that as well. But this is the big one, undoubtedly the big one. Who gets Tuesday and who gets Thursday? This is when SEBI had made it very clear that it will be one expiry per exchange and 1 day per exchange, and both have chosen their key indices. NSE had to, for that weekly expiry, had to continue and choose the Nifty expiry rather than the Bank Nifty. They are now getting Tuesday. June 15th, remember, was the last day to submit their case to SEBI and their submission to SEBI, and now it's become very, very clear that it is NSE who has got Tuesday as they wanted. Regulators likely, in fact, to send a mail intimating exchanges in the next few hours, but sources telling us that it is NSE that has Tuesday and BSE that has Thursday. Now, why is this important? If you're tuning in and you're wondering why this Tuesday and Thursday is important, and Sajith is joining in as well on this, it's because fastest fingers first, Sajith.
That's true.
Simple. That's why both exchanges were fighting for Tuesday, wasn't it?
Yeah, you need to look at from a revenue point of view from an exchange there, because the exchange gets a revenue from premium turnover in the options market on a weekly basis. And when you have Tuesday as an expiry and the previous exchange has Thursday as an expiry, then there are at least 3 working days of turnover which comes in, and because there's a holiday in between, the premiums are little higher in that sense, and so you get a percentage of the turnover as a revenue, and then that becomes a good stepping stone for any exchange with respect to the revenue that it gets from weekly option. If you remember, NSE has only one exchange.
So I've got Charu on the line and she's
Yeah.
got that story.
Yeah.
So let's just quickly go to her. Charu, what are your sources telling you? Because we'll wait for the email, the intimation will come, but what are you hearing right now?
So as per some top regulatory as well as exchange sources, within an hour or two, exchanges will be getting some sort of an intimation through an email about which expiry day they will be getting to use. Now, we already know that National Stock Exchange had applied for Tuesday expiry, which is currently being used by the oldest stock exchange, Bombay Stock Exchange, and that is why the impact on stocks. Now, as per some sources, NSE is going to get the permission to use Tuesday as their expiry day, and further communication about it remains to be heard. So we'll have to see what kind of developments take place post that.
Okay, just give us some context, Charu, because you've reported on this extensively. What was the whole process of exchanges putting their case forward on this?
So, some months back, we saw that NSE and BSE were doing a lot of back and forth between Tuesday and Thursday, and the newer players like NSE were also coming on the scene. Now, this made the regulator a bit concerned about how undecisive the Indian markets are becoming about something as small as expiry day, which made them come out with a circular regarding this. And once it was approved in a SEBI committee known as SMAC, the regulator said that they will be going ahead with 2 weekly expiries, and then NSE went ahead and applied for the same day as BSE, and now we are seeing the aftershocks of the same event.
Okay, the aftershocks of the same event is one way to look at it. So, Neeraj, yes, Charu. Okay, we've lost that line. So, Neeraj, this was a big draw for the BSE stock as well, a drawdown actually, because we anyway had seen volumes coming down for options trading. So, having a Tuesday cut becomes very, very crucial.
That's right. If you look at the turnover analysis which we did from April to now, we saw that on Tuesdays, BSE's market share went up to all the way to 45% when the expiry was happening. And NSE was getting 90% share on the Thursdays which it was there. So now that you have 4 or 5 trading sessions for the NSE, the turnover is also expected to be much higher for NSE, and that's what NSE was pushing for, that they want a Tuesday. And it seems that our sources in NSE have confirmed that they have been informed that they are getting Tuesday, and BSE is getting a Thursday expiry for their Sensex futures.
Yeah, so so more implications than one, predominantly for the 2 exchanges, but also for participants. In that one, that NSE shifting to Tuesday, which means that BSE very likely, Sajith and Tamanna, will be on Thursday, right? Because the regulator has clearly stated that there are 2 days and the exchanges are free to choose both the days. I would suspect that BSE would not keep on the same day as NSE. Right, and since we've gotten the confirmation from NSE,
I don't think they can. Can both?
They can.
No, they can. They can get it.
They can do
so
that.
The option was either each of them selects one of the days, or they stay with.
They can select either of the 2 days.
Either, or they can do on the same day as well.
Exactly.
But point is that the moment they do on the same day, then there's a split of volumes which happens, or the turnover happens, and no one wins in that sense.
And NSE would likely win more, because we've seen in the past that NSE, when there was a common Thursday expiry, was anyways getting its lion's share. Now, but predominantly this is positive for NSE, and this would not be as positive for BSE optically. Now, the proof of the pudding, I think, will be in the eating, that over a period of the next few days, weeks, months, once this comes into being, we need to see how the turnovers shape up on both of these days, and that could well determine the fate for earnings for both of these exchanges. The other thing to keep in mind that I don't think this in principle has any major impact for the brokerages, which are depending on the option volumes, because for them it's merely a shift of days. I mean, what earning was happening on Thursday will probably now happen on Tuesday. So
Sunday
they are sorted.
Hoya Monday, Rose
Kha Monday. Exactly. Exactly.
Tuesday Hoya Thursday, Rose Kha brokerage.
Yeah.
So that the only, I mean, lose-lose situation in this, frankly, from a stock perspective, would be BSE, if at all.
That is primarily because of the number of trading days, which is lesser for BSE in that sense. But
why? It's just in the same cycle.
Because what the trading happens on, if today what happens, trading happens, the expiry was NSEs is on Thursday, so you have Friday, Monday and Tuesday, and for NSE today it's Wednesday, Thursday, 2 days. So the trading happens on 2 days, and the next 3 days volumes go to the other exchange where the expiry is going to happen. So the shifting of turnover which is happening between investors is the reason why there's a fight between both the exchanges. If there are dedicated investors in each of the exchanges, then that's not an issue. It's the investors are shifting and the turnovers are shifting, moving away, migrating from one exchange to another.
I think also the issue with Thursday is that you don't want to be so close to a weekend when you have 2 days of no trade and opportunity, and so much that could develop in those 2 days, and we've been seeing that pattern, and where between a Friday close and a Monday open, everything changes.
What also happens is that when that happens, there's an uncertainty, the premium also increases, and when the premium increases, the premium turnover increases, and the revenue which an exchange earns also increases. In that sense.
Yeah. So this is important.
It's all about money, actually.
And we'll probably try for a minute to get in some more guests if a guest can come in. But the last point out here is that the NSE stock on the private markets has rallied quite significantly from those 1800, 1900 levels about 3 months back to nearly 2400 currently. Is there more in store? I think tomorrow morning when we come in, we'll get to know what was the NSE stock pricing in early this morning versus what the pricing will be tomorrow morning.
The pre-IPO.
But the private market pricing, and that might give an idea that if the street is getting further excited about NSE stock in a matter of 24 hours, suffice to say that the BSE stock could likely get punished tomorrow. So I think that will be the key thing.
But also keep in mind, so this is a question, and we were suspecting that this news might come. So this was a question we asked, right? That would you buy it? And Aditya Agarwala said if there's a 4 or 5% down tick, because it's, at least he's giving a technical point of view. Also, there is no option right now in terms of a listed play unless you are in this private market, which not everyone can be.
Yeah, but now, Tamanna, thankfully, a lot of people can be, because you're getting NSE shares in smaller lots as well. Yeah. Earlier, which was restricted to a few players because the number of shares that you had to buy for NSE was very large. Now you're getting deals of 300 shares.
Yeah, even 50 shares.
Yeah, exactly.
Even 50 shares. But the pricing is slightly higher. Pricing is slightly higher, but we need to warn our investors that be careful of where they're buying their shares from.
Yes,
there could always be a risk of defaults which are coming in, because this is an unregulated market.
Yes, most certainly. Okay. Well, so this is important, and more on this will continue on the other side of this break. In fact, we're wrapping up this show, but this is a big story that is just breaking on NDTV Profit, and we will continue getting you further updates, BSE's version as well, and expect tomorrow morning a full-fledged coverage on what this would mean for both the exchanges and for the various other participants. But yes, from the team that has put India Market Close together, thank you so much for tuning in.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis, conversations that matter. We break it down, cut through the noise and set the context for you. Hear from top policy makers and thought leaders from the world of business and beyond. The big question really is, are companies using dark patterns to take you for a ride? The big question we're asking today, is the US heading towards a recession? The big question is, are we sacrificing our health at the cost of convenience? The questions you care about, asked and answered. The big question.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy time to
CDSL for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bhogna. Now let's get straight into the show. US Nifty and Sensex end the day in red after trading in a tight range. Nifty ends a lackluster day, at 24,900 levels, while Sensex also sheds over 250 points today. Meanwhile, all sectoral indices close in the red except IT, which managed to stay in the green. Pharma and metal stocks were the biggest draggers, shedding over 1%, while media, PSU banks and realty also made it to the list of laggards. Now, the sharp reversal in sentiment comes as global cues remain mixed with and the investor appetite appears cautious today. NSE is likely to get Tuesday expiry. SEBI will send a mail intimating exchanges in the next few hours is the big breaking news that's coming in US. Now, Hindustan Zinc will also invest nearly 12,000 crore rupees to double its capacity. The Vedanta Group arm will expand its capacity across zinc, lead and silver verticals. The expansion would be funded through internal accruals and debt. The company also plans to set up 250 kilotons metal complex at Debari. Sterlite Tech zoomed over 14% as the company is betting big on AI-led data center boom. Now, this is seen to a $1 billion opportunity globally. Meanwhile, the company's operating performance has been healthy in the last 2 quarters. Sterlite Tech's net debt to equity ratio has also halved thanks to a 1,000 crore rupee fundraise and a demerger. Vishal Mega Mart tumbled in trade after a block deal. The company had 93.6 crore shares or 20% of equity change of hands in 6 blocks. Now, the deal size was around 9,900 crore rupees and the floor price for the deal was 110 rupees per share. Defense stocks are surging as geopolitical tensions rise, with the Nifty Defense Index gaining on war escalation. Sentiment was strong after the Indian Army's latest missile system order. Major stocks like Mascon Dock and Bharat Dynamics are seeing intraday gains. The sector's long-term targets include boosting production and exports, reinforcing India's defense ambitions. BML is confident of doubling its order book for FY26, according to the company's chairman and managing director Shantanu Roy. BML also expects margins to expand due to working capital reduction. The company manufactures wide range of heavy earth-moving equipment for mining and construction industry. Happiest Minds maintains strong momentum with Anand Rathi reaffirming a buy rating at 790 rupees. Strategic acquisitions including Pure Software, Aureus and ME Gavs Tech reshape its business mix and boost cross-selling. The company also expects double-digit organic growth and is expanding geographically while remaining open to more acquisitions. Risks include a potential US slowdown and pressure from its edutech vertical. However, its focused AI unit and Gen AI investments aim to drive future value. Siemens bagged a 4,100 crore contract from the National High Speed Rail Corporation for India's first bullet train project. The order was awarded to a consortium led by Dinesh Chandra R. Agarwal Intracon. Now the company holds a share worth 1,230 crore rupees in the consortium. Now, Inox India has secured multiple orders worth 373 crore rupees. These orders have been received in various business segments. Now, these include industrial gas, cryo scientific solutions, LNG. Inox India has also secured major contract for the repair of cryosat thermal shield. Maruti Suzuki India inaugurated India's largest in-plant automobile railway siding at its Manesar facility. Now, the move is also aimed at significantly reducing the company's reliance on road transport and cutting its carbon footprint. This shift to rail is expected to eliminate 65,000 truck trips every year. Hyundai Motor India has commenced production of passenger vehicle engines at its Talegaon plant in Pune. Now, from June 16, this is going to start. Now, this marks a significant step in Hyundai's strategy to boost manufacturing capacity, with the plant currently having an annual production capacity of 130,000 units. Now, the company also plans to start passenger vehicle production at the facility later this year, with a separate announcement to follow. Now, this expansion is also part of Hyundai's broader investment of 32,000 crore rupees in Maharashtra and Tamil Nadu, aimed at increasing overall production capacity to 1.1 million units per annum by 2028 to meet the growing domestic and export demand. UBS has also initiated a buy rating on Hyundai Motors India, citing that this capacity expansion is a key growth catalyst that could actually boost the volumes approximately by 30%. ICICI Prudential has acquired 85 lakh shares of Asian Paints at 2,207 per share, representing a 0.88% stake of the company's capital. Now, this follows Siddhant Commercial's sale of the same 85 lakh shares to ICICI Prudential. Just last week, Siddhant Commercial sold a 3.4% stake in Asian Paints to SBI Mutual Funds. Now, these transactions highlight significant institutional interest in Asian Paints, reflecting confidence in the company's growth prospects. Sona BLW Precision Forgings is set to elect a new chairman soon, following the sudden passing of its chairman Sanjay Kapoor last week. Now, Sanjay Kapoor, who tragically died of a heart attack while playing polo in the UK, was a visionary leader who transformed Sona Comstar into a global player in automotive and EV components. Despite this loss, CEO Vikram Singh, who has been managing director since 2019, will continue to lead the company, with the management team remaining unchanged. The board is also expected to announce the new chairman shortly, as the company honors Kapoor's legacy and assures stakeholders of stable operations ahead. Citi has slashed its iron ore price forecast to $90 per ton for the next 3 months and $85 per ton for 6 to 12 months. Iron ore futures in Singapore fell for the fourth day, dropping below $93 per ton. Now, this is on the back of seasonal demand slowdown and signs of Chinese steel mills cutting production. A private company has sparked outrage by allegedly placing bouncers outside its office to block employees demanding unpaid dues. Now, out of 2,500 employees, fewer than 50 remain active, with their HR department itself absent due to unpaid salaries, leaving resignations unprocessed. Now, this has stalled relieving letters and PF transfers, severely impacting employees' ability to secure new jobs. Now, the company's chairman promised a repayment plan by mid-April, but has actually failed to deliver, leaving workers in limbo and raising serious concerns about the labor rights violations. The SEBI is set to overhaul the financial markets with a slew of proposed reforms. REITs and InvITs may actually now be treated as equity for index inclusion, while mutual funds could also, increase their exposure to these instruments to 20% in equity funds. SEBI has also proposed relaxed compliance rules for REITs and InvITs, simplified QIP norms with reduced paperwork, and new co-investment options for AIFs through separate schemes. Additionally, AIF manager may be allowed to advise on listed securities, and simplified FPI rules are on the table for Indian government bond investors. CLSA sees strong growth ahead of KFC and Burger King, citing their ability to navigate India's intense competition. Meanwhile, McDonald's struggles to keep pace with local restaurants, prompting CLSA to maintain underperformed ratings on Jubilant Foodworks and Westlife. In contrast, Devyani International and Restaurant Brands Asia gets an outperformed rating, reflecting their stronger market positioning. Now, competitive intensity remains high, shaping the fast food industry's trajectory in India. India's road construction sector is facing headwinds as the National Highways Authority of India has reduced the pace of project awards over the past 2 years. Now, this slowdown has hit the order books of major infrastructure players, raising concerns about revenue visibility and delaying a potential recovery in the sector. According to industry reports, the market share of listed developers in NHAI awards has dropped sharply from 61% in FY18 to just 24% by FY25. Tensions flared at Ahmedabad airport as Air India cancelled flight AI-159 to London. Now, this is the first scheduled service on the route since last week's deadly crash of AI-171. The airline cited operational issues, but passengers were left frustrated by the lack of clarity and refund details. The Dreamliner was initially delayed before being officially cancelled at 1:45 p.m. Now, just minutes before its rescheduled departure, the cancellation comes in the shadow of the June 12 tragedy when AI-171, a Boeing 787-8 Dreamliner, crashed seconds after takeoff, killing 241 people on board and 33 on the ground. Two major flight disruptions rattled Indian skies today. An Indigo flight from Kochi to Delhi made an emergency landing in Nagpur after a bomb threat was received via email. All 157 passengers were safely deboarded and a bomb squad was deployed, though no suspicious items were found. Meanwhile, an Air India flight from San Francisco to Mumbai was grounded during a scheduled stop in Kolkata due to a technical snag in the left engine. Passengers were asked to deplane around 5:20 a.m. as a precaution. Chief Minister Nitish Kumar's cabinet has approved the redevelopment of 6 regional airports under the Central Udan scheme. The airports Madhubani, Veerpur, Munger, Valmiki Nagar, Muzaffarpur and Saharsa are set to be developed through a new MOU with the Airports Authority of India. Now, the move actually aims to link remote and underdeveloped areas of the state with affordable air travel, while also catalyzing tourism and investment and economic activity. The Enforcement Directorate has launched a major probe into illegal betting platforms, questioning celebrities and former cricketers like Harbhajan Singh, Yuvraj Singh and Sonu Sood for endorsing banned apps including 1xBet and Fair Play. Now, over 50 crore rupees in the promotional payouts have been traced, often funneled through Benami accounts. The ED warns of possible violations under IT, FEMA, PMLA and other laws. Well, viewers, with that, it's a wrap on Market Express, but stay tuned to NDTV Profit and see me on the other side with Profit 360.
imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis, conversations that matter. We break it down, cut through the noise and set the context for you. Hear from top policy makers and thought leaders from the world of business and beyond. The big question really is, are companies using dark patterns to
NSE's expiry day for its futures and options contracts will shift to Tuesday. Market regulator SEBI has sent a mail intimating exchanges. Benchmarks closed lower and slightly outperformed the mid and small caps. All sectoral indices barring Nifty IT and Defense end in red. Nifty Pharma is the top sectoral loser on Trump's tariff threat. Enforcement Directorate cracks down on betting apps. Questions former cricketers such as Harbhajan Singh, Yuvraj Singh and Suresh Raina for endorsing banned platforms like 1xBet and Fairplay. Sonu Sood, Urvashi Rautela also under ED scanner. AGS Transact Tech puts up bouncers outside its office as employees start showing up to demand payment of dues. Employees allege that they are unable to quit formally as the HR department has stopped working over unpaid salaries. Israel kills Iran's wartime chief of staff, Ali Shadmani, in an overnight strike in the heart of Tehran. Country's defense force says it's deepening the attacks on Iran's nuclear sites every day. Meanwhile, Iran's state broadcaster reported that the country has fired hundreds of advanced drones towards Israel. 110 students evacuated from Iran's Urmia Medical University and brought to Armenia. They are scheduled to leave for Delhi tomorrow. Air India cancels its flight from Ahmedabad to London, Gatwick due to unavailability of aircraft. Cities cites airspace restrictions and additional precautionary checks. Spokesperson denies reports of a technical snag. Prime Minister Modi arrives in Canada for G7 summit, marking his first visit to Canada since 2015. PM Modi will hold bilateral meetings with world leaders and attend outreach sessions. Hello and welcome. This is Profit 360 on NDTV Profit and I'm your host Himakshi Bahugna. Along the next half an hour, we'll bring you the latest on the markets as well as national and international news. But firstly, viewers, we'll be going across to my colleague Sajid Mangat, because NSE has come out with its, expiry dates, that is to be Tuesday. Yes, Sajid, over to you.
That's right. In a significant move, the market regulator has approved the request from the National Stock Exchange asking Tuesday to be the expiry for its weekly options. Remember, NSE weekly options are currently expiring on a Thursday, and they had the regulator had floated a discussion paper with respect to giving the option to the stock exchanges with respect to the expiry. We have joining us Sriram Krishnan, who is the Chief Business Development Officer at NSE. Sriram, congratulations. I think you've been asking for Tuesday expiry. Can you give us some more details?
Yes, thank you very much. Yes, we had applied for Tuesday as the preferred expiry day after the Monday expiry, which we had proposed, was put on hold in line with the request from SEBI. So I think the market participants, after the Monday expiry being put on hold, came back to us and said, Tuesday would be the next best thing. That's what's outlined. That was what was outlined in the consultation paper as well. And so we had applied for Tuesday expiry as our preference, which is in fact approved now by SEBI. So we're very happy to have received the approval and very grateful for the same.
It seems that the BSE has also, in the interest of the markets, agreed to shift its expiry to Thursday. Now that you have two expiries in a week, Tuesday for NSE Nifty and Thursday for BSE Sensex, how do you think see the volumes changing now?
No, this is a huge positive for the participants in the market who wanted to trade more on NSE contracts and hence have been requesting us to change expiry day for quite some time now. In fact, when the opportunity first presented itself, the other exchange shifted their expiry from Friday to Tuesday, whereas we did not make that call at that point in time. And hence we are very happy that the current request of market participants, which is for NSE to be having expiries on Tuesday, has become a reality. We think that it's a great outcome because NSE contracts are very deep and liquid, and our numbers reveal the real story about how NSE contracts have gained in popularity over the last 20 years and more. So I think it's a great outcome for the market participants.
If you can take us through, for a basic viewer, how does life change for an exchange by shifting its expiry from a Thursday to Tuesday? And now that you have two expiries in a week, Tuesday for you and Thursday for the Bombay Stock Exchange, how does life change? In what form things change for you?
The equity derivatives are supposed to be hedging tools, and people used to hedge via equity derivatives over the last 2+ decades. And there was never a focus around the cost of the hedging. And earlier we used to have only monthly expiries. And as you can imagine, at the beginning of the month, the premium tends to be on the higher side, and gradually the premium goes towards zero as we reach the expiry day. Now, if you take the weekly contracts, likewise, at the beginning of the week, the premium tends to be a little higher, and as we reach the expiry day, it becomes close to zero. Now, if there are two expiries in a week, let's say there is an expiry on Thursday, what happens is the new contract begins from Friday. On Friday, the premium tends to be very high for the contract which is for the exchange, which has the expiry on Thursday, which means if we have expiries on Tuesday, we would be, the cheaper option on a Friday between the two contracts. Therefore, on Friday, we will see more activity on NSE contracts. Likewise, on Monday, and of course, on Tuesday, which is our expiry day, we definitely will see much bigger activity. So, in other words, 3 days of the week, you're likely to see a lot of activity at a lower cost on the NSE contracts, which is what the market participants want to see happening.
And that would increase the kind of turnover trades that are happening in the market, given the fact in the last couple of months or since November of last year, there has been SEBI curves with respect to the kind of volumes that were traded in the weekly options?
No, the SEBI reforms have worked out quite well. The overall participation from retail has come down as per expected lines. And also, because the product availability has been curtailed to just 2 expiry days now in this new construct, it works pretty well. And any new exchange that wants to come out will also then have to keep their expiry either on Tuesday or Thursday as per the current rules, which is a bit unfair to the new exchanges. But then I think in the overall interest of the retail customers, this is what the regulators have decided is the best way forward, and we respect that. So I think in the new construct, NSE will obviously benefit in the sense that there will be more activity that can be expected to be seen on the NSE contracts. And that's really what the market wanted to see as well.
So, my final question to you is that, we saw that when we shifted between 2 expiry days, Tuesday and Thursday, there was some volume shift or the turnover shift happening to Tuesday expiry, because you had Thursday and BSE had Tuesday, and as a result of which there was a change in the market share. Do you expect the market share to come back to you now?
We don't really, want to look at it in market share terms. We want to see, that the products which the market wants is available as per the expectations of the market participants. Market participants wanted NSE contracts and more of NSE contracts at a lower and, affordable premium. If that's the ask, then I think what we have now is just the recipe that can deliver that ask. So in that sense, whatever changes will happen in terms of impact on market share are bound to happen. Like I said, there can be more activity that can be expected on the NSE contracts.
My final question is that you recently launched the electricity futures as well. Do you see some kind of, what kind of a response are you seeing from the market, and what are the new products that you're looking at?
Electricity futures is a new product, and it's something that we will gradually get to learn and understand more of. And I'm saying that because every single individual is impacted with rising power costs if there is an increase in the cost of power. And we've seen this happening across the world. Power costs are constantly going up, not really coming down. The other aspect to look out for is the fact that the world is moving towards renewable energy, and India is clearly leaping ahead of many other countries in this march towards ESG compliance. As we move towards renewable power, then the cost of power can come down. So if somebody doesn't hedge, then they're probably missing out on a huge opportunity to be more efficient. Sometimes in the prevailing equation, you can be left behind, and your competitors can steal a march over you if they can smartly use a product like electricity futures. So this is an interesting product that we are going to bring to the Indian market, and we are quite hopeful that it will start seeing activity from genuine hedgers like the distribution companies, the power producers, and then gradually come to the corporates as well. Anybody who has a significant number against the electricity expense line will be forced to sit back and take notice of this product.
Sriram, it was a pleasure talking to you. Thank you very much for joining us on NDTV Profit today. Himakshi, back to you.
Yes, Sajid, thank you so much for that. And viewers, so that was, NSE's expiry date changed to Tuesday, and now BSE has also been changed from Tuesday to Thursday now. And moving on with the markets, viewers, market ended lower with the Nifty closing above 23,850 levels and Sensex also losing over 200 points today. MD and the small cap indices also slightly underperformed the benchmarks. Now let's go across to Harsh, my colleague, with a wrap of all the action on the D Street today.
Well, let's talk about the index first. It was down around 0.6%. We were off the day's highs for sure, but we're slightly off the day's lows as well. We're around 30 points up. It was actually the breadth, just like yesterday, it was the breadth which has impacted the index in a larger fashion. The heavyweights haven't contributed much. We look at the contributors as well. You'll see that, yes, there were some contributors, especially some common contributors sector-wise, and IT were the positive ones, but and banks were the negative ones, and heavyweights, of course, HDFC, ICICI, RIL. But outside of that, there's not been any significant contributor on either side, and therefore this 100-point gap down that we've seen today is largely because of the secularity of the Nifty 50. We've seen a large number of stocks sitting in the red today, and when we are pulling up the heat map, that will indicate that the plenty of stocks were sitting in the red, and that's what the concern was. But outside of that, IT had a good day of trade. We saw good traction from all 4-5 large IT players. Wipro closed flat, but outside of that, and the IT index too did fairly well for itself, 0.7% higher. The top performing sectoral index today, along with the Nifty India Defence Index, which was also up around 1/3% thereabouts, on a day which was otherwise quite a difficult one in that sense. You're looking at IT, important and pertinent to note that it's been a bit of an outperformer in the last few trading sessions, so that outperformance continues. Let's talk about the overall breadth as well, and the breadth on the NSE was tough. It was 2:1 with the declines or the bears in complete control right towards the end. But somewhere midway through the day, we reversed, in fact, because we were sitting in the green where the breadth was concerned. We reversed fairly quickly, and therefore the mid cap and small cap indices have actually underperformed the Nifty 50 and have closed at the day's low point. So that's where some bit of underperformance has crept in. Among sectoral indices, also pretty much all sectors trading in the red outside of defense and IT, and you saw pain in pharma, you saw pain in metals, you saw pain in auto and realty. Those were the 4-5 pockets which underperformed the index. The bank Nifty largely in line with the Nifty 50 index. That's broadly how we played out. The BSE 500 top gainers, top losers, Sterlite Tech has stood out as one of the stocks of the last 3-4 trading sessions. Been a phenomenal run. That run continues. But outside of that, you saw some losers as well. Something like a Prince Pipes was down roughly 6% odd.
Thank you so much, Harsh, for that market roundup. Now, the Enforcement Directorate has expanded its crackdown on illegal online betting platforms, now zeroing in on the celebrity endorsements. Former cricketers Harbhajan Singh, Yuvraj Singh, Suresh Raina, and actors Sonu Sood and Urvashi Rautela have been questioned over their links to banned betting platforms. Shrimi is joining us with more details on this story.
Indeed, the ED is widening its probe into illegal betting case, where the now focus is on celebrity endorsement. What we are picking up from our top sources in ED, that the agency has reached out to popular personalities and former cricketers, including some Bollywood personality as well, including Yuvraj Singh, Harbhajan Singh, etc. And they are seeking explanation on why they are endorsing such platforms which are banned by Government of India. And in fact, they're also saying that that is the clear violation of several Indian laws, including PMLA, FEMA, and the advisory from the Information and Broadcast Ministry. Now, sources telling us that during the course of probe, ED actually observed that how these betting platforms are using surrogate ads to kind of dodge its identity. For example, XBet became XBAT, and that is how they are kind of marketing themselves as skill of game under the pretext of online gaming to kind of hide its illegal operation. The second important fact emerging during the probe is that how the mule account and Benami transaction is being used to channelize the whole transaction, which ED is currently looking at, and plus the kind of promotional payout being given to some of the media houses. The ad rates are between 50 crore to 100 crore, and that is what they're also seeking inputs on. Some notices already been sent to these celebrities, and some will be issued soon in the coming weeks. Some interesting estimates have been also given by ED official. One is that how this entire market is growing and 30% annually and reaches around $100 billion. 27,000 crore is what the tax division, the top popular betting apps are actually evading. And third is that how the traction is increasing. Between January and March alone, they have seen 1.6 billion of traction, which clearly indicates the social as well as financial consequences of this entire, illegal betting platform. So ED is probing this entire case, and we will see more notices and more names emerging in the coming days.
Absolutely. Thank you so much, Shrimi, for closely monitoring the story and bringing in those exclusive details there. Now, new development on the AGS Transact Technologies. Despite a promise from the chairman to roll out a repayment plan by mid-April, AGS Transact Technologies continues to default on employee salaries. The financial strain deepens with mounting frustration among staff. My colleague Agni Dev, who is standing outside the company's Prabha Devi office, brings us the latest details.
What you are looking at right now was the entry to the corporate office of AGS Transact Technologies, a cash managing company which provides ATM services to other listed lenders. Now remember that AGS is a company that is facing corporate insolvency and problems with its cash management. But employees are also saying that the company has now employed bouncers to protect its top brass from employees who are coming in from other states demanding their overdue payments. So this is a wider issue where employees of AGS Transact all over the country are saying that they are not being paid their dues for at least 5 to 7 months. Dues which range from anywhere between rupees 3 lakh to up to 9 lakh per employee. Now remember that these employees were promised by the chairman Goyal earlier in April, where he had said that a resolution plan for paying outstanding dues would be issued within the month. But April has come and gone and no resolution plan has been given just yet. And these are employees who are also unable to quit the company, which is a very important thing to note, because as the company is unable to pay dues, people have just stopped showing up to work. This includes people from the HR department. Now remember, the company had around 2,500 employees, and a senior level executive told us that less than 50 are now actively working for the firm. And as the HR department has cleared out, stopped showing up to work, there's no one to process resignations, there's no one to issue relieving letters, and there is no one to transfer PFs to other companies. So as an AGS employees, even if you put in your resignation, chances are it is not getting processed. So how do you then join another company? These are issues which employees all over the country for AGS Transact have echoed. We have talked to people from multiple cities, and all of them are giving the same concerns. They have also issued legal notices to the company and the management, but there has been no response. Ravi Goyal has gone incommunicado and there has been no update. We have tried reaching in through texts, calls and even email, but even to us he has given no update. So even if a company fails to operate on its corporate level, remember the issue always boils down to real employees and on-ground challenges.
Right, Agni. Thank you so much for bringing in those details from ground zero. Now, Maruti Suzuki, viewers, is also accelerating its eco-friendly logistics with a groundbreaking in-plant railway siding at its Manesar facility, the second after Gujarat. Now, this game-changing move will eliminate 65,000 truck trips yearly, save 6 crore litres of fuel and significantly reduce carbon emissions. For more details, here is my colleague Rishabh with the ground report.
Chaiya Chaiya, Kasto Maza, as well as Mere Sapno Ki Rani. These are some of the famous Bollywood songs that have imprinted Indian Railways in our psyche. But for Maruti Suzuki, Indian Railways now means lesser trucks. What we're seeing here today is the fact that we are at the inauguration of India's largest multimodal cargo terminal for automobiles here in the Manesar facility of Maruti Suzuki. What we're seeing is that Indian Railways and Maruti Suzuki now are increasing their partnerships, and more cars from Manesar facility of Maruti Suzuki will be transported via rail. About 9 lakh cars are built right here in Manesar. About half of them, about 4.5 lakh, will now be transported via rail directly from this facility here in Manesar to Maruti's various export hubs as well as to its multiple dealers. What we're also seeing is that currently it already touches about 600 cities. With these trains, about 380 or roughly 400 cities will be touched directly via these rail lines. What we're also seeing is the fact that this is built with an investment of about 450 crores from Maruti's side, and it will help them save a lot more in trucking and fuel costs.
This is India's largest cargo terminal with a capacity of transporting 4.5 lakh cars per year. Incidentally, this is the second one, and the first one is also from Maruti Suzuki, which had a capacity of 3 lakh. So that was in Gujarat. Today we are inaugurating it in Manesar. And this is a very positive move for industry because we can decongest a lot of road transport and shift the dispatch of finished cars from the factory to dealers instead of road transportation to rail transportation. So it will decongest roads. It will cut down many truck trips. 65,000 truck trips it will clear, and that will save about 6 crore liters of fuel which goes into that trucks. And by burning that fuel, which is now avoided, we'll be saving about 1.75 lakh tons of carbon dioxide. So it's a very positive move for Indian logistics infrastructure. It makes way for sustainable transportation.
Got it, sir. Beyond this, we just saw one of the cars getting loaded into the train. What is the sort of, in terms of capacity, we're seeing already about 50% of the cars that are built here will be transported to different facilities. Where all are these cars now heading to via these trains?
So there are 17 hubs from where these trains can go immediately, and they are further connected to about 380 cities in India. So that's the kind of connectivity we have. We have been steadily increasing our railway penetration in our dispatches of finished cars from the factory to the dealers or from the factory to exports. So we have moved from about 5% penetration to now almost 1/4, 24-25% last year, and we wanted to go up to 35% by 2030, by the turn of the decade.
With quicker logistics, this presents a much faster opportunity for Maruti to sell its cars and get more and more demand in and cater to that via their supply chains right here in Manesar as well. Cars like the Desire will also be sent to Pipavav and Mundra ports in Gujarat for export, and many more flagship models of the Maruti Suzuki brand will now be available to a much larger customer base thanks to faster logistics as well.
Thank you, Rishabh, for that. Now, Israel has ramped up its air defensive on Tehran. 5 days into its campaign targeting Iran's military and nuclear infrastructure, the Israeli military claims to have killed Ali Shadmani, Iran's wartime chief of staff and top commander, in a precision strike. Meanwhile, the Indian embassy has evacuated students from Tehran, with others facilitated to exit via the Armenia border amid this growing, regional tensions. Now, NDTV's Mohammad Ghazali is now joining us with the latest updates. Ghazali, I just wanted to know that, few minutes later, some time back, IDF came up with a statement saying that they are going to assess success of attacks on nuclear sites. So, that's a big statement coming in. So, how do you view this? How effective actually it is that Iran has been Israel has been dismantling this Iran's nuclear capabilities?
See, if you go by what Israeli army and the spokesperson are claiming, they say that they have inflicted significant damage to the Iran's nuclear program. But IAEA and even US say that there are certain nuclear enrichment plants which have faced damage, but largely the entire purpose of Israel's attack was to completely dismantle the nuclear program of Iran, and that has not yet been achieved despite the war entering into its 5th day. And Israel continues to carry out aerial strikes into Iran, and not just at the nuclear facilities, but oil depots, civilian infrastructure, gas pipelines, water pipelines. They have all come under the attack, but yet that prime target of dismantling the nuclear program it still looks like out of reach for Israel, because the reason being that there are many enrichment centers which are deep beneath the ground, for which you need bunker buster bombs, which actually is owned by United States, and that is exactly why Israel continues to plead US to enter into this war. But multiple sources have confirmed that United States has clearly told its Middle East allies that they are not going to jump into this war at Israel's insistence. And to completely dismantle this nuclear program of Iran, Israel will continue its aerial strikes into Iranian territory, and that is why it appears now that the war will further stretch for few more days before actually there could be some kind of negotiation or peace talks between Israel and Iran.
Absolutely. Thank you so much, Ghazali, for bringing in those details. And, it will be likely to see that how it's going to pan out, as Donald Trump also has left the G7, meeting. And he has also said that, it is bigger than the ceasefire. So let's see how things are going to pan out for Israel and Iran. And with that, viewers, it's a wrap on this edition of Profit 360. But stay tuned to NDTV Profit for more news and updates.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Hello and welcome. You're watching KYC. Today we have an interesting company for you. It's in the wiring segment, and it makes steel wires. Now what I want to know about Bansal Wire Industries is that they follow a cost plus model. So how powerful is that? Because you are basically going away from any raw material cost inflation which might eat into your numbers and your margins. Is this a sustainable model? One. Second, is there still some bit of risk, if any, from raw material pricing? If there is an inch up in raw material pricing, does that dilute your margins? That's what I want to understand. And how much of that is built in to your contracts with your customers. So a little bit around that, I believe that could well be a risk, because the margins are single digit, mind you. Any piece of that hurting margins could well hurt the numbers in significant fashion. We haven't seen it yet in the last 4 years that we've looked at the data for, but it could happen, and that's what I want to understand, what the risk of that is. The second one is the geopolitical risk. Everything that's playing out in markets currently has the geopolitical risk. If you are export facing, Bansal Wire does do exports, and therefore could that be a very real risk is what I'd want to understand. The third one is their FY26 strategy. Now this is where it starts getting very interesting. Now Bansal Wire Industries has suggested that FY26 will be a tough year, it will be a muted year, and while volume growth will be the focus, margins will not expand, and therefore they are saying that we will keep this year more focused on market share acquisition. Can that in a significant fashion really aid market share and aid the FY27 numbers? Can this strategy play out? What is the downside risk of this strategy? And what is the rationale behind it is what I'd want to understand. Now, product mix. Post this strategy push, is there a change in product mix? And I want to understand this because the margins on each of the products is very different. And that's where, again, it's fascinating because you could well push one product with a higher margin, which could lead to a substantially different margin picture FY27 and beyond, and therefore profits will just be in another orbit if that were to happen. I want to understand whether that upside possibility is there. Now FY27, therefore what should we expect overall, both in terms of top line growth, margins, volumes, and what will backward integration really bring? Because they are going into backward integration and they're saying that that cost control should aid the numbers going forward. But how much of that, how much do raw material prices stop mattering, and how much therefore does that give or lend to margins? Is so a lot of these questions is what I want to understand and try and break down. Let me first start off with what Bansal Wire Industries does. It's a manufacturer of steel wires. I did indicate that. It's the largest stainless steel wire manufacturer in India. It's the second largest steel wire manufacturer in India. The products cater to diverse industries, automotive, infra, even aero for that matter, and general engineering really. So it's a diverse set, and we'll talk a little bit about industry wide as well as to how the split in terms of revenue across industries is looking. It's fairly diverse, and that will give you a better understanding. But it's setting up a stainless steel manufacturing facility for wire rod manufacturing. Now this could be again one of those business changes which could aid the numbers significantly going forward. So you want to look out for all of these. But let's first talk about the journey of the company. It was incorporated in 1985. In 1995, it added the stainless steel wire production line. It also commenced the manufacturing of galvanized wire in 2003. 2007 commenced high carbon wires production. Now I'll explain what each of these products is, but for now we're just going through the journey. The products in automotive industry was started in 2015. 2022 it commenced the infra for the Dadri plant, which is significant expansion. It acquired Bansal Steel and Power in 2023, IPO'd in 2024, and in 2025 January we have the Dadri facility which has commenced operations. Now I want to talk to you a little bit about the products because you know, what exactly is steel wires, right, and where is it used? So there are three types of steel wires that Bansal Wire Industries manufactures. The first one is high carbon steel. This is extremely strong steel. It has a very high carbon component in the steel wire. It's the stronger option where steel wires are concerned. So whenever a steel wire ought to be used, say for example for a bridge, right, you would want something which has very high durability and very high strength. This is where you use a higher carbon within your steel wiring, which is what high carbon steel wiring is. This also in terms of pricing happens to be the most expensive of the steel wires that you have. So again, something to keep in mind. We'll also look at the EBITDA and the possible margins on each of these products. But first off, let's understand the other two. You have mild steel wire, which is a lower carbon within the steel wire complex. There's a lower carbon component and therefore it's slightly weaker than the high carbon option that you have. It it is used where lower stress is required. It could be certain components within the auto space where you require lower stress, but at the same time you require steel wiring. So maybe that is one place of use. The last one is stainless steel wiring. This is corrosion resistant, and this becomes important because steel in general will corrode, but stainless steel will not. And again, you will have more versatile uses for a stainless steel wire than a mild steel or a high carbon steel. So all three very different uses, and at the same time you have these three products across categories. Now let's talk about the pricing here. And again, this stands out. Okay, so first let's talk revenue. Look at the diversity of the revenue, of the total cumulative revenue pie that there is. There's auto, which is 9%. Then there is general engineering, which is 12%. There is 19% in consumer durables. So you have a fairly large mix and a fairly wide 19%, I beg your pardon, in auto. General engineering is 12, infra is 11, hardware is 9, durable is 9, power transmission is 6, agri is 5, and then you have other component. This is as per a DAM capital report, so I want to quickly caveat that as well. Now let me talk about the EBITDA per ton for each of the products that they manufacture. This is the EBITDA per ton, so very high for high carbon, 11,000 rupees per ton, 4,500 for low carbon. Stainless steel is 7,000 rupees per ton. So that's the EBITDA per ton. And if you're looking at the margins as well, the margins are sitting at 14% for high carbon, low carbon is 6.3, and stainless steel is just 4.5. So again, that's something you want to look out for. There's backward integration happening, and we spoke about this a little bit. There's a 1.8 lakh ton induction based steel plant, 60,000 tons of low carbon and stainless steel wire manufacturing capacity is going to come up, and you have with steel which is going to be made from scrapped steel. So there's going to be smelting, or rather melting and casting, which is going to happen of scrapped steel, which is going to be used for the purpose of production of steel wires. Also, they're producing wire rods from the newly made steel. This will be commissioned only in FY28, and it increases stainless steel wires EBITDA by rupees 4,000 to rupees 5,000 per ton. Mind you, the stainless steel wires EBITDA per ton is 7,000. So this could well be a large inflection for the stainless steel part of the business. And this is where you want to also tie up what I mentioned earlier, the product mix. Because if the product mix were to evolve by FY28, then you have this very large stainless steel capacity, plus you have stainless steel EBITDA per ton going up. Both of those could well lead the numbers higher, FY27 of course, but FY28 as well. So all of this is what we'll try to quiz management on, because a lot of this is forward guidance. But let's talk about the metrics first. The metrics with regard to a Bansal Wire Industries, I'm going to start off with the income statement, the balance sheet, the cash flow, the return ratios. Thereafter, we look at shareholding, street cred, valuations, and street coverage. We look at all of the 8 parameters, and we'll assess and judge where it fits on our KYC ratings. Let's start off with the income statement. You're looking at the 3-year top line, which is compounded at 17%. Not bad at all, 17% CAGR. And mind you, it was unlisted for 2 out of those 3 years, right? So it's listed only for the last less than 12-month period. So you want to, again, keep that in mind, because there's good growth even during the unlisted period of the share. Let's talk also a little bit about the EBITDA. The EBITDA is up 36% on the 3-year CAGR basis. A large part of that came in FY25. Your margins have gone up from 4-5 odd percent, 6% in FY24 and 8% in FY25, nearly 8%. I would say 7.7% to be absolutely precise. Let's talk about net profit as well. 37% growth. That's what's driving PAT growth. The EBITDA is driving it. 37% up, 3-year CAGR. So again, strong growth in terms of profitability as well. A lot of it back-ended, mind you, in FY25. You look at that margin jump, a lot of it has come in FY25, something you want to be cautious about, but it's a strong growth nonetheless. So, so a thumbs up with regard to where your margin as well as your top line picture goes in terms of growth. Let's talk about the balance sheet now. The equity share capital has gone up. It went up in FY24 pre the IPO. It went up FY25 as well post the IPO. Now you have the book value sitting at 1268 odd crore. But you look at the borrowing has gone up. The borrowing has gone up, or rather currently sits at around 500 crore. When I'm talking about short-term plus long-term borrowing. So both of those numbers are currently sitting at nearly 500 crore. Something you want to keep in mind when you're looking at a company of this size, that the debt to equity has gone up. Yes, they are doing capex, but the debt to equity has gone up. You want to be careful at this point with regard to a company like that. Let's talk about cash flow now. The cash flow, again, very interesting picture. The cash flow from operations has actually turned negative in FY25. And two factors I'll quickly list down as to why that is so. One, you have your receivables which have gone up substantially, and I'll enumerate that for you. 21 crore negative is the impact of receivables on cash flow from operations. Receivables have gone up FY23 versus FY24 by 21 crore. And then by 173 crore between FY24 and FY25. Inventory as well from negative 11 has gone up, in FY24 has gone up by around 11 crore, and then in FY25 has gone up by 224 crore. I want to understand as to why that is so, and whether that unwind on both receivables as well as inventory happens in the current financial year, which is FY26. And therefore that negative working capital change in FY25 has gone up by 280 crore nearly, which is what is impacting your cash flow number in a significant fashion. So that's why you're seeing that negative 100 crore cash flow from operations, which is sitting in your cash flow. Your profit after tax though has gone up decently. It's at 269 crore. Your net cash flow not as relevant, because you had all these fundraisers, you had these debt repayments, and you also have new debt which you have raised and the capex that you're doing. So all of that has gone into the net cash flow, which is currently nil or whatever, very, very small, both in FY23 and 24 as well. So not as relevant for such a high capex kind of business. Let's talk about return ratios now. Again, when you're looking at the return ratios, it's largely been steady. 14 to 16 odd %. That's good, right? That's positive. But can I go towards 20% from here, or will I maintain that 15% kind of number? 15% checks the box, there's no doubt about it. But can I go higher is the question as I scale up. So that's a question which we will try and understand, and that may not happen this year or maybe even next year. But could it happen in FY27 or 28 is really the question. So we'll have to wait and watch on that. Let's talk about shareholding now. You're looking at 78% of the shareholding held by promoters. Mind you, this company listed in July of 2024. So I don't have a large comparable in terms of the holding for promoters earlier versus now. Are they diluting stake? Well, none of that. They will have to dilute stake to a certain extent, and their lock-in completely expires in January of 2026. That's one date you want to keep in mind. When lock-in expires, you will see promoters dilute likely at least a little bit. They'll be forced to dilute because they have to dilute to 75% at the very least. What they do thereafter will be the question. But for the moment, there's a decent promoter holding at least already built in. So again, that's something you want to keep in mind. And look at the DII holding as well. Invesco India Manufacturing Fund holds around 3.6% in this company. That's the other piece that's standing out. Not too much public interest. That's the other thing that's standing out. So 3-4 pieces which are looking quite positive where shareholding is concerned. Now let's talk about street cred. And again, this is a tricky one because there's just 9 months of data available to me, right? So let's look at the IPO price. It was 256. Currently, the stock is at 370 rupees a piece. So plenty of value left on the table by promoters. Again, that's a thumbs up. I would treat that as a thumbs up. While the year-to-date returns are difficult, and since the listing as well, it listed at 356. So substantial value unwind happened there itself. But it currently has given only an 8% return to investors post if you have been a buyer from the listing date. So that not looking too good, but I would rate this more from a promoter perspective that they've left plenty of value on the table for investors, and we look at the valuations as well because that will also give us a decent indication of this. So once I've put that out of the way, now let's talk a little bit about valuations itself. Now you look at the EPS estimates. This is the average EPS estimate by analysts, 10.8 and 16. That brings the FY26 expected price to earnings at 35 times currently, and price to earnings FY27 at 23.5 times. The IPO valuation suggested 26.5 times 1 year forward, which was FY25 valuations. It listed in 2024 July, and therefore when I'm looking at FY25 valuations, it was trading at around 26 times basis the 250 rupees price that they listed at. So that's one thing that I have my eye on, and therefore your valuations don't leave too much room for positive surprise, and therefore we're giving this a neutral unless the numbers change, of course, and that will be something that we will ask and quiz management on. Let's look at analyst recommendations. There are 3 buy calls: no hold, no sell, potential upside 22%. So very, very strong upside that we are seeing on this, but just 3 analysts. 1 has not rated it, but 3 otherwise have rated it a buy, and a 22% upside is what they are seeing. Let's quickly go through the ratings. Therefore, let's sum it up. Let's put it all together. Revenue is a thumbs up. Income statement, balance sheet, cash flow, return ratios. That's how it stacks up. Shareholding, street cred, valuation, street coverage, and that gives us a 4.5 out of 8 on our KYC rating for Bansal Wire Industries. Let's go across to Pranav Bansal, CEO and MD at Bansal Wire Industries, to talk to us about how he sees the business and what to expect going forward. Good morning, Pranav. Pranav, I want to start off by understanding from you as to how much of a correlation or impact does raw material price increases have on your business? How sustainable is the cost plus model that you adopt? How much of this is built into agreements is what I want to understand.
Yeah, hi. So, in the last 85 years of our business, I am the 3rd generation now of my family in this business, and all along we have tried to maintain a cost plus model in our industry because raw material accounts for a major part of our total cost. And we have done a lot of diversification strategy in our suppliers, wherein we are always able to maintain, kind of flexibility there, and which you will see in our past as well. But no matter how raw material has behaved, we have kept an intact margin.
That, Pranav, give us some understanding, some color.
Can you say that again?
How have you managed to do that? Is it on the basis of some agreements that you have with your customers which allows you to adjust for price? How does that work?
So yes, of course, we have a cost plus model wherein any raw material increase and decrease that we get, we are able to pass it on to majority of our customers within a month or so. And apart from this, we have also widened our supplier base. So therefore, we are also able to do a long-term contract with our suppliers for pricing to maintain it on a stable side.
By majority, do you mean 80%, 70%, 51%? Just give us a number in terms of what that number would be. How much or how many contracts would you have in terms of where you're allowed to pass it on right away within 1 month?
So at least 85% of our sales happen within customers wherein we are able to pass on our increase and decrease within a month.
And what's the current geopolitical risk looking like? You also do exports. Does that put a dent on FY26 numbers at all, given everything that's happening with regard to geopolitics? And how are freight costs evolving? Because you also are impacted by that.
Definitely. So as a strategy, we have always tried to diversify as much as possible. Even in exports, we export to about 60 plus countries. Although our major share of export is in the US and Europe, and those two economies have not given us a very good number in the last 2-3 years. But as a whole, because export is about 10 to 15% of our total revenue, so that does not really impact us at a large scale. there has definitely been a slowdown in our export sales in the last 2 years. But even after that, we've been able to keep our numbers growing and our margins intact. Freight cost is definitely another aspect that we have struggled with in the last couple of years. But most of our contracts are where prices are X our manufacturing facility. So freight cost does not really impact our margins, but it definitely is a factor that comes into play when we are trying to bid for new products.
Pranav, if exports were to turn around, and I'm trying to understand upsides here, if exports were to turn around, you've said US, Europe has not contributed well for you both margin-wise and top-line-wise. What are the factors which will help it turn around? And two, how quickly can it turn around, if at all, and how will it contribute?
So, as I said before, as a strategy, we have tried to diversify as much as possible. So, if we are in a situation where if export doesn't do well, it does not impact us a lot. Similarly, if export really does a lot better, still in total, it will not be a big part or big contributor to our growth. We are a company that is based on the domestic market. 85-90% of our sales happen within India, and that's where our focus lies.
Okay.
Because it already has tremendous opportunities for us.
Point taken. FY26, Pranav, what's the outlook like? You're going to sacrifice margins. Therefore, where should that margin number lie? And what's the thought process behind the strategy?
Sure. So, even in the last 20-25 years, if you look at our numbers, as a company, we've grown at 20-25% on an average. There have been years in which we've grown at 10%, and there have been years in which we've grown at 30%. But on an average, we keep on growing at 20-25%. And that's our thought process even for the future. So next year, we have targeted this to be a year where we will grab volumes. And to do that, we might have to sacrifice some margins. Plus, there will be a bit of a margin decrease because of product mix changing as well. So we are looking at about 15-20% kind of a overall margin drop, in which most of it is also coming from the product mix that is changing.
And what's the thought process beyond that? So you're changing product mix. Will you do more of stainless steel? Am I understanding that right? And does that give you a leg up from FY28 onwards? Is that what you're thinking about? Saying that stainless steel from FY28 will have EBITDA per ton, which is far higher, and therefore might as well focus more on that. Is that the thought process?
Yes, definitely. You actually got it absolutely right. So stainless steel and low carbon as a product, we have not increased in this year. High carbon is the segment which increased rapidly. This is the reason why our EBITDA per ton on a blended basis also increased in this financial year. Next financial year, our focus will be more on stainless steel and low carbon wax, because after our backward integration initiatives, our margins in the other two products will also increase. So we want to focus on those two segments more.
Okay.
And today, all we are concerned with is absolute EBITDA. So even if our margin per ton goes up or goes down, does not really matter as long as we are able to get an absolute increase in EBITDA.
Pranav, I'm going to quickly ask you for three pieces. First, on the top line, what's the growth looking like in terms of CAGR for the next 3 years?
So as I said, as a company, we want to grow at 20-25%. So on an average, we want to continue growing at 20%.
So you likely double in terms of top line by FY28. That's the thought process. Okay. Where does EBITDA therefore go? Because you're looking at a better EBITDA per ton and product mix change. So where does that EBITDA number go? Should it grow at 30+%?
So EBITDA would actually not grow at 30% for the next year, for FY26 or 27.
Sure.
But yes, from FY28 with the backward integration kicking in, and with that also our foray into specialty wire will yield results in 28. So after that, we are definitely looking at a better EBITDA.
Okay, so what should that margin number be, Pranav? What should that margin number be?
So in FY26 and 27, let's say
give us that journey.
Percentage is decreasing a little bit in FY26, especially because of the hit that we are taking in our margin to grab higher market share. But FY28, I think we will be back to this margin or a little higher than this.
Is debt and cash flow a concern, Pranav? Sorry, last question.
So we are actually doing a lot. We are actually doing a lot to improve cash flows and better ROCs within this year and next year. So FY 26-27, although with a reduced margin, we will try to bring out cash flows in a better way. We are looking at a lot of cash flow positivity from the first quarter itself.
So why have receivables increased? Why have receivables increased, Pranav, this time around? Why is inventory high, receivables high? Why is that happening?
So that has happened because of a consolidation that happened within the group last year. When we went public, we said that we'll merge all our other companies within this Bansal Wire Industries, and that is what has happened last year, because of which our number have also increased by about 50% in sales. Now, to do that, we need to carry a lot of inventory, and we need to have a good amount of debtors, which is increased. But of course, we will try to normalize this within this year.
All right, thank you, Pranav, for being so patient and answering all of those questions, and fairly quick as well. That was good. Thanks, Pranav, for coming in and speaking with us, giving our viewers that perspective. Viewers, completely out of time on this edition of KYC. Thank you so much for joining. Stay tuned to NDTV Profit. More action on the other side.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis, conversations that matter. We break it down, cut through the noise and set the context for you. Hear from top policy makers and thought leaders from the world of business and beyond.
Watching Your Money Matters. I am Mahima Vajrajani. Today we are diving into a topic that sits at the intersection of health and wealth, health insurance and personal finance. Whether you are a student just starting out, a working professional, or planning for retirement, understanding how health insurance fits in your financial life is more important than ever. With rising medical costs and ever-evolving insurance landscape, making informed choices can mean the difference between financial stability and unexpected hardship. In this conversation, we'll explore how health insurance impacts our wallets, the smart strategies for choosing the right plan, and common pitfalls to avoid. And to take this conversation ahead, we're joined by Nikhil Jha, co-founder of Hercules Insurance Advisors, joining us now. Nikhil, welcome to NDTV Profit. My first question to you would be that in terms of going ahead and buying out a health insurance, what are the key components that one needs to watch out for, and of course the key factors that one needs to keep in mind before buying a health insurance?
Yeah, so health insurance, something that everyone should look onto it. You have highly addresses that one of the major part that every student, every working professional, every retired should have a health insurance policy. So totally we have made a top 10 things to be considered while buying a health insurance policy. First one will be no room rent restrictions. In all of your health insurance policy, if there is a room rent restrictions, your policy is a big red flag for you. So first point will be no room rent restrictions. So you can choose any room you want while hospitalization, because there are a number of room categories available in the hospital, like single, private, deluxe, super deluxe. So all the room categories should be covered in your health insurance policy. Second benefit will be no co-payment. Co-payment, what is mean by co-payment? Co-payment is a part payment between you and the insurer company. Okay, so let's take an example. If if my policy is holding a 20% co-payment, what does it mean? So tomorrow my hospital bill comes to 10 lakh rupees. Out of 10 lakh, 20% means 2 lakh rupees I have to pay from my pocket. Remaining 8 lakh will be settled by company. So this thing should be avoided in your policy. Run away from the policy that have co-payment. So I don't advise anybody to go with a policy where co-payment is there. So second point is co-payment. Third one will be no sublimits. So what is meant by sublimits? Sublimits means there is particular restrictions or particular amount fixed for the particular disease. Like for cataract, we can claim up to 30,000. For kidney stone, we can claim up to 50,000 or whatever. So this type of limitation should not be there. For a single or for a multiple disease, your policy should cover up to the sum insured. That is the third point. So fourth point is restoration. What is meant by restoration? Restoration means your sum insured is, once you finish your sum insured, means once you have utilized your sum insured, again because of restoration your sum insured will be doubled every year, like a unlimited buffet system. So that is also very much required in a today's comprehensive policy. Fifth one will be pre and post hospitalization should be also covered. What do you mean by pre and post hospitalization? Pre and post means once you get hospitalized, there are particular tests that you have done before getting hospitalized, right? That comes under pre-hospitalization. What do you mean by post-hospitalization? There are certain tests, doctor visit, physiotherapy and all that stuff that after discharge, doctor will ask you, okay, for next 10-15 days, you have to visit to us and take this particular test and all. So that all comes under pre and post-hospitalization. So your policy should also cover this. Sixth one will be consumable cover. What do you mean by consumable cover? There are certain items that are not covered in any health insurance policies, like gloves, cotton, mask, syringe, then PPE kit, nursing charges, administration charges, etc. So because of this rider, your everything will be covered. So I always advise, if your policy doesn't have this rider, add this rider as soon as possible. Seventh one will be daycare procedure. All the daycare procedures should be covered in your policy. Okay. So what do you mean by daycare procedure? There are certain procedures that doesn't require 24 hours of hospitalization, that require only 2 or 3 hours of hospitalization, and it will be recovered fully. Because of modern use of technologies like cataract, kidney stone and all that surgery doesn't require 24 hours of hospitalization or more. It only required, because of laser treatment, it can only be done within 2 or 3 hours. So that all should be also covered. Eighth one will be lifelong renewability. What do you mean by lifelong renewability? Once you have taken a policy, it should not be valid only till you complete the age of 65 or 70 and whatever so. It should be valid till the time you are renewing the policy. That is meant by lifelong renewability. 10th and last will be all the Ayush treatment, Ayurvedic treatment should be also covered in your policy, because it is an alternative treatment. Nowadays, it is most commonly practiced in all over Indian states. So it is also required, very much required to get for a better comprehensive policy benefits. So these are the top 10 things you should consider while buying a health insurance policy.
Right, Nikhil. That's quite a comprehensive answer to consider that one needs to consider before buying a medical insurance policy. My next question to you is, what are the factors that one need to consider while planning buying a health insurance policy from a financial angle perspective? Because one needs to understand as to how much of a percentage of their income should go into payment of that medical insurance premium. What should one consider while planning that financially?
So first of all, I will clear this question into two parts. First one should be what is the adequate cover we are looking at. Being an health insurance expert, I always advise that minimum you should have a 10 lakh policy, and adequate cover that I personally looking at will be 25 lakhs. That is the adequate cover that I am looking at. Okay, so your policy should have minimum 10 to 25 lakh coverage. Regarding the premium bifurcation, will always advise, if your financials allows you to go for a 25 lakh cover. If it doesn't, then go for a 10 plus 90 lakh super top up, and you can make a comprehensive cover also. So minimum your annual incomes 10%, 10 to 15% should be your health insurance premium amount.
Okay, and what do you think are the common mistakes that generally people make while buying a health insurance policy? Just to give a perspective to the viewers so that they don't commit those mistakes.
Exactly. So first common mistake that I have seen, that they hide many of the pre-existing disease or any surgery ever happened past 10, 15 years or whatever. So they hide mainly this type of disease, and at later stage when they claim, they get to know that their entire claim has been cancelled and it has been rejected. Even the policy has been rejected. So one should always avoid this type of mistake. So their claim will went very smoothly. First mistake is disclosing of all the disease properly. Second, will advise everybody to go for a financial advisor to buy a health insurance policy. Don't buy via any aggregators who doesn't know about health insurance. So he or she might help you during any type of claims and all. So these are the two main reasons why claims got rejected and all.
Okay, got your point. And in terms of evaluating the health insurance policy, whether the premium that you're paying is worth it or not, how does one evaluate that?
So if your sum insured is 10 to 25 lakhs, let's take an example. If your sum insured is 10 to 25 and you are paying near about 30% of your sum insured, means for a 25 lakh policy, if you are paying 50,000 as a premium, that is very good. For a 10 lakh policy, if you are paying more than 1 or 2 lakh, we'll definitely advise you not to go with that plan or port this policy out, or you can increase the cover.
Okay, understood. Nikhil, understood that point. Just want to also get a sense that generally people who are employed also have a health insurance policy from their employer. But from what I understand is that health insurance policy is not enough for you to cover your medical expenses when it comes to emergency situations. What would your advice be to our viewers in that case?
So in most of the corporate, where you are working in a corporate, so they are having a total coverage of 8 to 10 lakhs, 5 to 10 lakhs basically. So that cover have a co-payment of 20%. That is the first criteria that I always advise not to stick to the same policy, because and you will be end up paying 20% from your pocket. That is the first point. Second, there is no guarantee for how much time you are going to stick to the same policy, the same company. Okay, so once you develop any type of disease, no company is going to give you a policy. So better when you are young, you are fit, take a health insurance policy as soon as possible and never depend upon the corporate policy, because there is no guarantee that you are going to stick to the same company for next 10, 15 years and whatever so. So never depend upon that and take a retail policy as soon as possible, because that guarantees your lifelong renewability will be there in that policy.
Understood. And in terms of your thoughts on the rise of digital health insurance platforms and app, how do you suggest to go about that? Does one go the conventional way as to go to the agent, buy the insurance policy, or can one go to one of these apps or digital platforms? If yes, which one of these do you think are safe enough?
So according to me, according to the past experience of mine into the health insurance industry, health insurance is very complex. Even today also I learn very new thing about the health insurance part. So I never advise anybody to go for an online platform where you end up calling a customer care executive back to backs and you will explain the same thing again and again once the call gets disconnected. Better take a expert advice or an advisor. That old traditional way will be worked over here because of the too many complex things that are working right now. In near future, I will definitely ask that it is going to be on smoother side where all the hospitals will be on cashless side and government will also take a part onto the health insurance industry. But till then, we'll always advise to go for a advisor who can help you during any type of claims and services.
Okay. Nikhil, for somebody, let's say at the age of 21 or 22 right now, has just joined a new job and wants to go ahead and buy a health insurance and, start early, what would your advice to that person be?
So, once you have started earning, first thing that you should take will be your health insurance policy. Minimum take a 10 lakh policy. Judge the policy judge the premium between 10 to 25, and you can take a good comprehensive policy at a minimum 15 to 17,000 as a 25 lakh policy. So once you are started earning, once you have started a financial planning and all, you should always consider first priority as a health insurance, because you are saving a corpus or you are building a saving for a particular thing to buy. And once you have got hospitalized, entire saving will be vanished. So it is always advisable to go for a health insurance policy once you start earning, once you are a student. save some money out and take a health insurance policy as it is.
Okay. In terms of health insurance policies, what kind of restoration benefits are there, and which health insurance policies actually have them, and how is it different in terms of costing?
Yeah. So restoration, what is meant by restoration benefit? Like I earlier told you, it is one of the most important factor while consider our health insurance policy. So what is meant by restoration? Restoration means your sum insured is, once you have utilized your sum insured within a policy period. Let's take an example. Let's simplify it. We are currently in the month of June. So this, let's take an example. We have taken a 10 lakh policy in the month of June. So this policy will be valid till next June, right? So we have taken a 10 lakh policy. We have taken a 8 lakh claim in the month of August. So logically from August till next June, you are only left with 2 lakh rupees, right? But because of restoration, if you again get hospitalized in the month of December, you will again get 10 lakhs more with no extra premium, nothing. So that is meant by restoration benefit. So within a policy period, every time you get hospitalized, you are eligible for 10 lakhs each time. That is the power of restoration benefit. And while buying a health insurance policy, you should always check your restoration benefits cover same person, same illness or not. So what is meant by same person, same illness? Let's take an example. I have hospitalized in the month of August, and in the month of August, I have been hospitalized for heart attack. Again, in the month of December, if I get hospitalized for a heart attack, it should cover that. That is meant by same person, same illness cover. So one should always consider this restoration benefit as a major role, because of while taking any type of claims for cancer or chemotherapy or what we say dialysis, their hospitalization required in every multiple of 10 or 20 days. So for that reason, we'll always advise to go for a restoration benefit. Regarding premium factor, so most of the comprehensive policy has an inbuilt feature of this restoration benefit. Some policies have it as a rider. In HDFC Ergo Optima Secure, it has a rider, but this premium will cost you only 0.5% of your premium. So let's take an example. Today my premium is 10,000 rupees. 0.5% is near about 500 rupees, 50 rupees. So that is only the cost of restoration.
Got it. Well, Nikhil, thank you so much, for giving us all those insights. I'm sure our viewers now know which health insurance policy and to pick, and of course, what factors to watch out for. So thank you so much for taking out the time and speaking with us at NDTV Profit.
Yeah.
All right. In the next leg of the conversation, we are set to explore one of the most versatile investment options in the mutual fund universe, that is your multi-cap mutual funds. In a world where market dynamics shift rapidly, investors are constantly seeking strategies that offer both growth and flexibility. Multi-cap funds, with their ability to invest across large cap, mid cap, and small cap stocks, offer a unique blend of diversification and opportunity. But how does this work actually? What makes them different from other equity funds, and how should investors evaluate them in the context of their financial goals? Today we'll unpack these questions and more, helping you understand how multi-cap mutual funds can fit into a smart long-term investment strategy. And to discuss this, today we are joined by Rishabh Desai, founder of Rupee with Rishabh Investment, joining us now. Rishabh, always a pleasure speaking to you. Before I move on to more detailed questions, my first question to you would be, help our viewers understand as to what a multi-cap mutual fund is.
Hi Mahima, first of all, thanks so much for having me on your show. See, multi-cap category simply means that 25% of the fund needs to be allocated in large cap, in mid cap, and in small cap. So 25% is a fixed allocation, which is a minimum allocation, which needs to be invested in large cap, mid cap, and small cap. So overall mid and small cap allocation will be around, say, 50% minimum, and the minimum allocation towards large caps will be 25%. Then the fund manager has the flexibility to move around, but at least minimum 25% allocation has to be invested in large, mid, and small cap. That is what a multi-cap fund does.
In terms of the entire universe of multi-cap funds, which one of these funds have outperformed in the last 3-year frame? And from a viewer perspective, how should one go about assessing these multi-cap mutual funds?
Mahima, over the last 3 years, 3 years has been phenomenal for the equity markets. We are witnessing a price and a time correction recently from around September, October 2024. But if you actually go to see from a point to point return spaces, the 3 years have been phenomenal as on date. Let me give you some perspective on the returns. See, on a 3 year return basis, as on 10th of June, the highest return generated by a multi-cap fund, which is Nippon India Multi-Cap Fund, which is at around 28.8% CAGR, and the lowest return generated is around 17.7% CAGR, which is generated by Quant Active Fund, which is a multi-cap fund. So returns have been actually very phenomenal. Over the past 3 years, there are three particular funds which have done phenomenally well, which is Nippon India Multi-Cap Fund, Kotak Multi-Cap Fund, and HDFC Multi-Cap Fund, which have generated 25% plus CAGR returns, which is very, very, very phenomenal in today's time. And if you actually go to see the outperformance and underperformance strike rate, unfortunately, 50% of the multi-cap funds have underperformed and 50% has outperformed the benchmark, which is the Nifty 500 multi-cap 50, 25, 25 TRI index. So in terms of outperformance and underperformance, the strike rate has been 50-50%. So investors need to be very careful in choosing the right multi-cap fund so that they get higher returns than the underlying benchmark might.
Understood. And while you're suggesting that one needs to pick the right multi-cap funds, what do you think are the key factors to watch out for while choosing a multi-cap mutual fund?
See, I think, I would bet on a product which is consistently outperforming over the 5 to 10 year rolling returns basis. The top performers and underperformers keep on shifting from time to time. Okay. As long as the fund is managed by a quality manager, quality team, the AMC is good, the philosophy is very strong, and the product has been consistently outperforming on a medium to long term basis, that is something what I would really look into a product. See, even if, for example, say Nippon India Multi-Cap Fund, which has done phenomenally well, I would still bet on that product because it has been consistently doing well. Outperformance and underperformance is part and parcel of any product, but as long as the product is managed by quality people and quality philosophy, the underperformance will be temporary and it will eventually recover. So I would bet on a product which is consistently performing and may not necessarily be the top performer at all given points of time.
Okay, and in terms of a diversified portfolio, how should you position these multi-cap mutual funds? I mean, what percentage of your total portfolio should consist of these multi-cap mutual funds?
See, multi-cap mutual funds are very high-risk products because it has to keep 50% allocation in mid and small caps at all given point of time. So what if, the mid and small cap doesn't do that great, we have seen prolonged periods of underperformance and prolonged periods where the mid and small caps have given 0% returns, right? So I think a multi-cap fund should be a part of one portfolio. I think rather than creating a full multi-cap portfolio, that is something what I would not suggest because it leads to a lot of volatility and underperformance risk. I think when you create a portfolio, it should be a good blend of flexi cap and multi-caps together. But I think just one multi-cap fund in your portfolio should do the job amongst the other products, Mahima.
Just one, not more than one, correct?
Not more than one.
All right. And in terms of the risks that are associated with a multi-cap mutual fund, you did mention the fact that because, they are very risky. That is one of the risks, of course, on the cards when you take up a multi-cap mutual funds. But what are the other risks that one must be aware of?
See, the whole point is to diversify well across different strategies and different market capitalization. Going towards one particular market capitalization, particularly mid and small caps, which investors get carried away towards, and rightly so because the returns have been very phenomenal. But again, there is no guarantee that these kind of phenomenal returns will be replicated over the next 3 years. Okay, usually mid and small caps and products like multi-cap, which are heavy on mid and small caps, will perform in cycle. So these products will be subject to volatility risk, and these products will be subject to cyclicality risk as well. Volatility means, of course, there will be a dramatic shift in returns up and down. And cyclicality means, the returns what we saw last year may not be the same in the next 3 years. The returns will perform in cycle. So I think, from a better risk management point of view, see, we cannot manage returns, right? Returns are up to the markets, how they want to deliver as per, the economic conditions and the earnings conditions of our companies. But something what is in our control is the risk. So I think from a better risk management and risk mitigation point of view, break down your portfolio. Keep your large cap portfolio keep your large cap funds little separate, mid cap and small cap funds separate, and keep a basket of flexi cap and mid cap. So while creating a portfolio, see, assuming an investor falls in the high risk category, and assuming the investor's goal is wealth creation and has a good amount of time horizon of 10 years and above, I think 50-60% in flexi cap, multi cap funds, and the rest can be invested in mid and small cap funds should do the job. But I think diversifying across different funds is a better way to manage risk.
Okay, interesting take there. And since you were mentioning that just with respect to how Q4 has panned out, we saw that the mid caps and small caps again have done better than that of large caps. How do you think that entire thing to be playing out, and then how do you suggest to pick a multi-cap mutual fund?
Mahima, this is a fantastic question what you have asked me. Let me give you another data point, for you and for your investors to ponder on. See, historically, if you take on a 10-year rolling basis, okay, 10-year rolling return CAGR basis, mid and small caps have always outperformed the large cap. So from a long-term perspective, I'm very comfortable investing in multi-cap fund, even if it is a lump sum investment. I'm very much comfortable at this point of time because markets have not yet fully recovered. It is still in the recovering stage. This is number one. Number two, we have not yet entered into a bull run. Earnings season has been not that great, but it has been decent than the last quarter. We feel going ahead, the earnings season is going to be better. Monsoons are going to be very healthy. Thus earnings seasons are definitely going to be better. So I truly feel that the best is yet to come. So I'm very much comfortable investing in mid cap, small cap at this point of time, multi-cap funds at this point of time. But investors should keep in mind that, keep at least a 5-year time horizon. Because we don't know when exactly the bull run will start. See, it can start in the next 3 months or 6 months, or it can even start in after a year and a half, right? But I feel we may still be in a time correction for some more time. But I think the best is yet to come. So I'm very much comfortable investing in multi-caps at this point of time.
Got it. And in terms of, this is just a question that I was just thinking about. Do you think that hybrid funds provide a better capital protection considering everything that's happening around? Because your non-equity, that is your gold and silver, have been on a significant run. How would you place hybrid funds against a multi-cap fund? Or would you suggest to park your funds in both of these counters and in some proportionate manner?
Mahima, see, hybrid funds consist of many different categories within the hybrid bucket, right? There are conservative hybrid funds which are more inclined towards debt. There are aggressive hybrid funds which are more inclined towards equity. There are multi-asset funds. There are dynamic asset allocation funds. There are equity savings funds. So the hybrid bucket is a very big bucket. So one needs to first of all understand that whether you are an aggressive investor or a moderate investor or a conservative investor. Okay. See, if you are a conservative investor and you don't want to take too much of risk, then equity savings fund, which consists the products which may consist of say up to 15 to 25% equity and the rest into arbitrage and debt suits them well. Debt mutual funds, arbitrage funds will also suit conservative investors. If someone is a moderate kind of a risk taker, then balance advantage funds, also known as dynamic asset allocation funds, also multi-asset allocation funds will suit them. But if you're an aggressive investor, then definitely pure equity funds is something what investors should be looking at this point of time. So it's very important to understand which bucket do you fall into. Are you a conservative investor, moderate risk taker, or an aggressive risk taker?
All right, that's I think the answer that I was exactly looking for. And thank you so much, Rishabh, for that answer, and of course giving us insights on how one should go about multi-cap mutual funds. And thank you so much for taking out the time and speaking with us at NDTV Profit.
Thank you so much, Mahima.
All right, with that, we are completely out of time on this edition of Your Money Matters. Stay tuned to NDTV Profit.
imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis, conversations that matter. We break it down, cut through the noise and set the context for you. Hear from top policy makers and thought leaders from the world of business and beyond. The big question really is, are companies using dark patterns to take you for a ride? The big question we're asking today, is the US heading towards a recession? The big question is, are we sacrificing our health at the cost of convenience? The questions you care about, asked and answered. The big question.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy time to invest in
CDSL for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind?
Hello and a very warm welcome to NDTV. I'm Maha Siddiqui coming to you live from Calgary in Alberta in Canada, the province where the G7 summit is taking place this time. The venue of the G7 summit is Kananaskis, and Prime Minister Narendra Modi landed in Calgary here this evening to participate in the G7 summit as an invitee country. He'll be addressing the G7 leaders tomorrow at an outreach session, and he has several important bilateral meetings. One among them is one with the host country, the Prime Minister of the host country, Mark Carney. All eyes keenly trained on that meeting, considering the friction between India and Canada over the last 2 years. But Mark Carney, recognizing the importance and the significance of India in the Indo-Pacific, it being a critical peg in the supply chain, as well as the fact that India is the fourth largest economy, poised to become the third largest in a few years. Considering all this, India is not just an invitee to the G7 summit, but it also seems to be the beginning this time of the reset of a relationship between Canada and India. Indian students are a global lot these days.
But what that means is a friction between the governments of two countries can have an immediate fallout on this younger lot. I have with me a group of students from India here in Canada. Let's speak to them about their expectations now that the relations between India and Canada seem to be improving. Many thanks all of you for speaking with NDTV. I'll start off with you. What expectation do you now have for the students, considering that there were some unique problems that students from India were facing in Canada? Do you think the fact that Prime Minister Modi is coming to Canada is a good sign even for the students?
I think it's an amazing sign. And as someone who calls herself a youth leader here in Calgary and Chesmer, I'm very, very happy to say that we, the students here as well as the Indian diaspora, we are eagerly ready to welcome Prime Minister Modi ji into Canada. And we really hope that this visit leads to a better alignment of Canada and India's values as well as their goals for both nations. And they work towards developing and building a mutually beneficial and effective relationship and alliance, which can help and benefit both populations of India and Canada, and definitely can help some of our students as well. And we don't feel so split amongst our loyalties as well as amongst, which country to support, to favor. Because, both of them are our homes. India is our Janbhumi, Canada is our Karambhumi, and we really, really love both nations. And it absolutely hurts us and it breaks us to see the separation and the division that we see here in the Indian diaspora because of these geopolitical issues. So we really hope that the outcome of this visit leads to a more collaborative and a more positive relationship working for the benefit of both nations.
What are some of the issues that you feel should be addressed by the two nations, especially with regards to students? Any specific issues that you want addressed?
So for me particularly, I've been here since 2013. I haven't had any specific, issues that maybe the Canadians have done to me as Canadian too, I've met many lovely people here, so I haven't had any sort of racism or anything. But I do know that, my co-workers and colleagues and everything, they have experienced certain level of racism that I do believe that should be, noticed and that should be talked about. But regardless of that, I don't think there is anything that, brings, that's bad. But another thing I wanted to talk about was, again, with their, collaboration between India and Canada, past few years, their relationships had gone down. So I also hope that the relationship goes back together and that everyone is okay. Because again, that's our country, this is our country too. So we hope everyone's on good terms with that too.
Also, a lot of Indian students who wanted to come in the recent past have faced issues with regards to student permits and uncertainty generally around whether they can come and study in Canada and whether it will be a smooth ride. Do both of you feel that with Prime Minister Modi now coming to Canada, having been invited by Prime Minister Carney, there will be a breaking of the ice, a thawing of the ice between the two sides that will help address some of these technical issues as well?
I think we'd certainly hope so, that it does kind of, open up those conversations. And with all of these, it's all starts from the social stigma against immigrants that's growing in Canada, like we've seen happen in the US before us. And I'm hoping that this is a step in the right direction where, you can, as you mentioned, break the ice. And more importantly, you can address the issues. They're very real. The growing Hinduphobia in Canada is very real. And general distaste of immigrants is very real. And they're just not being overlooked so often. And I hope that now that we have a new Prime Minister, we have Prime Minister Modi who was invited, even though he initially wasn't. And I hope we can amend those relationships and things get a lot easier for people who are trying to come here. Because as someone who was born here, who's lucky enough to call this place a home, I'm very happy living here. I think it's a great step for a lot of youths in India to come here as well. And everyone deserves to have that opportunity.
I want you all to now tell me a bit about your experiences here in the sense that how do you like being in Canada and do you miss India?
I absolutely do.
Home is home.
But no, Canada has been an amazing experience. I'm very lucky to have had the opportunity to study here, to work here, to even run an election here. And it is absolutely amazing to be to witness the building and growing Indian community here and to be a part of that. As you can see, there are so many people out here who've come for this support. But I do think it is high time that we have a representative for us here, and that's what I think we're all very excited about, to have someone represent us and talk about our issues in this country. Because as my sister said, it's easy to get overlooked sometimes as an immigrant, and definitely the immigrant experience is difficult. And it is hard work to find your place here, to build your place here, and to make it feel a little more like home. But once you're able to, it can be very, very rewarding. What are some of the aspects you really like about Canada, and some of the smaller aspects, like for instance, food choices? Do you think that's something you miss about India?
So I definitely do miss India on every basis, regardless of food, culture, family. I just went there actually last year too, just to visit homeland. But as terms of Canada, first off, I feel really grateful to be here, to be studying here as a student too, And for food choices, actually, there's lots of available options that are here for, Indians and all that. And my mom, who's a lovely cook, she cooks at home every day, Indian food, 3 times a day, we get it. So part of that, I'm really grateful that I do have the Indian culture still with me. But definitely I do miss home, that is home. So,
रेडी वाला स्वाद नहीं है यहाँ, रेडी मिस होती, रेडी नहीं है. So finally, how would you sum up, any of you, this visit? I mean, I think it's long awaited for a lot of people, not just the students community, but even the business community. People want easing out in the manner in which trade is also done between the two sides. There's a huge potential there. Overall, what are your expectations? Anything that you'd like to add? Yeah. See, I don't think the world operates how we think it used to. It's no longer divided by borders anymore. Borders are very flexible, very fluid. People are going all across the world for work, for home, for studies, for everything. And so I think our main motivations, our main focus for this meeting, for Prime Minister Modi ji's visit, is that we hope again to get our representation here, because it seems like we're almost abandoning here, especially with everything that's been going on between Canada and India. It does make us feel a bit stranded, and obviously that's not a good feeling. So we really, really hope that this helps amend the relationships between Canada and India, and it helps work towards a more prosperous, a more mutually beneficial alliance, and that we find there's more passages that are open for us to go to and from both countries, and so that we can, find our home in both places. We don't feel split again. And yeah, so we really, really are very excited to have our delegations here, to have representatives here. And yeah, so we just hope that Prime Minister Modi and Prime Minister Carney are able to, work on a forward-moving alliance, and are able to kind of move past our past conflicts. And I hope that the Indian diaspora here, as well as the Indian population in India, that we're more able to welcome and appreciate the efforts that both countries are taking for our sake. Thank you very much, all of you, for speaking with us. And clearly, as you have pointed out here, there are great expectations from the Prime Minister's visit to Canada, coming as it does after a period of friction between the two sides. And this group of young students, very young and bright students, have articulated their position really well. They want representation, and they want smoother ties between the two countries to be able to facilitate their own future and their own careers, their prospects here in Canada. Let's speak with the Gujarati Mandal of Calgary. Their representatives are here, and hopeful that with Prime Minister Modi's visit to Canada, the relationship between the two countries is going to improve, and that will lead to better representation for this community here in Canada as well. What are your expectations from this visit?
Well, first of all, we are very excited to have our Prime Minister, beloved Prime Minister Narendra Modi, in Calgary for the first time. Our expectation is better relationship between India and Canada, which we can already see by this initiative from our current Prime Minister of Canada, Mr. Mark Carney. So we are very happy, and we want to see more and more relationship built, and that is beneficial to both India and Canada.
As a cultural organization, how do you see you all benefiting from improved ties?
With improved ties, from cultural organizations perspective, in difficult time, on when there was a turbulence in the relationship between India and Canada, we noticed that some of the artists, for example, we are part of Gujarati Mandal of Calgary, so we are fond of Garba. So we invite celebrity artists from India, and sometimes we notice that they are having tough time getting visas, but now we definitely see that improves as well. Same time, visa issues, like sometimes it used to be difficult to get a visa for parents and elders, and now hopefully it will improve as well. Same thing for students. Yeah.
Apart from visa issues, student issues, what are the other issues you think that would be beneficial if the two leaders take up?
I think the trade and commerce will improve a lot when the ties are very strong between India and Canada, and India is soon going to be the third largest economy, as we all know, in the world, and Canada has lots of natural resources. So if there is a give and take, if there is a trade between Canada and India, it will benefit a lot to the business world, and that will basically help both the countries to prosper and help us Indo-Canadians also to prosper in our world.
Are there any particular sectors you feel that there's a lot of potential in trade?
Yeah, I mean, India is a manufacturing hub. It's now taking over, other manufacturing hubs like China and others. So Canada can kind of rely a lot. And obviously, India can rely on Canadian oils, which is our biggest natural resource. And we are also largest producer of potash and all of those things, which can be exported to India for our fertilizers and so on and so forth. So it's lots of opportunities, mammoth growth opportunities between both the countries. So it's a good, startup right now that relationship is becoming stronger and stronger.
Thank you both of you for speaking with NDTV, and we understand that there is a hope now that improvement in ties will ease out, like you said, visa issues between the two sides, as well as improvement in trade, which is largely under potential between India and Canada. Feeling a sense of betrayal from the United States, Canada is looking to diversify its trading partners. And here's where India comes into focus. As a critical country in the Indo-Pacific, Canada recognizes the importance of India, and the new Prime Minister Mark Carney wants to leverage this relationship now by the first step that he's taking in trying to improve the ties. How will this help the trading community as well, which has been looking out for improvement in ties? I have with me a group of business persons here in Calgary, and they are keenly awaiting the Prime Minister's visit in the hope that this will act as an icebreaker. What are the sectors where you see an improvement in trade between India and Canada, especially once the relationship gets better?
Yeah, I think it would be mainly oil and gas, which is basically India's importer. LNG they can import from Canada, and then oil also. And that is the big for India. And then for Canada, it is vice versa. It should be basically defense and technology and IT.
India's goods trade with Canada is highly under potential. As far as services trade is concerned, it is slightly better. Do any of you see any other sectors where you believe that improvement is going to impact the overall relationship as well, make the two countries come closer via trade? You want to say?
Thank you for the question. I think this is a very important point for the Canadian. As we all know, as a Canadian, there are lots of healthcare issues here in Canada. And as an individual, as a group, all Canadian, most of them are waiting to get the treatment. I will give you just a small example very quickly. One of my known's husband, he diagnosed with the last stage cancer, and they told us that he's here for only for 3 months, but the waiting list is for 6 months. So this is what all Canadians are facing, and this is very, very important. We are looking for a healthcare industry, and India is the one that we can look forward. India pharmacies, India doctors, you can see all over the world. We have scientists, we have doctors, we have businessmen. So we are looking forward towards the India, and we would like to request Narendra Modi ji to please come forward and help in the healthcare sectors. And there are other sectors we are looking for. As you know that we have lots of pressure from the America side through like the tariff and all those things. Defense is one of the sectors we are totally alone right now.
I'll just ask you to pause there, because I want to focus on the healthcare sector, which was a very important one that you raised. And I want to raise that with whoever wants to answer that question about the hurdles For instance, he's mentioning the requirement of doctors and nurses, but we know that there are licensing hurdles in Canada. Do you think these issues should be spoken about during meetings to be able to ease that path for doctors or nurses coming from India?
So I have personal experience. My daughter is a doctor and my son is a pharmacist, and they had to go through a lot, to become certified here. I think the problem is that the system is such, right? There is a lot of regulations and other hurdles which are causing trouble, and we know each and every province of Canada have shortage of doctors and nurses and pharmacists and everyone, right? Because we don't produce that many. So I think the government of Canada has to seriously look into it, and they have to go beyond those restrictions that they have, and they should have some kind of a boot camp, so that we don't. Of course, what they don't want is that anybody coming from anywhere start doing their own practices, right? So what we want that they should have a boot camp, let's say for 1 year. You come there is a rigorous course on whatever, being a doctor, being a nurse, being a pharmacist. And then after 1 year, you're certified. Of course, you have to do all the exams. But right now, it is very, I would say, hodgepodge. A person comes, there's no guidance, there's nothing. There are so many exams you have to do. And then most of the people get lost and they stop doing their practice.
My final question to anybody who wants to take this question is with regards to issues like visas as well. They become a problem whenever there is a friction between the two countries, causing a lot of problem to the common man. But I want you all to explain the fallout on the trading community as well, the business persons, when such visa hurdles are created.
So I can say one thing, there is so many gossips going between both countries. Right now, the relation going to start right away. So might be once they sit both countries together, there is so many things they have to settle, and especially the visa, student visas are work permits. Right now, 2025, there is so many visas is expiring. Fortunately, if both countries has a good relation, definitely they can give a good opportunity for the newcomers or students or everyone. We are expecting those things, and certainly these things will settle by this G7 meeting. Hope for best. That's it.
Thus, for the special broadcast from Alberta on the G7 summit.
Hello and welcome to NDTV Profit. This is an exclusive interaction with the BSE MD and CEO. Earlier today, the market regulator SEBI came out with notification that allowed NSE to shift its weekly options to Tuesday, the expiry of weekly options to Tuesday, and BSE has taken a call to move its weekly options expiry to Thursday. And joining me is Mr. Sundaraman Ramamurthy, who is the MD and CEO of the company. Mr. Ramamurthy, thank you for joining us on NDTV Profit. To begin with, sir, can you take us through the rationale of why you agreed to shift the expiry to Thursday as the weekly expiry?
As you would recall, when this single contract weekly expiry came, the exchanges were asked to choose for an expiry day. At the time, there was a public announcement of NSE that they are going in for Thursday. So NSE chose Thursday, and so BSE took Tuesday. We were working with Tuesday. We were very happy with Tuesday as expiry. We had no concerns about it. But since NSE has requested for Tuesday now, in the overall interest of the market, we have taken Thursday.
That's right, sir. But when BSE moved its expiry to Tuesday, we saw BSE gaining some market share as a result of that. How will the Thursday move impact your market share going forward?
Market share, as you call it, and the volumes in an exchange are a function of multiple factors. So, at this point of time, taking just one factor, talking about it, would not be possible. We need to wait and watch as to how it spans out.
Sir, what we also saw was that the premium turnover, which is the transactions the investors do. You were able to retain some of the premium turnover, and you were able to see a growth in the premium turnover. Do you see there will be a shift in the premium turnover when you move the entire expiry to Thursday?
Thursday has been traditionally an expiry day for a longer time in Indian markets. Thursday expiry has seen the premium market and the option market develop over the period of entire week, next week, next to next week, next month. So, as I said, multiple factors decide as to how the volumes happen and how the premium turnovers quality change. At this point of time, with only one factor, we cannot make any statement. In any case, traditionally, Thursday has been the expiry for Indian markets for a very long time.
Sir, also if you clarify, does it mean that all contracts, whether it's weekly or monthly, will now be expiring on a Thursday for BSE?
The thought process of the regulatory framework was that once a expiry day is chosen, all contracts should expire on that.